So keep an eye on the banking sector that could possibly weigh on shares here in the UK. Lastly, autos, they're going to be a focus this week. Not only do we have autos reporting, we have VW and Mercedes later in the week, but Porsche was out with earnings late on Friday. They reported their first quarterly loss since its IPO late Friday. Kriti?
Lots to watch when it comes to the individual stock movers. Remember, we've got an earnings season on both sides of the Atlantic ahead of us. Let's see how these markets are interpreting the events of the weekend. Green on the screen in the futures picture. Does it stick? Right out of the bat, we have a FTSE 100 that is slightly tilted to the negative. As Val was talking about, we do have that commodities sector kind of overhang a little bit, a pullback in the gold sector. Just in the last, I want to say, hour or so, you've seen oil also take a foot lower. And I think that's really crucial here as well when we're talking about the fact that in a positive trade negotiation environment, it should actually go in the other direction. So that's going to be something that we're watching. But take a look at what's happening in other parts of this market. The French index, the German index, the Spanish index, all opening higher. So the détente, Val, positive for continental Europe.
Well, when it comes to those stocks that we were watching, we did have HSBC open up down 2%. So one of the worst drags on the index when it comes in terms of point. That also dragging down the banking sector this morning. At the top of the basket, though, Kriti, we are seeing basic resources up there. The oil is rebounding on the back of this positivity when it comes to U.S. and China trade relations. We're also seeing technology, one of the top performing baskets. So there is some follow through, even though semiconductors weren't necessarily discussed between the U.S. and China. A better framework for trade negotiations is looking like it is boosting the likes of ASML so far this morning. That's one of the biggest gainers to the top side. At the bottom, we have healthcare, chemicals, and utilities dragging on the wider index.
Lots going on in terms of the sector story. I think it's fascinating that you are seeing that tech outperformance, which to your point, Prosus is, I think, one of your biggest movers to the upside, Schneider Electric, among others. The banking sector seems to be taking a little bit of a hit. Remember, we do have one eye on HSBC. They're dealing with a court case, I believe, that is looking to be a little bit of a weight when it comes to that stock. Trading with heavy volume, though, when it comes to those individual movers. I think this is really crucial as well because, again, we're talking about positioning at the start of this week ahead of plenty of earnings, plenty of central bank decisions, and of course, trade and geopolitics front of mind as well. And as I mentioned, trade and geopolitics, I'm going to get a little bit more market analysis in just a moment. But I'd like to inform our global audience that we have seen Air Force One, the plane, of course, carrying Donald Trump and his cabinet members, landing in Tokyo. You can see a live shot there. We will, of course, bring you any headlines that come as he looks to deplane. But that is something that we have our eye on, of course, in Tokyo. But Val, it feels like this week might just be dominated by kind of the holy trifecta, if we can, the geopolitics and trade, the central banking decisions, and, of course, the earnings story on both sides of the Atlantic. So on Friday, we might just have all our answers.
Yeah, blockbuster earnings. We need a dovish Fed, and we need some good news coming out of this Xi and Trump meeting on Thursday, and then we can really go to the moon when it comes to global equity markets. Well, joining us now to discuss this and wider markets is Natalia Lipinka, the head of EMEA Equity Strategy at JP Morgan Private Bank. Now, we were just talking about all these scenarios this week that could lead us higher in the equity market. We've already seen such a surprising reaction in U.S. equity futures. What could really add to this fuel when it comes to the meeting and this discussion on Thursday between the leaders of the world's two largest economies?
I think the market, and by the way, good morning. I think the market was looking forward to seeing the trade negotiation kind of being in a better than expected mode, and we're starting to see that. The market understood that most likely the peak uncertainty was already April this year. And it's interesting, especially a lot of companies are reporting their earnings right now. And what we're seeing is that a lot of companies are able to mitigate the tariffs. So clearly, the way the market looks into it is, well, it's great news, what we're seeing over the weekend. If you add the earnings season, that, by the way, is already coming at stronger than expected, and potentially a dovish central banks, especially the Fed, that's probably how the equity market can propel higher from here.
Yeah, the Mag 7, we get 5 of them reporting earnings this week, a bulk of them coming on Wednesday. We also get Apple and Amazon on Thursday after the bell. Where are you looking for weak points in these tech earnings that seem to be driving much of the multiple expansion this quarter?
So it's very interesting because if you look into year-to-date performance, Mag 7, the majority of the move is actually earnings-driven. And that's why, the market is very comfortable with where we are right now. Now, what the market will be watching very, very closely is CapEx, for sure. CapEx and free cash flow. If there is a bit of weakness on the free cash flow side from those companies, the markets may not see it positively. But we think even if there is a dip this year, it's most likely will be temporary, and those companies will be able to have a very strong free cash flow next year.
When it comes to you mentioned the CapEx and you mentioned the free cash flow, but why is the market not trading on margin compression right now? I mean, if the entire narrative of why tariffs are not hitting the end consumers, that companies are absorbing it, shouldn't the stock reflect that?
Well, it's interesting because not all of the companies are absorbing that. A lot of companies are actually passing them through. Some of the companies are passing that to consumers where, we're seeing the price increases. So it's really a mix and match of different things. From a market perspective, I think what the market really cares is whether the companies are in general able to mitigate that tariffs at all. And we're seeing that. And this earnings season, some of the companies actually increased their guidance because the tariff impact is just lower than what the market expected.
Which is fascinating. It comes right back to your point about free cash flow, but it also reminds me of a little bit of a throwback to COVID when it felt like the markets or the stocks that had more cash on their balance sheets were the ones that were getting rewarded to be able to absorb the extra supply chain costs, which was the narrative at the time. Is that factoring into some of these valuations that if you have trillions or billions on your cash on your balance sheet, then you're actually rewarded by that from this market?
Well, it's interesting you mentioned COVID because in COVID times, if you remember, loads of companies withdrew their guidance. And a lot of people expected this year to be a very similar one. Now, in fact, a lot of companies not only maintaining this guidance, but this quarter we're seeing some of the guidance raises, which is a very different setup for COVID. Now, if you compare that to the tech companies, absolutely. And the reason why people are still very comfortable with the Mag 7 is because of the very strong free cash flow that those companies are currently having.
We supposedly are going to get a big debt raise tied to Oracle data center build out. Last week, Bloomberg was reporting it could be around $38 billion of debt issued for these Oracle tied data centers. Does the kind of shift from these hyperscalers and this extra free cash flow to having indebted tech companies, is that something that worries you for the long-term trajectory?
So we're definitely seeing a bit of a shift, just given how big and quick this capital raise is. But if you look into the rest of the Mag 7 or Tech Plus companies, a lot of them actually have net cash on the balance sheets. So overall, we're not concerned about what is happening because the majority of them have a very, very strong balance sheet that can absorb that CapEx.
And turning to Europe, we do have a lot of earnings here as well. We've got big banks reporting. We also have the autos reporting and some of the oil majors reporting at the end of the week. What surprised you so far about European earnings season, and what are you looking forward to this week?
I think it's really fascinating what's happening in the earnings season this quarter in Europe because we're seeing a bit of a shift. What worked in Europe this year is domestically oriented companies that didn't have any FX, didn't have any tariffs impact, and now you're seeing a bit of a switch to international companies. So think about multinational companies based in Europe that were hit by tariffs and strong euro. And we're starting to see a bit of a flows back to those sectors. Luxury is a great example of that. The sector that people forgot about was not very enthusiastic, but we're seeing a very strong earnings season coming through, much better than what people are expecting. So we're seeing a bit of rotation in the market right now.
Is this market just getting lucky, though? I mean, and I say this because we're talking about a range-bound bond market, a range-bound commodity market, a dollar that hasn't really moved for a couple of months either. Is this market getting lucky with all the cross-asset cues?
I would say the equity market is just in a gridlock right now, and they're really enjoying it right now, because when you look into the earnings, ultimately all earnings is what drives the market, and we're likely to have double-digit growth in earnings this year, and we're likely to see another double-digit growth in 2026. So when we look into the equity market overall, there is a very good strength driven by earnings, and therefore, equity markets continue to drive all-time highs. Having said that, we still think that there is a more upside in the equity market as we're talking more and more positively about the bull case.
Talk to us, though, about the potential risk events on the horizon. I've asked guests multiple times, what's the key risk event in the fourth quarter? And many of them answer the Supreme Court case against Trump tariffs. Hearings do begin next week. Is that something that's concerning you, given your enthusiasm for the equity market?
I think the biggest risk to the market is still coming from the tech earnings. If we are not seeing, those earnings coming through, if we're not seeing that, the next year's double-digit earnings can be supported, I think that can be the risk to the market. Alongside the 493, if 493 just can't catch up with the tech earnings, this is where we may see a pullback in the market.
When it comes to the currency exposure, how are you thinking about that, though? I mean, Guy's favorite question, I'm going to channel my Guy Johnson vibe here. Guy's favorite question is that if you are an international investor, are you getting penalized on the currency exposure, not getting as much kind of win when it comes to investing in the U.S. stock market? Does a euro dollar, and I'm just going to pull it up really quickly, does a euro dollar at 116 matter?
Well, it's an interesting question, because if you look into the move this year, we went from 102, so very close to parity, to 116. So we already had a very pronounced move this year. Now, we still think that the dollar may weaken. Let's call it 118, 120. But in terms of the impact should be much smaller from what we've already seen this year.
Does that apply then to, do we need to be paying attention to the divergence between Europe and the U.S. when it comes to outperformance at all?
Maybe a bit. FX is still a kind of a center topic for many investors, just given the moves that we have seen this year. But again, we think that they're probably taking a second stage at this point. I think what matters for in general, the diversification right now is the Fed is cutting, and that is actually positive for not just the U.S., but also the international markets. We're seeing, with the open today in Europe, European market is up quite nicely. We're seeing the same in emerging markets, right? We're seeing that with the China, we're seeing that with the Indian markets. So overall, I think that is a very good backdrop for the global equities.
Absolutely. Natalia Lipakina, head of EMEA Equity Strategy over at JP Morgan Private Bank. Thank you so much. As she was speaking, we did see Donald Trump deplane. He has, of course, officially arrived in Tokyo, due for, I believe, the second stop on his Asian tour. He'll be going to South Korea later this week to have that high-stakes conversation with his Chinese counterpart, President Xi Jinping. Already, of course, a very quick turnaround when it comes to the conversation in Malaysia.
So he is arriving in Tokyo. He's due to meet with the Japanese emperor today, and then he goes on to have a working lunch and meet with Takaichi. That's the newly minted prime minister, who is a fan of Abenomics, of loose monetary and loose fiscal policy, and someone Trump has spoken very fondly of. So I guess a big moment for the new Japanese prime minister in order to strike up positive foreign relations with their U.S. counterparts.
Yeah, it's a really fascinating one as well, because we also know that the Japanese have come through a new administration change. Sanae Takaichi is, of course, now at the helm of the government. And one of the key things that was negotiated underneath her predecessor is a $550 billion investment promise into the United States. What that actually looks like is a completely different story. And does it actually stick when you do start to see her administration come forward? Remember, they're still dealing with inflationary issues, fiscal promises, some that even come contrarian to what the BOJ might be pushing for.
And Takaichi is very hawkish when it comes to national security. So I think that'll be on the table for discussions today, whether the U.S.-Japanese alliance is still strong, at least in a military guise. So key topics on the agenda today could be ones of regional security, should I say, particularly among China's assertiveness and North Korea's provocation. So we'll keep an eye on how geopolitics, as well as the trade negotiations, take place between the U.S. and Japan. Japan today.
Yeah, it's a fascinating one. He did, of course, also say that he was looking forward, if he can, to meet Kim Jong-un. No schedule on the agenda, no meeting on the agenda, I should say, but it is something, and I believe a press gaggle a couple of days ago, he said he would be interested in. We are, of course, seeing him get on the helipad there to get to his next stop. We'll keep you apprised of all the headlines as we get them. In the meantime, let's get a check on the core six, the heavyweights, of course, that tend to move this market. And what's really crucial here is that it is green on the screen on the index level, but when you look at some of these individual movers, you aren't seeing that much excitement. In fact, I'm kind of surprised to see this. Novo Nordisk taking a little bit of a hit this morning, down about 1.3%. LVMH also taking a hit despite positive U.S. and China relations. At least that's the narrative on the broader index level. You'd think that would have a read-through in some of the energy and luxury stocks. Not today. Tech very much in the driver's seat. Let's get a check on some of the other individual stocks on the move. Chloe Melly is here for more. Chloe.
Good morning, Kriti. So we have got green across the board for those miners today on the back of copper advancing to close to an all-time high, which is, of course, due to the fact that China and the U.S. are making progress on those talks to ease those trade tensions, with Trump's threat of 100% tariffs now completely off the table. So copper advanced as a result of that, and that is in turn boosting those miners this morning. In particular, Glencore is up 1.75%, but we've got kind of green across the board for that mining sector this morning. Moving on to Porsche, which is also moving higher. So, Schneider Electric first, which was upgraded to an overweight rating at Morgan Stanley. This is a company that is exposed to the data center sector, and it's doing pretty well, has been doing pretty well over the last few months, and it has now been boosted and been raised and upgraded to overweight rating. Moving on to Porsche, this time we actually have Porsche, which posted its first quarterly loss since its IPO, and said that was because of U.S. tariffs and because it scaled back its electric ambitions. But the reason why it's moving higher, quite a lot higher this morning, up 4%, is because analysts are saying that that loss was smaller than expected, and the margin is actually also much more resilient than expected. So that kind of raises hopes of a potential turnaround for Porsche, which is a company that has cut its guidance 4 times this year, so it really needs that relief. Moving on to Basic Fit, which is an operator of gyms and fitness clubs. It has bought its rival Clever Fit this in a deal that was worth about 160 million euros. It was actually moving higher at the open, and has now seems to have retreated all of those gains. So this is a deal that potentially is not being welcomed that warmly by the market. And finally, EDP Renewables, which is a renewable energy company, has been cut to a hold at Deutsche Bank, and we are seeing a lot of weakness in that stock as a result. We are down 3.2% for their renewable energy firm.
All right, Chloe Melly from our equities team, thank you for running us through the stocks on the move in the first 15 minutes of trade here in Europe. Coming up on the show, we'll discuss one more, a $12 billion biotech deal from Novartis. We'll have more on the Swiss pharma giant's deal and what it can mean for the sector. That's next. This is Bloomberg.
Earnings season is here.
Earnings season begins once again.
So much going on.
Bloomberg is first to break the numbers.
From Snowflake, from Pure Storage, from Urban Outfitters, and from NVIDIA.
Coming up, we'll talk about some of the other earnings that are coming out.
With the smartest insights.
Third quarter numbers are going to be really important. The commentary is going to be important. It's all going to be about margins, because margins lead to earnings. And if earnings come down, we have a problem.
You have to come back again soon. This is really excellent.
Continuing coverage on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findstreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
Bringing you up to the minute 2-minute news,
technology news, geopolitical news,
economic news,
financial news,
bringing you the latest news in private markets
whenever,
and wherever it happens.
In Washington, Beijing,
Cape Town, South Africa,
Las Vegas,
Davos, Switzerland,
Rio de Janeiro, Brazil,
the south of France,
and this
is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Welcome back to the opening at Trade. We're 20 minutes in to today's cash equity session here in Europe, and we are petering out some of the early gains. Eurostoxx 600 is trading around flat as we speak. We have the CAC 40 flipped to the red, down 0.2%. We should note that there is still a lot of risk-on excitement when it comes to U.S. equity futures. S&P 500 adding to record gains as we speak, up 0.8%. NASDAQ futures up over 1% as well. Now over to biopharma. Novartis has agreed to buy Avidity Biosciences in a $12 billion biotech deal, the biggest acquisition for the Swiss drug maker in more than a decade. Joining us now is Bloomberg Intelligence senior pharmaceutical analyst Sam Fazeli. Sam, thanks for joining us on the show. What does this deal tell us about potential M&A activity across the pharma space?
Well, good morning to you. So this is, by my count, we keep a tally of this, of course, Bloomberg. This will be the 21st deal for 2025 where large pharma companies are buying a biotech. Of course, there's many more deals when biotechs are buying biotechs. We saw one a couple of weeks ago for Genmab. Here, this is Novartis, which needed to do a deal to bring in assets that would help them to keep their growth momentum post-2029, post-2030, after one of their drugs, Cosentyx, is going off patent. If you look at our MODL function, you'll find that the revenue for Cosentyx, a big drug, 7.4 billion by 2029, is beginning to decline from that point because there's biosimilars coming. So the company needed, and this is a really good fit for Novartis. And as I said, this becomes the 21st deal where large pharma is buying small biotechs, and it really helped. These spate of deals has helped the biotech sector take off.
Well, how well received is that, Sam, when it comes to some of these major kind of pharmaceutical companies that are looking to perhaps make these acquisitions globally and, of course, in the United States in the face of always the tariff threat that seems to be looming over every sector's head? Just kind of connect the dots for us here.
Yeah, so I think what you might notice is that since kind of the end of the summer, the spate of deals, biotech, and large pharma biotech, has picked up a little bit. And I think that's because we've got some levels of certainty now into the conversation with regards to the most favored nations, tariffs they've got a reprieve on. So I think the whole setup here, as the companies are doing more and more deals on those pricing conversations with the administration in the U.S., has given them confidence to be able to go and do this and not feel overexposed in terms of risks. And one thing to note here also is that the deal that Novartis is doing is for assets that we call for rare diseases. So they are orphan drugs, which are often much less scrutinized in terms of pricing and regulation and maybe the Inflation Reduction Act impact than standard drugs of large diseases. So here, this is also another advantage for the deal between Novartis and Avidity.
Sam, a pleasure to have you, as always, putting that deal into context for us. We thank you so much. Sam Fazeli of Bloomberg Intelligence joining us this morning. It's another sector that we've got our eye firmly on. HSBC, one of your heavy volume stock movers this morning, due to set aside $1.1 billion to cover litigation by investors who lost money in Bernie Madoff's fraud in a case which dates all the way back to 2009. Talk about a throwback. Shares down about 1%, we'll call it. All over the stories, Bloomberg's Tom Metcalf, who leads our EMEA finance and investing coverage. Can you just walk us through the details of this? We haven't heard Bernie Madoff's name in a while.
Yeah, exactly. It's a sort of throwback, as you say. It's coming out of a Luxembourg court decision on Friday, where effectively they rejected HSBC's appeal. So what's happening is a hedge fund who lost money on the Madoff scandal is basically suing HSBC both for securities restitution and also a return of cash. And what the Luxembourg court did was, I think it threw out the cash sort of request, but did sort of stand behind the idea that securities HSBC may need to sort of effectively pay this fund back. And it's really interesting. There's been a long overhang, obviously, on the legal side. And then, kind of catching everyone by surprise to come out with a 1.1 billion hit like a day before earnings. It's definitely something that HSBC can manage. But of course, no firm out there wants a surprise, 10-figure potential provision.
What's the legal process from here, given this case has been pretty long-standing?
Yeah, exactly, from 2009, right? So HSBC said in their statement they're going to appeal again. And so I think, this provision, might prove to be overkill. It might not be entirely needed. But, as this winds through the courts, HSBC have basically made the call that, look, it's not going away, and let's remove this as a sort of potential cost, and perhaps in future, if we are, able to win our case in the courts, we can kind of write it back.
Talk to us a little bit about the earnings. I should say, sorry, not the earnings, the M&A story broadly here. Your team has put together a story that I've been obsessed with for a very long time, since my time here in London. But just walk us through kind of some of the threads that you're seeing when it comes to M&A across the various regions of Europe.
Yeah, so the story's like a look at all the M&A we've been seeing in the banking and finance sector. And, the sort of key message there is all the sort of real big deals probably bankers, spend their time dreaming about. They're not quite coming through. But the level below that, there is so much activity, and I think today we just saw some Nordic bank merger again, just kind of that kind of sense of quite a lot of national deals, but when you get to the real game-changing ones, so the UniCredit Commerce Banks or the BBVA Sabadell even, you're seeing a lot of government pushback, and that's probably not going anywhere, and it just speaks to this idea that it's always complicated in the EU, just because there's so many governments, so many regulators. Yeah. So, the story is really about, yes, you'll be hearing a lot about M&A, but it's probably, that one level down from the kind of real blockbuster deals.
All right, Bloomberg's Tom Metcalf, thank you. Busy week for European banks, not just because of these cases, but also European earnings. We get Deutsche Bank, BNP, UBS later in the week. We'll be keeping an eye on those. Let's check in on how the U.S. market is faring. Indexes, when it comes to U.S. futures, are trading close to session highs. NASDAQ 100 futures up nearly 1.1%. S&P futures up 0.8%. Critty adding to record highs that we already notched on Friday after that softer than expected CPI report. Remember, we do have U.S. pre-market open at the moment because of the time change between London and New York this week. NVIDIA shares are rising in the pre-market off the back of this optimism around U.S.-China trade tensions easing. NVIDIA up over 2% so far in U.S. pre-market trade.
I mean, that sentiment is just kind of lifting all tides, at least when you go to, or lifting all boats, the tide that lifting all boats. That's the phrase I'm looking for. And you can really see that. I mean, just the fact that you're seeing, starting to see some of the stocks in Europe take a little bit of a pullback is fascinating. When it comes to the rare earth story, remember, Scott Bessent had talked about a delay of something like a year when it comes to having that rare earth conversation, the export controls that Beijing had threatened to enlist. Nevertheless, you are seeing some of that rare earth momentum take a little bit of a pullback. We'll dive into this next. This is Bloomberg.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Earnings season is here.
Earnings season begins once again.
So much going on.
Bloomberg is first to break the numbers.
From Snowflake, from Pure Storage, from Urban Outfitters, and from NVIDIA.
Coming up, we'll talk about some of the other earnings that are coming out.
With the smartest insights.
Third quarter numbers are going to be really important. The commentary is going to be important. It's all going to be about margins because margins lead to earnings. And if earnings come down, we have a problem.
You have to come back again soon. This is really excellent.
Continuing coverage on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television. We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
This is the opening trade. We're 30 minutes into today's cash equity session, and European equities are not feeling the excitement of their U.S. counterparts and those record highs notched in Asia. We do have the Euro Stoxx 600 essentially trading flat this morning. Some gains for the DAX, but just slightly up 0.1%. The CAC 40 is in the red, dragged down by shares of LVMH this morning, and the FTSE 100 is trading flat. Kriti, what's going on under the hood?
Well, it's fascinating because you do kind of see this divergence in some of the indexes here. Volume's a little bit lower. Everyone's taking a beat. Everyone's taking a breather, maybe bracing for what's going to come throughout the rest of the week. You are seeing volume down about 25. We'll round it up, down about 25%. It feels kind of a split market when it comes to hires, members moving higher and lower. Let's just focus in on some of the gainers, though, because broadly it is risk positive, as you just laid out in your index check. And a lot of it seems to be tech-driven. Remember, we have tech earnings and perhaps already some of that momentum showing up in the names and likes of ASML, Schneider Electric, and Processval.
Well, here's what else you need to know this morning. Treasury Secretary Scott Bessent has confirmed the names of 5 finalists to succeed Federal Reserve Chair Jerome Powell. The candidate pool has narrowed. Current Fed board members Christopher Waller and Michelle Bowman, former Fed Governor Kevin Warsh, White House Economic Council Director Kevin Hassett, and BlackRock executive Rick Ryder. President Javier Milei's party has won the midterm elections in Argentina. The comeback gives him a stronger foothold in Congress to continue pursuing aggressive free trade market policies, which have won praise and a financial lifeline from Donald Trump. And lastly, Donald Trump says he expects to have what he calls a successful transaction when he meets President Xi of China later this week. Senior trade negotiators for the U.S. and China have reached a framework agreement, setting the stage for their leaders to finalize a trade deal. Kriti?
Lots going on when it comes to this Asia trip. Let's get a live report from the location. Bloomberg's Chief North Asia correspondent Stephen Engel joins us live from Tokyo, where, of course, the president has just touched down. Stephen, pleasure to have you on the program. He's in Japan today. What sort of impact is his visit having?
Well, it's actually had a great impact on the stock market here with the Nikkei 225 soaring above 50,000. It's up 2.5% today. That on the back of some positive sentiment for the new Prime Minister, Sanae Takaichi, who essentially has already had a phone call with Donald Trump. She is planning to meet him tomorrow, and Donald Trump is already on Air Force One as he flew up from Malaysia to Japan, talked about announcing a great friendship with the Japanese and with the new Prime Minister. So they have some things in common. They're both considered to be quite nationalistic leaders with a strong emphasis on defense, and that is something Takaichi-san has been talking about, and it's helped boost her positive rating to a certain degree. Defense spending increases in Japan is a very controversial subject, obviously because of the pacifist constitution, but her strong leadership in the opening week has parlayed into a very strong approval rating. The Nikkei newspaper is saying her approval rating is upwards of 74, 75% right now. Other surveys say about 56 to 65%, which is pretty good considering Japan has come from a revolving door in the prime ministership over the last few years. So I think it's going to be a very interesting dynamic between these two leaders who have not necessarily met, and that they're already getting off on the right foot, saying the right things. Now, are they going to try to revisit the trade agreement that Japan and the United States signed in July? I'm not so sure that Donald Trump would accept that. Will Takaichi-san try and convince Donald Trump that they need Russian LNG? Donald Trump says he's going to try and convince the Japanese to wean themselves off that fuel from Russia. So there's lots of issues to be discussed in the next day and a half before, of course, Donald Trump heads off to Korea for that much-anticipated meeting with Xi Jinping on Thursday.
And Stephen, ahead of that meeting on Thursday, President Trump and Xi will be meeting. Both sides appear optimistic. Even the markets look very optimistic. There are some possible curveballs that we should have in mind.
Oh, there are always curveballs in the U.S.-China relationships. Keep in mind that we've had about 5 different rounds of trade talks with Scott Bessent and his counterpart He Lifeng of the Chinese, whether it's in Geneva, London, and more recently Malaysia yesterday. And there's been fits and starts, each side trying to gain some leverage ahead of this big meeting on Thursday, because both sides want deliverables, to use State Department parlance, and the deliverables so far from both sides indicates that the two sides have come up with a framework agreement on export controls on both sides, including rare earths from the Chinese. Possibly, Scott Bessent talks about the Chinese possibly buying soybeans from the United States, even though we're already about 2 months into the harvest, and the Chinese have not bought any U.S. soybeans yet. So there's a lot of politically hot-button issues that need to be addressed. Whether the two leaders are going to sign off on all these checked boxes by their trade negotiators is yet to be seen. We'll have to see what the dynamic's going to be like on the sidelines of the APEC meetings going on in Gyeongju, which I'll be at as well, leaving here tomorrow to go to Korea for that APEC gathering.
Well, Stephen, we look forward to further updates from you and the team. That was Bloomberg's chief North Asia correspondent, Stephen Engel, on the ground with President Trump. Joining us now for more on geopolitics and on trade is Charles Myers, the chairman of Signum Global Advisors. I just want to start off, with your basic opinion of what's happened this weekend. Are you as positive as the markets are on this breakthrough between Scott Bessent and his counterparts in Malaysia?
Yes, absolutely. I think President Trump doesn't really go anywhere without really good news following his visits. And they've even been teasing this one now for several days, which I think is 2 things with China. First, confirmation that the TikTok deal will get done and is a very positive outcome for U.S. investors in the company and ByteDance. But secondly, a soybeans purchase ultimately for, some, tariff relief, et cetera. So I think that the overall tone is going to be de-escalation. I don't think we see tariff tariff rollback necessarily, but certainly not an increase in tariffs. So I think that there will be several deals announced. I think the tone is positive, both with President Trump, President Xi, but also his visit to Japan. I think there's going to be some positive news out of that as well.
When it comes to what the market is really concerned about, which is these rare earth export controls, we had Scott Bessent teasing that perhaps they would be delayed for a year. In your opinion, is that still a win for the U.S.? Is a year a long enough time for the U.S. to buffer its supply chain for these materials that are needed from everything from technology to defense?
Yeah, and I do think that there will be an announcement on rare earths as well. In fact, I think the deal is rare earths for soybeans or some version of that. But is a year long enough? No. But it gives the U.S. 12 months to strike deals with some of our allies to be able to source, friend source or near source critical minerals. It enables the U.S. government to do what they've been doing, which is actually take stakes in rare mineral companies to help over the long term secure, again, a more safe supply of rare earths. So it gives the U.S. time to act while still being able to import from China.
One of the things I think China has been really excellent at has been diversifying some of their sources. And we just had a chart up there talking about that soybeans purchases. This has been a key sticking point between the relationship between the United States and the likes of Brazil, which we've heard in the last 24 hours. Looks like they're friends again at the end of this story. How much of some of these trade relationships that are getting inked between the United States and some of their peers directly correlates to said country's relationship with China?
So I think part of the overall strategy, aside from everything being from a U.S. perspective and from President Trump's perspective, America first, there is part of that strategy is to peel some countries away from China if possible, to try to put a bit of distance between some of these countries. And I think the very friendly on the sidelines meeting with Lula from Brazil, for example, is a great example where President Trump again has no fixed ideology and wants to negotiate with everyone. He believes in talking with everyone, even those that he's had some pretty harsh words with over time and that may be seen as too pro-China. It's part of a broader strategy. We'll see if it actually leads to anything with Brazil specifically, but I have to say President Trump just pulled off a major election win in Argentina yesterday, for example. So he's doing a lot more around the world. I think he deserves credit for the Phase 1 peace deal in Gaza. I think he deserves credit for the release of the hostages. I think his trip to Asia will be literally followed, or as he goes along, followed by major announcements that are positive for the U.S. and for U.S. companies, and including on trade. Lastly, just I think back on China, the message is going to be, I think, status quo as opposed to any major de-escalation, but the flip side of that would be escalation. So I think overall, the markets have been right to be rallying on this.
When you say status quo, we're looking at a tariff truce at the moment, which expires November 10th, and I believe the rate after that goes up to 150 as it stands at the moment. So does status quo mean an effective 40% rate that we're seeing on China right now, or does it mean we're just in this kind of freeze for the next year, as Scott Bessent would suggest?
So I think the tariffs that are in place today stay into next year. What we will continue to see are these rolling deadlines of higher tariffs that get essentially delayed. So by status quo, we mean what's in place today. I think looking out to next year, if China does buy more soybeans, actually does other things the U.S. wants on trade on their side, I think we could see the 20% fentanyl penalty potentially come down partly next year. But by status quo, I think it's where we are today.
Charles, there was a lack of discussion around semiconductors and the technology trade between the U.S. and China. Do you think that will become the key focus of the next round of negotiations, talking about chips and export controls when it comes to China essentially threatening these anti-monopoly lawsuits against NVIDIA and other tech giants in the U.S.?
I do. I think actually chips are on the table for this visit as well. I'm not sure we'll get to any kind of additional agreement. We have relaxed some chip export controls. I think that was in part because U.S. companies have been lobbying the White House on that, and the government, U.S. government's going to take part of those revenues. So it's actually a revenue generator for the U.S. As well. But I think in terms of any further relaxation of tech export restrictions, restrictions, that's probably a phase 2 next year, and I think will be part of a deal to help for China to reduce some of the fentanyl tariffs. But I'm not sure we get to a breakthrough on chips today.
Well, while we're all talking about tariffs, it's very important that this Supreme Court ruling on tariffs, it begins next week. They're beginning hearing arguments on November 4th. From the traders and the people I speak to, even the questions the Supreme Court will be asking these original of those presenting arguments next week will be hotly watched for just any hint of where they're attempting to take this court case. Do you see this court case as really disrupting President Trump's ability to use tariffs for his policy aims?
No, I do think the court is likely to rule against him on IEEPA. I do think that that's likely, although it is a court that has consistently or almost consistently ruled in favor of executive authority. I think in this case they may rule against him. And if they do, what the administration will do, to answer your question, is very quickly pivot and find the other authorities the president has to reinstate most of these tariffs. I think also on the refund issue, because we're going to need to refund countries and companies, I think that the U.S. administration will make the barrier, the hoops very, very difficult to jump through to get a refund. So I'm not sure we're going to end up refunding all these tariffs either, but the president will reimpose or reinstate these tariffs relatively quickly. I don't think it'll be a change in trade policy at all.
Will the Supreme Court make that decision relatively quickly before year end?
I think that they will rule on this by December, because it is a major issue that with a ticking clock, meaning if companies and countries have to be refunded, that number just gets bigger and bigger. So I think we're going to have a final ruling on this by December.
Wow. By December. Does that include some of the pushbacks and the legal pushback around things like H-1B reforms, immigration, et cetera?
No, I think those are totally separate cases. I do think President Trump will probably climb down from his H-1 $100,000 fee for the visas. There's already significant waivers in place, for all sorts of exceptions. And the intent of that visa, fee, et cetera, was really to target China. So I think, in the end, it's hurt Indian engineers more. I think he's going to climb down from that.
Charles, I want to play with you, play some sound for you if I can when it comes to South Korea. Bloomberg had an interview with the South Korean president where he talked about what some of the hiccups around trade policy looks like. We know, speaking of immigration, South Korea has maybe unwittingly been kind of pulled into that conversation. Just take a listen to what the South Korean president had to say about progress on their conversations with the United States.
투자의 방식, the method of investment, the amount of investment, the timeline, and how we will share the losses and divide the dividends, all of these remain sticking points. The U.S. will, of course, try to maximize its interests, but it must not be to the extent that causes catastrophic consequences for South Korea.
I think it was really fascinating to hear the South Korean president there really highlighting that actually the investment purchases might be something that could come under some scrutiny, because this is also the conversation in Japan with the new prime minister there, whether the $550 billion investment promise is something that can be held up against. 6 months ago, this is something Donald Trump was promising domestically. Is this still a key pillar of how he frames some of these negotiations?
I do. I think it is. The real issue is that almost all of these trade agreements are still just frameworks that are not yet finalized. President Trump has a habit of announcing positive news that isn't yet finalized, and including on trade. And so what's happening in a number of these countries is the initial headline figure of investment that was promised, I think, is playing not very well domestically in some of these countries like South Korea. So we're starting to see some of the governments actually kind of pull back a little bit on that. When we get to the final agreement, I think the number will still be big, but it's all this promised investment in the U.S. There is a little bit of smoke and mirrors. It's a little bit of telling Trump what he wants to hear. Some of it's very real, but we will, in the end, 3.5 years from now, not be anywhere near the promised headline numbers.
Charles, every morning, Val, I, and every anchor at this network comes in, and we're just digesting the trade negotiation and commentary on every part of the world. I think we've done a decent job today of covering maybe every country Donald Trump has mentioned on his tour. What are we missing? What is the flashpoint in this world that no one's paying attention to?
Well, on trade, the big issue is Canada. We've been saying now for quite a while that the toughest negotiation would be, aside from China, Canada. And I think we just saw that really blow up with the ad that they ran and really upset the White House. So, you know, what the U.S. wants from Canada are much bigger concessions than Canada is willing to give. So I think that negotiation, we're now finally in a realistic place, which is not a good place. That's going to be tough. U.S.-Mexico will be fine. In the end, U.S.-India will be fine. So I think overall we're okay there. Other things that we're watching on the horizon that are getting some attention that could become bigger stories or bigger issues, regime change in Venezuela. This White House is absolutely committed to overthrowing Maduro. I understand all the reasons why he may stay. That I'm willing to bet that within 6 months, if not a year, that there will be a new government in Venezuela. The United States wants much safer and secure access to oil and natural gas in our hemisphere and wants Cuba and China's influence and Russia's influence out. So it's all part of a broader strategy. And I think Taiwan is still going to be a major issue. I'm sure it's on the table in the background of Trump's visit to Asia. And I think part of his message to Japan, South Korea, and our other allies in Malaysia is ultimately we're going to be with you if there's an attempt to take Taiwan by China, but you've got to be with us as well. So I think those are some of the things that we're watching. And then we head into the midterms in the U.S. It's a year away, but it's already starting to come into focus.
And you're seeing that, and of course, I think the voting for the New York mayoral election opened over the weekend, so that's always a fun flashpoint as well. Charles Myers, world tour with him, chairman of Signum Global Advisors. We thank you so much. Coming up on the program, we're going to go from the geopolitics to maybe a little bit more of the math. The earnings from the world's largest tech companies sharply in focus this week amid the multi-billion-dollar push into AI. We're going to dive into those details next. Stick with us. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up
up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Welcome back to the opening trade. We're 51 minutes into today's session, and the green on the screen that we entered this market with has faded quickly. We are seeing underperformance this time in the French index. I would say on par with what you're seeing in the UK index as well. The FTSE 100 is virtually flat right now. The DAX is your outperformer, but based on the way this market is going, we'll see for how long. Over in the States, futures also rolling over just a touch, but still higher by 0.8% on S&P E-minis. Now, this is going to be crucial, especially this week ahead when we have earnings on both sides of the Atlantic. But I think the one everyone's watching for is from the 5 of the Magnificent 7, whether or not they're going to bring their AI investment plans into focus as the race to scale capabilities intensifies. Matt Bloxham is all over the story. He joins us from Bloomberg Intelligence. Is it going to intensify, or every quarter we have you on, every quarter we ask, is this it for the Magnificent 7?
Well, yeah, I mean, for sure, there's clearly going to be a huge amount of focus on whether the demand is really coming through in a big way, and whether that's helping revenues, and whether it's going to push capex high. And I think we're going to see a bit of a mixed picture there. And I think also there's going to be some focus on whether this evolving trend is really affecting some of the established players. So, for example, Google, which reports, or Alphabet, the Google parent, which reports on Wednesday, going to be a lot of focus on whether ChatGPT is eating into their search business. Their core search business generates most of the revenue. And also we heard recently the news that we've got these AI-powered browsers launched by the likes of OpenAI. I think it's too early for those to have an impact, but I'm sure there are going to be some questions asked of Google about whether they're worried about those. Microsoft also reports on Wednesday. I think the expectations are that they are going to lift their capex maybe by about 10%. Because they've been struggling to keep up with cloud and AI demand. I think elsewhere, Apple, a lot of optimism that the 17 has landed really well across the world, including China. So I think there's kind of a bit of expectation there already that that's going to be a strong print for them, and they're going to talk positively about forward demand. Obviously, the Air has been a bit of a weakness there, but I think the kind of the baseline 17 and the Pro models have been doing well. But obviously, maybe a little bit of softness on the profit side because they've been really hit by the trade impacts.
Is it going to be this quarter where investors really want to see details of AI monetization, or is that still down the line?
I think it's still down the line, to be honest. I mean, I think they're looking for positive commentary around the kind of forward pipeline. But I think, if you're seeing these companies continue to invest, I mean, I think if you look at straight cloud revenues, it's going to be between 30 and 40% year-on-year growth. I think as long as they meet those expectations, and perhaps there's some commentary that a lot of that's coming from AI-related contracts, I think we're okay. I think, nobody's expecting there to be sudden kind of massive shift in momentum on the revenue side. It's whether they can sustain these kind of 30% plus growth rates into the midterm that's really critical.
Yeah, I think that's the key point, though, is when is the market really going to start asking the questions of where's the money, where's the revenue off the back of all this investment? Maybe not this time around, but it feels like it's sooner than it was a few quarters ago. Matt Bloxham from Bloomberg Intelligence, thank you for that wrap on the Mag 7s. Well, not only do we get 5 of the Mag 7s, but there is a lot of risk events on the horizon this week. As we mentioned, Trump is in Japan this week, meeting with the new prime minister. We do have a lot of central banks this week. Critty on Wednesday, we do have the Fed decision. Thursday, we get the Bank of Japan and the ECB. We also have the Bank of Canada. So 4 of the G7 central banks making decisions this week. I think the key is going to be the Fed, what they think of last week's CPI report that the market did take as soft, especially that drop in housing inflation, but it didn't seem like the bid into treasuries really lasted that long.
Yeah, I mean, it's fascinating here. I mean, we could start, I'm trying to think about how we're going to end this week on Friday. Are we going to start kind of round tripping to where we're starting this week, or are we going to get something that really sustainably moves the dial? To your point, with central banks, the earnings that we just, of course, digested with Matt as well. Not to mention the geopolitics that are on everyone's radar. I'll throw one more in there for you, which is that we are also getting headlines from UK Chancellor Rachel Reeves. She's doing a tour right now in the Gulf, and she's speaking at a Fortune event in Riyadh, actually giving us a clue maybe to some of her peers about how to get a trade deal 101. She says taking Trump seriously was the key. She's also making some comments when it comes to the UK budget as well, saying that they're spending too much servicing government debt, and as well saying they're looking about tax and spending to keep to those fiscal reforms and fiscal rules.
Yeah, that comment on tax is interesting because we did hear from The Guardian, they were reporting that they were looking at increasing the base rate by 1%. So there is still, I guess, a lot to be considered ahead of the budget, which is coming in less than a month's time, should I add.
Yeah, I mean, it's fascinating here. We are quite literally in the countdown. Let's see how this all shows up. We've got plenty going on. She's making those comments, of course, in Riyadh. We should talk about the fact that we are there as well. The 9th edition of the Future Investment Initiative taking place in Riyadh this week. We're going to hear from the heavyweights, David Solomon of Goldman Sachs, Mary Erdos of JP Morgan, and many, many more. That does it for the opening trade. We have plenty more coverage up ahead on Bloomberg Television. Stick with us. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
The Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Earnings season is here.
Earnings season begins once again.
So much going on.
Bloomberg is first to break the numbers.
From Snowflake, from Pure Storage, from Urban Outfitters, and from NVIDIA.
Coming up, we'll talk about some of the other earnings that are coming out.
With the smartest insights.
Third quarter numbers are going to be really important. The commentary is going to be important. It's all going to be about margins because margins lead to earnings. And if earnings come down, we have a problem.
You have to come back again soon. This is really excellent.
Continuing coverage on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
In New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Teed up. The U.S. and China prepare a sweeping trade deal, setting it up for Presidents Trump and Xi to finalize when they meet Thursday. Argentina decides, the country voting in Javier Milei's party in Sunday's midterms, vindicating the U.S. administration's extraordinary support for the peso. And markets back in rally mode in the run-up to Wednesday's FOMC decision and the biggest week for earnings this season. To that effect, let's have a look at futures because they are pointed strongly higher. Don't forget, we're already at records in October alone to date. We're up 1.25% on the S&P 500, 2.25% on the NASDAQ 100. You have that. Then you have an FOMC decision that's likely to be a cut, with potentially more dovish comments coming down the pike and a potential new Fed chair by the end of the year, at least announced. And then you have the biggest week for earnings season, 5 of the Mag 7 reporting Wednesday and Thursday. And of course, Presidents Trump and Xi potentially putting to bed some of the friction between them at this week's meeting. Let's take a look at yields because we are slightly higher. That safe haven trade, as you might expect, backing off just a little bit. We're back to 350 on the 2-year, the 10-year back above 4, and the 30-year yield back above 460. And let's take a look at the commodities trade as well, because all of this de-escalation is giving us perhaps a little bit more optimism for global growth in general, the energy transition and so on. So you are seeing copper, for example, close to records today, oil backing off just that little bit. But let's get to some individual movers now. Over to London and Valerie Titel. Good morning, Valerie.
Good morning, Bonnie. Happy Monday. Risk on Monday, should we say. Let's start with a check on the gainers in the Mag 7, and that is NVIDIA, leading the Mag 7 gains up 2.1%. This is around optimism on these U.S.-China tensions thawing and those export controls when it comes to those key rare earths potentially delayed for a year when it comes to China. So NVIDIA at the top of the basket when it comes to those Mag 7s. Let's also have a check on rare earths. As I mentioned, Besant hinted that those export restrictions from China could be delayed for up to a year. We are seeing those North American rare earth miners on a back foot off the back of this. MP Materials, which the Department of War has a direct stake in, down 6%. Critical Metals and USA Rare Earths also down over 8%, just taking some steam out of this recent rally. Lastly, let's go on to the pharma sector. Bonnie, we've had some M&A news that Novartis has agreed to buy Avidity Biosciences for $72 a share, marking the biggest acquisition for Novartis in over a decade. We're seeing Avidity Biosciences trade up to nearly $72 a share, up 42% in the pre-market. Bonnie?
Wow, that is some move. Valerie, thank you so much. Valerie Titel there. And later this hour, we're going to catch up with Max Kettner of HSBC, so stick around for that conversation. But first, President Trump lands in Tokyo after wrapping up his meetings with ASEAN nations in Kuala Lumpur. To take us through the president's trip in Asia, now our team is on the ground. We have Avril Hong in Kuala Lumpur and Stephen Engel in Tokyo. So Avril, walk us through the talks that happened over the weekend. We had some breakthroughs.
Yeah, it was breakthroughs galore and a flurry of diplomatic activity. I mean, we saw the top members of the U.S. and Chinese trade negotiators, the delegations, really hunkering down in Malaysia in the past 2 days. 2 days of talks, which took place at the Merdeka 118, not far from where I am, by the way, the second tallest building in the world. And right there, those negotiations are expected to pave the way for their leaders, Trump and Xi, to ink out some form of a trade agreement when they actually meet in South Korea later this week on Thursday. Now, why this is significant in terms of what these trade negotiators have done in teeing things up for their bosses to seal the deal and finalize some form of agreement is that there was consensus on a number of contentious issues, and this is the signaling we're getting from both the U.S. and Chinese sides. And as you may know, when it comes to the Chinese negotiation style, they're not always so forthcoming in what the tactics might be behind the scenes, so that they are actually establishing some form of consensus on these contentious issues that include rare earths, soybean purchases, fentanyl, says a lot. Now, we are going to be shifting that focus, of course, to be looking at Trump and how he's progressing throughout Asia, the rest of the trip over to Japan and what is happening there next as well.
Yes, and to that effect, let's bring in Stephen Engel to ask what is the president going to be doing in Tokyo. Obviously, Sanae Takaichi has her own agenda as well.
Yeah, absolutely. So Donald Trump has landed in Japan. He has by now probably already made his courtesy visit to the emperor in the Imperial Palace before possibly retiring for the evening. But tomorrow is going to be a busy day for President Trump. He will be having a morning meeting with the new Prime Minister, Sanae Takaichi. That will be an interesting dynamic to see these two new leaders get to know each other a little bit better. Of course, she is a protege of the former assassinated Prime Minister Minister Shinzo Abe, whom Donald Trump recalls quite fondly. And of course, it was here at the Akasaka Palace, the state guest house, 6 years ago, where Donald Trump, and I was here as well, exactly same position, where Donald Trump came through and met Shinzo Abe. So I think he's going to want to pick up the same kind of rapport that he had with Shinzo Abe with his predecessor, Takaichi-san, who is widely considered to be a bit of more of a nationalist leader than the previous two prime minister, Kishida and Ishiba, who did not necessarily build out the same kind of rapport with the U.S. administrations of Biden and Donald Trump. So it will be interesting to see how their conversations will go on defense spending. Donald Trump, no doubt, wants the Japanese and the South Koreans to pick up a bigger percentage of the defense bill that the United States foots quite largely. Already Takaichi-san has said she's going to speed up her plan to increase defense spending in Japan to 2% of GDP. She's going to accelerate that by 2 years, and that's a highly controversial subject in Japan, which has a pacifist constitution, but might be music to Donald Trump's ears if Japan's going to spend more. But it still might not be enough. Europeans are talking about 5% of GDP. Japan just saying increasing to 2%. So there's a lot of issues. Japan is also buying Russian LNG. Donald Trump is going to try and convince Takaichi-san to wean Japan off that fuel from the Russians.
Okay, so defense and industrial collaboration on the agenda very much in Japan. Avril, I do want to ask you a little bit more about China, though, because Treasury Secretary Scott Bessent saying it's really down to crossing the T's and dotting the I's, but there are so many issues outstanding. Will we get something on the big ones, rare earths, for example?
Yeah, I mean, that is one of the main issues, right? As we know, China has been using rare earths as leverage since earlier in the year, imposing restrictions, and that has been used as a sort of point of contention when it comes to US-China trade negotiations. And we saw more recently it not only imposed restrictions on rare earths or signaled that it would do so, but also targeting the technology behind rare earths. So that is something of a pain point for the U.S. administration. As you know, they go into advanced products from jet engines all the way to semiconductors. For the moment, though, on that very rare earths issue, the idea from Scott Bessent that the Chinese seem a bit more willing to now delay these rare earths restrictions. Some indications that it could last for up to a year. That is a promising sign, and for the moment, at least allows the U.S. side to allay some of the supply chain risk when it comes to critical minerals.
Absolutely. Avril, thank you so much. And Stephen, that is Bloomberg's Avril Hong in Kuala Lumpur and Stephen Engel in Tokyo. Over in Argentina now, President Javier Milei's party won midterm votes yesterday in a major comeback. For more, Bloomberg's editor-at-large Marty Schenker joins us. So Marty, what's next for the US-Argentina relationship? Is there some kind of quid pro quo for this massive, extraordinarily unusual aid that the U.S. gave Argentina, or is just the expected appreciation of the peso enough?
Well, it could be a significant factor in shaping what comes next. We have Scott Bessent did orchestrate this $20 billion lifeline, putting some assets of the U.S. at risk. But now that Milei has made this really extraordinary victory, the question becomes that second $20 billion package that the banks were supposed to put together, whether that now will in fact happen.
Marty, we are expecting that there will be some kind of deal inked for the aid of U.S. ranchers. In other words, some kind of a beef deal, I guess. But would that be enough for the United States, or would it want more in terms of national security collaboration, even in Latin America?
There's all kinds of things that the U.S. could negotiate. Now, this is the whole beef issue has become a vulnerable point for Donald Trump. Ranchers support Donald Trump, but they're very upset with the plan to import Argentine beef in the face of real significant increases in beef prices in the U.S. But Donald Trump is excellent at working both sides of the room, and I suspect he'll wind up accepting Argentine beef while placating the farmers in some way.
Absolutely. Marty, thank you so much. That is Bloomberg's Marty Schenker there for us. Now back in Washington, Treasury Secretary Scott Bessent confirming 5 finalists to succeed Fed Chair Jerome Powell. Bloomberg's Jill Deesis joins us now. So Jill, it is 5 names that have been making the rounds for some time. I guess Treasury Secretary Scott Bessent took his own name out of the running, and he says we'll know by the end of the year.
Yeah, Vonnie, I think that timing on this idea of a decision expected by the end of the year, that's really kind of the operative news here. I mean, a lot of the names that we heard Bessent talk about in terms of these potential candidates, people like Christopher Waller, Michelle Bowman, so current members of the Fed. He also had mentioned Kevin Hassett, the White House National Economic Director. We've also got former Fed Governor Kevin Warsh, as well as BlackRock executive Rick Rieder. So, I mean, again, these are names that have been floating around for quite a while, and some of them have even really been floated, by Trump as potential candidates here. So really, I think the big thing here that we're hearing from Bessent, this idea that we could get a decision by the end of the year. Obviously, we've got a Fed meeting upcoming, but I think, more importantly than that, if there is some kind of a decision from the White House, an announcement on who they want to put forth as their next Fed chair, I mean, that does leave a certain period of time where you do still have Powell as the operative Fed chairman going into 2026 before he ultimately leaves, where you've got some overlap between, who the White House is positioning, and then obviously Powell leaving, but as we've seen over the last year, even beyond, I mean, there's just such a tense relationship here between Trump and Powell. So I think, you might continue to see Trump get a little bit more vocal there. But yeah, I mean, obviously operative there is maybe by the end of the year, we see who the White House wants to be the next Fed chairman.
Yeah, I mean, several meetings as well early next year. The other story that's, high up today is that Trump has now categorically said he will not run for vice president in 2028. That's significant because there had been some suggestion that he could run with another candidate, and then if that ticket were to win, that other candidate might step aside, leaving Trump to be president once more and not having to do anything with the Constitution. But he's not going to do that.
Yeah, I mean, so Vonnie, he asked about this on Air Force One during his Asia trip. He's saying, it's a bit too cute, that idea. I think really, Vonnie, what we really need to put in context here with where this entire thing really comes from is that, there are some supporters of the president that are essentially floating ways that they think he would potentially be able to circumvent constitutional rules that are in place about how many terms he can be president for. That's the 2 terms, by potentially floating this hypothetical scenario. Really do want to make clear that this is a hypothetical scenario floated by some supporters there. Obviously, we do get that denial from the President of the United States there, but that really all kind of comes into that, idea of this, sort of contingent of people that sort of floating ways potentially that they could see him getting more than the 2 terms that, again, he's constitutionally entitled to, upon election to step in office. So I think that's just the one thing to really keep in mind there. But yeah, we did get that too cute response from Trump there.
Jill, thank you so much. Fantastic context there. That is Bloomberg's Jill Deesis. Coming up, Barclays re-entering Saudi Arabia after 11 years. We'll bring you our conversation with the CEO next. This is Bloomberg.
You missed it on Bloomberg Tech Asia.
I'm in a Nissan Aria with the latest ProPilot system developed with Wave's AI technology.
Bloomberg NEF says we'll see a robotaxi fleet about 6 million strong on the roads by the next decade. And with many of these projects scheduled to deploy across the world in the coming year, the era of robotaxis may be arriving soon to a city near you. Don't miss Bloomberg Tech Asia every month.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findstreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones, Erica Ayers-Badon, Robin Arzón, Justin Tuck.
Stay tuned. You won't want to miss it.
Wednesday, the Fed decides.
This Fed is anchored to a massive step down in payrolls.
They are data dependent. We have no data. As far as the employment picture is concerned, I think that they have a pretty good read.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
The Fed remains on track to cut rates.
You looked at the dot plot, and the dispersion looked like a B-52 bomber's wingspan.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Bloomberg Brief. I'm Bonnie Quinn in New York. Barclays beefing up its operation in Saudi Arabia after exiting the business more than a decade ago. CEO C.S. Venkatakrishnan sat down with Bloomberg's Jumana Bersetchi at the Future Investment Initiative event in Riyadh. Take a listen.
The important thing about investment flows is it used to be out of the region into the Europe, into the United States, where of course we have a very strong presence. Now there's a lot coming back into the region. It's two-way, and I think that's the part where we can help.
Yeah, and I saw also that you acted as one of the book runners on the PIS debut Euro Green Bonds, and what we are seeing is an increased amount of borrowing and issuance coming through from the kingdom. Surely that also presents an opportunity.
It presents a great opportunity. The Saudi sovereign, the kingdom itself, is issuing a lot more sovereign debt. Institutions like the PIF, the one you mentioned, have, and it was great for us to be part of that bond, representing as it does both sustainability and Saudi.
Okay, so we've spoken about investment banking. How are you viewing the growth of the wealth business in this part of the world as well?
So wealth is growing enormously, both the development of regional wealth and then actually the movement of people into Dubai, which is becoming a fairly big offshore center for wealth. We've got a presence there, and I think it is to help people, save and grow for the next generation and the generation after that. That's what the country of Saudi Arabia is doing through its institutions. That's what we want to help the people to do.
Yeah, we were reporting on how HSBC's Middle East wealth business was under scrutiny by the regulators, and it's impacted their ability to transact with a number of clients in the region. Do you sense this as potentially an opportunity to pick up market share in wealth?
No, look, I think there's enough room in the region for all the great banks, and what we will do is do it in our own way, in our own style, and hope to serve the region.
Okay, so you mentioned the number of people moving to Dubai, but we also hear, and we report on it on Bloomberg all the time, the number of asset managers, hedge funds moving to Dubai and Abu Dhabi as well. Do you see that as opening up an opportunity in the sense of maybe you can expand your prime brokerage services to cater for all of these asset managers that are moving to the region as well?
That's already happening. We've catered many of them through London, and we will look to follow our clients to where they are. And I think as the critical mass builds, you should expect us to see us do more and more in the region.
Barclays CEO C.S. Venkatakrishnan speaking there to Bloomberg's Jumana Bersetchi at the Future Investment Initiative event in Riyadh. Now, two other top stories trending on the terminal this morning. First up, HSBC will set aside $1.1 billion to cover litigation by investors who lost money in the Bernard Madoff fraud. It's the latest global bank to face a significant hit from litigation dating back years. The provision will be recognized in HSBC's upcoming third quarter results. German business confidence improved to its highest level since 2022 at the start of the fourth quarter. An expectations index by the IFO Institute rose to 91.6 in October from a revised 89.8 in September. And over a period of 8 months, starting back in February, French billionaire Bernard Arnault bought roughly $1.6 billion worth of LVMH shares. This is according to Paris stock market filings. The purchases through holding companies occurred amid a sharp price decline triggered by weaker earnings and a broader industry retreat. Coming up, a look at what else is making headlines in your front page news. That's next. This is Bloomberg.
Take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bloomberg Brief, I'm Bonnie Quinn in New York. Time now for your front page news. First up, on the Wall Street Journal, a U.S. military helicopter and a jet fighter from the same aircraft carrier crashed into the South China Sea Sunday within 30 minutes of each other. 5 crew members from both aircrafts were rescued and are in stable condition. The Pacific Fleet says the cause of both crashes is under investigation. Next up, the Financial Times reporting the U.S. government's debt burden is on track to exceed levels in both Italy and Greece for the first time this century. Italy and Greece, of course, long highlighted for their fragile public finances. The FT quotes IMF forecasts saying general U.S. government gross debt will rise by more than 20 percentage points to reach 143.4% of GDP by 2029. And on the New York Times front page, California Governor Gavin Newsom telling CBS Sunday he will consider a 2028 presidential run after next year's midterms. Newsom is currently serving in a second term as governor of California that ends in January of 2027. The New York Times saying he's positioned himself as one of President Trump's most visible Democratic antagonists. All right, let's take a look at markets because we are set up for a pretty bullish week in terms of futures. You can see that we are starting Monday where we left off Friday, pointed higher and continuing to set records. The dollar index, not too much movement there. We are seeing oil lower, that having a little to do with dollar weakness, but not too much movement in currencies. Sterling a little bit stronger. Rachel Reeves thinks that she has is in a good position to form a good relationship with Donald Trump. The Canadian dollar is a little bit stronger today, and this even as Trump says on Air Force One that he doesn't anticipate meeting with Canada, quote, for a while. He says he doesn't want to meet with Mark Carney, that Mark Carney should have pulled that Ontario ad sooner. And then the 10-year yield, as you can see, up just a little bit as that safe haven trade comes off. Coming up, risk on into 2026. Well, that seems to be still in place. We'll speak to Max Kettner of HSBC next. This is Bloomberg.
Villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, but change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human beings, for the world.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Teed up, the U.S. and China prepare a sweeping trade deal, setting it up for Presidents Trump and Xi to finalize when they meet Thursday. Argentina decides. The country voting in Javier Milei's party in Sunday's midterms, vindicating the U.S. administration's extraordinary support for the peso. And markets back in rally mode in the United States in the run-up to Wednesday's FOMC decision and the biggest week for earnings this season. Post-CPI data then Friday, we had that rally, and that continues today as we await a very likely Fed rate cut and also earnings. 5 of the Mag 7 reporting Wednesday and Thursday. And of course, the major story this week, the de-escalation that seems to be happening with China. Month to date now, we're seeing the S&P up 1.2%, the NASDAQ 100 up 2.25%, so continuing to set those records. The Russell 2000 partying along with the other indices. Let's look at yields. The 2-year back above pre-CPI levels. Investors unwinding that safe haven trade. Just below it again now, 349.68, but we are seeing the 10-year yield back above 4% and the 30-year yield back at 4.60. We're going to be looking at the Argentine peso. That'll start trading actively around 9 a.m. Eastern. We'll keep an eye out for movement after Javier Milei's party 1. And then let's take a look at some commodities, because we're seeing a little bit of pressure on oil, still above $60 for New York crude. Gold as well, still above 4,000, but you can see that safe haven trade just coming off across the board. Not so much for copper, though, because there is now this expectation that perhaps global growth will pick up, and we're seeing copper very close to records. Now let's get to some individual stocks to watch. Over to London and Valerie Teitel. Valerie.
Good morning, Ivani. Happy Monday. The party is continuing in the Mag 7 stocks on a front foot, and NVIDIA leading those gains in the pre-market up 2.3%. This is on the back of better relations between the U.S. and China. That rare earth export restriction possibly delayed for up to a year, and that is taking at least some excitement into this AI trade with NVIDIA lifting the gains for the Mag 7. Let's check on the rare earth miners, though. Those North American miners are on a back foot. Some recent gas being taken out of this rally on that delay. We have MP Materials, who the Department of War has a direct equity stake in, down over 5%. Critical Metals and USA Rare Earths also down, near 7 to 8%. Now, this is perhaps just a sign that the urgency on rare earths, this urgency to boost those North American supplies, might take just a slight back step off of this delay from China. Lastly, let's look at the pharma space. We did have a Novartis announcing an acquisition of Avidity Bioscience, a near $12 billion acquisition at $72 a share for Avidity Biosciences. So we're trading up to that acquisition price, up 43% so far in the pre-market trade for this stock. Now, this is one of the biggest acquisitions for Novartis in over a decade as they try to beef up their pipeline when it comes to experimental drugs for rare diseases. Funny?
Valerie, thank you so much. We'll keep an eye on all of those and a lot more today, I'm sure, as well. Valerie Teitel there. Now, Max Kettner of HSBC was risk on into 2026, even before this week's change in tone, that de-escalation with China, for example, and a potential multi-pronged trade deal with that country. Max is Chief Multi-Asset Strategist with HSBC and joins us now. So, Max, I'm not sure if we've been speaking mid-last week would have been so positioned so positively, but it certainly looks like all of the challenges are out of the way now. Is there a danger that some of this falls apart and everybody just flees the market?
Yeah, good morning. Look, I think there is a danger that ultimately perhaps positioning is getting a little bit too stretched, and at some point perhaps there's a bit too much positivity creeping into markets and into expectations. That, however, I think is really only a story sometime in the first half of next year, because let's be honest, while we have seen some really nice positive earnings revisions in the last couple of months, particularly in the US and particularly driven by those companies that benefit the most from a weaker dollar. And while we have seen GDP upgrades, the level of those earnings expectations, those near-term earnings expectations, and the level of near-term GDP expectations is still fairly low. We're only talking about, barely 1% annualized GDP growth in terms of consensus expectations for Q4. When we look at now Q4 versus Q3, consensus is actually saying maybe earnings are not going to grow at all in the fourth quarter versus the reporting season that is underway right now. And of course, we look at the earnings season at the moment, and we are tracking at pretty much the best beat rate since COVID, since 2021. And all of that really tells us there is, I think, fundamentally still a lot of room to go, I think, in the next couple of weeks and months.
So I wanted to comment on something that Ed Yardeni just put out a few moments ago, actually, talking about how the Fed put is back. But he's saying that further rate cuts, perhaps after this one on Wednesday that we're very likely to get, are not now needed because both parts of the Fed's dual mandate, unemployment and inflation, are close to nirvana, is what he's saying. He's saying if we get further rate cuts, all it's going to do is send stocks higher. It's not actually going to help the labour market.
Yeah, look, I'm not sure I agree massively with that because, to be honest, when we see some pockets of weakness, that clearly is in some weaker pockets of the consumer, weaker pockets of corporates, and of course, as the rates are coming down, that should also help those parts of the consumer and of corporates. I do think, you know, some parts of those rate cuts should help. The question, however, is if we do get now an October rate cut this week, we get a December rate cut. Are we really going to see those cuts that are priced in beyond the neutral rate, that are priced in beyond the 3% terminal rate? That is, I think, where we disagree and really where we see perhaps a little bit more hawkishness in terms of what actually then unfolds relative to market pricing. Because, you know, when we go into next year and we've already got a re-accelerating economy, corporates are actually pretty healthy, leverage is good, you know, the labor market overall, let's be honest, you know, when the Fed started cutting rates last year, the unemployment rate was 4.2%. It's now 4.3%. It's not like, you know, the world's changed massively, and it's not like the labor markets deteriorate significantly in the last year. So I do fear that at some point in H1 next year, there might be too much positivity creeping in terms of earnings, in terms of growth expectations, and we've cut into a re-accelerating economy. We then have growth tailwinds from the big beautiful bill, both for the consumer and for corporates, and then perhaps, you know, at some point the rates market will have to wake up and say, hold on, why do we need all these additional rate cuts? That's fine, you know, we had 3 rate cuts, yes, but beyond that, do we really need rate cuts beyond neutral? I think that's where we disagree.
And then stocks might take their cue from the rates market. Max, is there the potential for stocks to, say, peak, but then not have a massive sell-off, just hang out around the peak for some time until we have a clearer picture of what's going on in the economy, or where there might actually be, you know, little bubbles forming?
Yeah, look, I don't think so, actually. I don't think there is even a basis for stocks just to hang around where they are right now, because, you know, I do have these conversations a lot at the moment. Is there an AI bubble? Is there a bubble in everything, in valuations and so on? You know, equity markets in particular are so detached from reality and so detached from fundamentals. And then you look at the charts and you say, look, we had the best earnings beat rate in the second quarter already since 2021. We're on track to even beat that beat rate. We look at corporates themselves. US companies are net upgrading their own guidance. They're not only telling us things are okay, they're actually telling us things are even better than they themselves have expected. So I don't really agree with people who say, oh, you know, we can't remain detached from fundamentals forever. Well, fundamentals are genuinely strong, and in particularly in the US, particularly on the high frequency data side and on the earnings side, really since the end of the second quarter, things have been picking up and things have genuinely been re-accelerating.
There is a little bit of concern about wages, though, right, Max? I mean, if we don't get wage growth at the levels that we've been seeing it, then that's going to very much hurt the US consumer and cause a ripple effect.
Yeah, might be, but I think on the wage growth side, all the sort of classic leading indicators that we track on the job opening side, and you know, all of that is really telling us there is a bit more slight downside ahead for wage growth overall, and then it sort of peters out. So sort of then wages hang around maybe half a percentage point lower than where we currently are. That's what most leading indicators suggest. So from that angle, I'm not very concerned. Even on the overall inflation side, yes, of course, when we look at Friday's data, goods inflation is higher. So again, that is a worry that we see some tariffs spill through and then pass through. Absolutely, but let's be honest, goods inflation is only 18% of headline CPI. And for wages to really feed into services inflation, what we would need is particularly the rental inflation, shelter inflation, to actually also go up, and then, you know, sort of see a 2022 scenario where it's not just goods inflation, but super core and services and shelter, yes, and all the components go up at the same time. That's not what we're seeing. We are seeing still more downside in shelter inflation, not just in September, but really going forward. All the indicators, new rents, house prices, do suggest shelter inflation is still disinflationary. That is twice the weight of goods inflation. That is much, much more important.
Max, always an absolute pleasure to speak with you. Can't wait for Wednesday. That is Max Kettner of HSBC. Now to other top stories trending on the terminal this morning. Treasury Secretary Scott Bessent confirming the names of 5 finalists to succeed Fed Chair Powell. The candidates are current Fed Board members Christopher Waller and Michelle Bowman, former Fed Governor Kevin Warsh, White House National Economic Council Director Kevin Hassett, and BlackRock executive Rick Reeder. President Trump said he expects that Scott Bessent will make the decision along with him by year end. President Trump ruling out the idea of running as vice presidential candidate in the 2028 election. This has his supporters urge him to find ways to circumvent the Constitution's prohibition on a president being elected to 3 terms. Commenting on the issue, the president told reporters, quote, "It's too cute." And Hurricane Melissa became the Atlantic season's 3rd Category 5 storm in the Caribbean. The U.S. National Hurricane Center said it's now expected to make landfall early Tuesday in Jamaica, as well as neighboring Haiti, the Dominican Republic, and Cuba, where it will make a 2nd landfall Wednesday. Coming up, President Trump touches down in Tokyo for the next string in high-stakes meetings in his Asia trip. This is Bloomberg.
Rates are on hold. I think rates being on hold is appropriate for the current period. If they tighten more, then we have to loosen later. More than a year ago, I talked about that being a policy boogie.
Yep.
And I thought that's not a good thing for monetary policymakers to do. The hold is appropriate at this point. Avoid dancing at all costs.
Don't miss the opening trade live every weekday.
In case you missed it on Balance of Power.
I'm sure you're having a ball and you don't want this to end anytime soon, but I'm just wondering how long you think this is going to go on.
This is a very frustrating exercise for us. It's political games being played by Democrats in the Senate. They're talking about the Obamacare subsidies, for example. That's a December 31 policy issue. We were always going to negotiate that and debate it and deliberate over it in October, November. They're trying to pretend that's the issue of the day. It's not. It's a red herring. It's a distraction. They're not doing their jobs.
Would you consider a promise to bring that negotiated legislation to a floor vote, up or down? We'll make sure that happens before the end of the year.
There's a lot of conservatives who have real problems with the Obamacare subsidy. Premiums have skyrocketed since it was created in 2010. They're up like 60%. So something's not working. There's real reforms that are needed. But it's a complex issue that takes a lot of time for members on both sides of the aisle and in both chambers to negotiate. They're trying to short circuit all that right now. That's not how this process works.
Don't miss Balance of Power live every weekday.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily. Every business day at 2 p.m. Eastern, only on Bloomberg.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Well, the stage has been set for Presidents Trump and Xi as top trade negotiators say they have come to agreement on a range of topics, including export controls, fentanyl, shipping levies. President Trump now also suggesting he may drop an investigation into whether China violated the terms of his first-term trade deal. Joining us now is Bloomberg's Brendan Murray. Brendan, there was friction literally until last week. How is it that everything can be solved already? Is it possible?
Yeah, it's gone 180 degrees, the rhetoric between the U.S. and China. It sounds like the two leaders are heading toward a meeting, a face-to-face meeting on Thursday, where they will sort of solidify some of these things that have been hammered out over the weekend. That is, China buying more U.S. soybeans. The U.S. would consider lowering tariffs, specifically the fentanyl tariffs, the 20% that Trump imposed on Chinese imports. I think what the best that they can hope for is that they would push out any sort of escalation that either side have threatened, the export controls or the tariffs, out further than the 3-month series of rounds of talks that we've had over the past 5 months. Secretary Bessent meeting 5 times with his counterpart to try to calm the tensions between the two largest economies. So it looks like the stage is set. The market looks confident that the U.S. and China are not going to be in a protracted, heated trade war if in the foreseeable future.
Yeah, I mean, rare earths is, I suppose, the biggest issue of them all. Is it going to be just, we'll push out the tariffs as long as you extend the rare earths truce, or will there be some kind of a middle ground that will be permanent?
Yeah, that's what the U.S. is expecting, is that China would give the U.S. and companies all over the world some sort of clarity and certainty about the flow of those rare earth, the magnets in particular, the things that power all sorts of electronics and defense equipment, and really just a lot of high-tech industrial machinery these days. Most companies don't carry more than a couple of months of a stockpile of those, so if China starts making those permits tough to come by, then you can see how the global economy sort of seizes up fairly quickly. So the U.S. wants assurances that China's going to let those magnets flow. It sounds like Secretary Bessent has some assurances from his counterparts that that's what they're going to get. So it seems like the two leaders are going to get together later this week and announce this framework. Soybean prices are rallying today on the expectation that China's going to buy a lot more of them. So things seem to be moving in a much more positive direction than they were a week ago.
Well, and then over the weekend, we also got Cambodia, Malaysia, Thailand. Talk to us about those bilateral deals and what the U.S. gets out of them.
Yeah, so there were basically 2 what you would call trade deals, one with Cambodia, the other one with Malaysia. The other 2, one with Vietnam and the other one with Thailand, were more what they call frameworks, which are more outlines of deals that they'll still have to work out the details for. One of the big things that stands out that's not going to happen, though, on this trip for President Trump is a deal with South Korea. It sounds like those details are really getting difficult for the two sides to get to the finish line on. And so the South Korea deal doesn't look like it's going to happen. That, of course, South Korea being a much bigger economy than those other 4 that they've announced. So that could be seen as a disappointment from the Trump administration side. But they are trying to rack up these deals on the president's trip through Asia. He's in Japan now, and they'll, of course, be talking about the U.S.-Japan deal that was hammered out over the past couple of months.
Yeah, and actually, we'll go to Stephen Engel on that. Bloomberg's Brendan Murray, thank you so much for all of that context. So as Brendan was saying, President Trump has arrived now in Japan, preparing to meet with the new Prime Minister. Joining us now from Tokyo is Bloomberg's Stephen Engel. Sanae Takaichi is going to want something good out of this, Stephen. She's just been named Prime Minister. It was a difficult fight, but she's very, very popular in polling. It seems that, 74% of people polled, according to a Nikkei poll, have optimism over her economic agenda. She's going to want to take this into the Trump meeting, isn't she?
Yeah, absolutely. So there's a bit of a honeymoon period. This is Japan's first female prime minister, so she's seeing some popularity boost. Obviously, the last 2 prime ministers, Kishida and Ishiba, were sort of revolving door prime ministers, following, of course, the lengthy premiership of Shinzo Abe, who was really the mentor to Takaichi-san here. She was quite pained by his assassination in 2022. Donald Trump, of course, had a good relationship with Shinzo Abe, according to him. It was actually here at the Akasaka Palace 6 years ago, where I was in this exact same spot where Donald Trump came in and did meet with Shinzo Abe in Akasaka Palace behind me. I can't confirm that the meeting between Takaichi and Trump will happen here, but this is the state guest house, so my guess is that the meeting tomorrow morning that has already been announced between Trump and Takaichi-san will likely happen here, and they do have a lot to talk about. Obviously, Takaichi-san is more, I guess you could say, more of a nationalistic leader. She wants to get cooperation and coordination with the United States on ways that Donald Trump has expressed as well, and that is to counter efforts by China to sort of change the global world order. And Takaichi-san would like to coordinate better with Donald Trump and his administration. However, you know, there are military spending issues. Japan has a pacifist constitution. Takaichi-san wants to increase defense spending in Japan, accelerated by 2 years, the plan to increase spending by up to 2% of GDP fairly soon. And that would be music to Donald Trump's ears unless he feels it's not enough. The Europeans are talking about 5% of GDP, Japan 2%. And of course, there are the threats from North Korea. North Korea has been rattling its sabers of late. And of course, some of those missiles that they've fired have gone over Japanese territory. So there's lots of issues, including that trade deal that was signed in January, as well as the LNG purchases that the Japanese are buying from Russia. So lots to talk about tomorrow morning.
Can't wait to hear more. Stephen, thank you so much for that. That is Bloomberg's Stephen Engel in Tokyo. Well, over in Argentina, President Javier Milei's party won the midterm vote yesterday in a major comeback. He spoke to reporters after his victory.
The Argentinians showed that they don't want to return to the failed model. Argentinians told populism to stop. Populism never again.
For more, Bloomberg's Jorgelina de Rosario joins us now. Jorgelina, this was a little bit of a surprise, but it's certainly being very, very well taken by markets right now. Why is that?
It was a surprise. It was a great night last night for Javier Milei in Argentina after securing almost 41% of a nationwide vote in a midterm election. It was well above expectations of what the government was expecting, but also what the market was expecting. After the government lost in a local election in the largest district of Argentina, the Buenos Aires province, back in September. Now, this reassurance is a good news for markets. We are expecting a rally in stocks, in bonds, and also a recovery on the peso after these results. That basically it's a boost for Milei's governability after he was elected president back in 2023, and this will allow him to get the reforms that he needs, because this midterm election means that now he will have the necessary seats in the Congress, especially in the lower house, first to regain the veto power to reject any of the bills that he might not like, his government might not like to move forward to a legislation, but also to secure the alliances that he will need to seek in the Congress in itself to push for the reforms that he's looking for, whether it is labor reform, tax reform, or pensions reform. This is a vote of confidence that Milei administration needing from the Argentines to seek those reforms and continue his next 2 years of government.
Of course, big backing from the United States as well. Jorgelina, thank you so much. That is Bloomberg's Jorgelina de Rosario. Coming up, a busy week of trade talks, earnings, and of course, that rate decision. The week ahead is next. This is Bloomberg.
Used to be one would say, what's that got to do with the price of tea in China? when they wanted to poke holes in the relevance of something. Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
In case you missed it on Bloomberg Tech.
How do you navigate this time? How are you seeing the ability for NPR to thrive and drive forward?
Well, there's certainly no roadmap for this moment in time. I think this represents a step change for all public broadcasting. It's not just here in the United States. The good news for us is that we have a viable model because we've built audiences over the 50 years we've been in existence. We have 46 million listeners a week.
Don't miss Bloomberg Tech, live every weekday.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead this week. Some key meetings in Asia on deck, of course. President Trump likely to meet the new Japanese Prime Minister Takaichi on Tuesday. Then the APEC summit kicks off in South Korea, where Presidents Trump and Xi will talk later in the week. It's also the busiest week for earnings. Meta, Google and Microsoft reporting Wednesday, Apple and Amazon Thursday, and Exxon and Chevron Friday. And finally, it is not just the Fed. We have three major central bank decisions. The Fed's Wednesday, obviously, followed by the BOJ and the ECB on Thursday. So we really couldn't be better set up for a Monday, right? And you can see that reflected in futures. After a 2.5% gain almost so far into October, we're seeing the NASDAQ 100 hit records and futures pointed very much higher today. You're seeing the safety trade come off, as you can see in the 10-year yield, and gold still above 4,000, but just barely. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.
Asia's not sitting around waiting for politics to dictate what's important here. It has already been a leader and is continuing to be so.
People come to me and say, well, Trump's been, sort of saying, well, we should be focused on this, but yet the corporate world knows that it needs to support this.
Asia's role in global supply chain allows it to influence the transition in ways that many other regions cannot.
All the companies that I've been talking to they have not stopped the work of looking through their supply chains with ESG in mind, because that is just where the puck is going.
Our focus is really to
understand what are the technologies that are part of our portfolio for the future and scaling those technologies so that we can meet our demand with clean energy.
Resiliency is just not an operational response to what is happening out there. Resiliency could and will be a strategic advantage that companies will start to look at.
There is still hope to actually get back down to something of a livable world if we get our act together.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Earnings season has become front and center, and earnings have been strong.
People are investing more seriously than ever before, at least in the U.S.
This market has continued to rally and probably draws more and more people off the sidelines.
This is a very good economy for equities.
The underlying thesis on consumers and business spend is positive.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Monday, hoping for a breakthrough.
We're going to have a great talk. I have a lot of respect for President Xi. I like him a lot. He likes me a lot. I think we're going to have a successful transaction.
The U.S. talking up progress ahead of this week's Trump-Xi meeting as Chair Powell's Federal Reserve prepares for the next big decision. The busiest week of earnings season is upon us. Big tech results up next. A massive week just around the corner.
$27 trillion of market cap reporting this week. Just the big tech stocks that are reporting, which include Microsoft, Alphabet, Meta, Apple, and Amazon, account for a quarter of the total market capitalization of the S&P 500. To me, this is the big event. Can they surpass expectations? Do their shares rally in response to that beat? And then what does this mean about their investment thesis going forward, given that their capital expenditure programs have really driven GDP so far this year?
That's the story for Wednesday and Thursday. Let's talk about the other two stories that look largely baked. A Federal Reserve rate cut on Wednesday and maybe a comprehensive deal between the U.S. and China. Based on a commentary over the weekend, things are looking good.
Things are looking good, but we really need to recalibrate where we are today. We're basically back to where both sides were at the Geneva talks in May. 100% tariffs that the president has threatened taken off the table. You have the fact that China is talking about, or at least the Treasury Secretary and Jameson Greer, ambassador of USTR, are both talking about the fact that the rare earth export issue is going to be solved, or at least deferred for another year. So we were going into this meeting with potentially a ton of leverage. Both of these sides were trying to bake into the market, and guess what? They all brought it back.
Equity futures up by 0.9% on the S&P 500. A record high close on Friday. We're looking for more record highs later on this morning. Coming up this hour, Alistair Pinder of HSBC, with stocks facing a make-or-break week of earnings. Elizabeth Economy of the Hoover Institution as the US and China line up a trade deal. And Veronica Clark of Citi looking ahead to the Fed rate decision. We begin this hour with stocks rising on signs the US and China are closing in on a trade deal. Alistair Pinder of HSBC writing, global equities can continue to grind higher from here. We don't think we are in bubble territory just yet. Alistair joins us now for more. Alistair, good morning. It's good to see you.
Thank you. Thanks for having me.
So three big events: trade talks, Fed decision, earnings.
Yeah.
What's the most important one for you this morning?
That's a great question. I would say earnings. I think people, I've done a lot of marketing. I was in Asia the last couple of weeks. The number one question from clients is, are we in an AI bubble? I'm in every single meeting. So maybe that convinces me that we're not in an AI bubble, but I think that's going to be the key catalyst this week. I mean, the earnings season so far has been amazing, right? 87% of beats. We're running at 10% growth year on year. I think if the Mag 7 can continue to deliver, that continues to drive a lot of upside. I think the next biggest one for me will be the China trade deal. I think if we just get any kind of agreement, it just starts to ease more and more trade uncertainty, and we can start looking more aggressively into the upside risks into 2026.
Well, let's start with earnings. So massive week, Wednesday, Thursday. There's been a ton of spending. There's going to be even more through next year as well. Are we testing the limits of investor tolerance around all that CapEx?
I think we are. I mean, we're definitely, people are asking a lot of questions. I think the question now is, though, can you monetize that? That is the number one question. And I think this is where you're going to be looking deeply into the earnings call at this point and being like, to what extent is Microsoft and these other, big enablers able to generate profit from all of this CapEx growth at this perspective? I would say, the Mag 7 have historically done a phenomenal job of proving that they can generate huge return on investment. But I think, again, the key question for me that I've been having is, what are some of the AI hedges? What are some of the ways that we can basically mitigate some of the risks if they can't generate the profits on these CapEx?
I want to understand what we're pricing in, because it's one thing to say, look, they've been generating a ton of cash and they're expected to beat by something like 15% this particular quarter. That is the lowest beat, though, in terms of these companies going back to the beginning of 2023. How much of the spend that we know about is already baked in? How much do you need to see some sort of extraordinary profiting from some of the investment to really get excited?
Well, I think if you look at the valuations here, I mean, the valuations for the Mag 7 are basically in line with their median over the last 10 years. So again, it kind of indicates to me that we're not necessarily pricing in the most bullish of scenarios for the Mag 7 here. And I think there's certain areas of the market which are massively underpricing some of the AI upside. I think one of the biggest narratives for the market going into 2026 will be around the AI adopters, those companies that are using AI, saving costs, becoming more productive, and increasing their margins going into next year. I just don't think that's priced at all, and we're seeing a lot of evidence from the earnings season this quarter and last quarter that companies are actually generating upside from
the broadening out trade.
Exactly.
That's sort of where you're seeing this going to be potentially as playing out. The other point that you're making is you think that the China-U.S. talks are really going to be a significant driver and a potential upside. Everyone's been saying that, but has the downside ever been priced into stocks? I mean, has anyone actually considered a true break in this relationship?
I mean, I don't think the true break in this relationship has been properly priced. I mean, if we don't get a trade deal this week, I think that is going to be a big scare for the market. I think the market is pricing this in terms of a game theory kind of aspect here, which is that the downside risks for both parties is just too big if they don't come to a trade deal. But I think, we saw with China just a couple of weeks ago with the rare earth materials and some of the comments there, how much that can unnerve markets. The S&P 500 down a couple of % on that. I think if we just move past all of this uncertainty, that will give another leg higher. And again, you see that in the futures today of just how much the market is reacting to this positively.
But this isn't actually a deal. It's really a delay, because the rare earth issue is going to be deferred until next year. How much is this just kicking all these nerves and concerns about China down the road?
I mean, I guess it is. I mean, again, this is where the details are really going to matter, right? Where I think if there's some element of a framework, I mean, this is what they keep on saying, it's a framework from what, soybeans, the rare earth materials, TikTok, all of these different things. If that framework seems firmly in place, I think, the markets will kind of look past that and start to price that in aggressively, even if the details, specifically on the agreement aren't particularly fleshed out.
China calls it a preliminary consensus. Doesn't that feel like China's going into this with less enthusiasm than the United States? A preliminary consensus?
I mean, I think it shows you that China is, it feels like they have leverage and that they want to try and get a good deal for them. Like I say, I think a good deal for everyone is something which is definitely an option, and it feels like that's on the cards. And if we start to price out this trade risk, which has just been bugging us all year, we really start to price that out, and we start focusing on to 2026, where a lot of positive narratives are coming through. Fed easing, a potential increase in growth. Also, China, specifically with their 5-year plan, what are they going to do when they start fleshing out details there? I think that, again, is just more and more catalyst for upside for global equities going into next year.
So what are we taking for granted? And you used the phrase there, Fed easing. And I just wonder to what extent the Fed can guide beyond this meeting this coming Wednesday.
Well, this meeting is extremely difficult, right? With all the lack of data they have, I mean, they're in almost an impossible position. I think the market is pricing in a lot when it comes to Fed easing next year. I think the biggest downside risk for me is, what if the Fed can't ease as aggressively because inflation is sticky, because maybe growth is too strong, and that actually causes the bond yields to start backing up a little bit, and that causes valuations to contract. That, for me, is the biggest risk, but I don't see that materializing in the market until probably Q1 or Q2 of next year.
I see this across the board on Wall Street coming into this week from Bank of America that Powell can't give much forward guidance for December. Deutsche Bank saying essentially the same thing. Chair Powell is unlikely to provide clear signals about the policy path ahead. Do you think there's some scope for disappointment this Wednesday Wednesday afternoon?
I don't think there's scope for disappointment. I think it just basically means that things are going to be left unchanged. I completely agree with that narrative, which is that if you don't have much scope to provide a lot of guidance, why shift your view dramatically here? Why not wait until you get more clarity on the data front? I think one of the interesting things, when it comes to the US, is that there's still $10 trillion of cash or money sitting in cash. $4 trillion in time deposits. That's really held by the retail investor, which is very sensitive to changes in interest rates. So if the Fed cuts again and then they cut again in December, I still think there's a lot of money here which can go out of cash and move into equities.
This is the whole idea that people have been expecting, right? The cash on the sidelines. What will it take? Some cuts from the Federal Reserve. Where does that cash go? How much do you think stays in the U.S.? How much do you think goes elsewhere?
If you're a U.S. investor, I think you see the S&P 500, you're going to feel, I think it can feel difficult to feel compelled to put that money in international equity markets. I think it's going to stay home, to be honest with you. And then the question is, well, at home, where do you put it? Do you start putting it into higher yielding, fixed income? Well, spreads are near record, lows. So why not just put it into equities at this point? And that's the market which I think is driving, the biggest returns at this point. So I still feel like there's this allocation of cash going into equities here.
Okay, which is interesting given the duration trade that some people say will benefit significantly. I'm trying to square from your notes, you were talking about how you are really bullish on emerging markets.
Totally.
And right now, you're making a huge argument for the United States, which is the epicenter of tech. How do you square that
Because I'm super bullish on emerging markets. That's why. So, two things that I think are really compelling for EM at this point. One is the dollar, right? The dollar's going to weaken. That naturally is a big upside for EM. And the thing which I also think just goes really isn't really touched on enough when it comes to EM is that EM is a growth market, right? EM has 40% of its stocks are in essentially techie areas. And guess what those tech sectors, aren't doing? Tons of capex like the Mag 7. So if you are a global investor and you're scared about the Mag 7 and the capex story, why not just reallocate a little bit to EM Asia Tech here? And we're starting to see that from global funds. And so I think that's one of the reasons why I think, Asia and Asia Tech and EM as a whole can do very well next year.
Two very different approaches, Asia versus the US when it comes to tech. Alistair, I appreciate your time. It's good to see you. Thank you, sir. Alistair Pinder there of HSBC. Equities doing better today worldwide. With that, bond yields are a little bit higher across the curve. 10-year bond yields up by 2 basis points. We will get some supply this week. Later on this afternoon, $70 billion of 5-year notes. Tomorrow, $30 billion, or rather $44 billion of 7-year notes, and a potential for a lot of corporate debt issuance this week as well. Yeah, keep an eye on that too.
We might get that $38 billion of Oracle bonds that people were talking about last week. How much does this affect anything, or is the demand so insatiable that it overwhelms any supply? It's a really good question. This is a lot of supply this year, this week. This year, it's like a week. $69 billion of 2-year notes, as you mentioned, $70 billion of 5-year notes, and $44 billion of 2-year notes in 2 days ahead of a lot of these big tech earnings.
10-year bond yields this morning higher by 2 basis points, 4.02% on a 10-year maturity. With an update on stories worldwide with your Bloomberg Brief, let's cross over to Yahara for more. Hey, Yahara.
Good morning, John. President Javier Milei's party won Argentina's midterm vote. Milei said he'd have the backing of 101 members of the lower house and 20 senators, protecting his veto power. The result allows him to pursue free market policies with billions of dollars in backing from the Trump administration. Meanwhile, the U.S. and China are closing in on a trade deal. Both sides spent the weekend in Malaysia coming to terms on a range of issues, including export controls, fentanyl, and shipping fees. Treasury Secretary Scott Bessent says President Trump's threat of a 100% tariff on Chinese goods is effectively off the table, and he expects China will make substantial purchases of American soybeans. Secretary Bessent also announcing he's narrowed down the list of candidates to succeed Fed Chair Jay Powell to 5. Speaking to reporters aboard Air Force One, Bessent said the candidate pool is made up of Christopher Waller, Kevin Warsh, Kevin Hassett, Michelle Bowman, and Rick Reeder. President Donald Trump says he expects to make a decision before the end of the year. That's your Bloomberg Brief. John.
Yahara, thank you. Thank you very much. More from Yahara in about 30 minutes' time. Up next on the program, teeing up a trade deal.
We're going to have a great talk. I have a lot of respect for President Xi. I like him a lot. He likes me a lot. I think we're going to have a successful transaction.
That conversation up next with Elizabeth Economy of the Hoover Institution. Live from New York City this morning. Good morning. We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones, Erica Ayers-Badon, Robin Arzón, Justin Tuck.
Stay tuned. You won't want to miss it.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
What a week coming up, full of earnings. Check it out. Wednesday, Microsoft, Alphabet, Meta. Thursday, Apple, Amazon. The biggest week of earnings season is just around the corner. In the equity market on the S&P 500, positive by 0.9%. Two-day winning streak into Monday, two-week winning streak coming into this week. On the Nasdaq 100 this morning, the mount-up begins early, up by 1.3% on the Nasdaq 100. Under surveillance this morning, teeing up a trade deal.
What we understood yesterday or 2 days ago or even today is not going to be necessarily what it's going to be in 2 days. I mean, we're going to have a great talk. I have a lot of respect for President Xi. I like him a lot. He likes me a lot, I believe, and respects me, and I think he respects our country a lot. And we're going to have, I think we're going to have a successful transaction for both countries.
So here's the latest this morning. President Trump hailing progress in recent trade talks with China over several key issues ahead of his big meeting with President Xi on Thursday. Bloomberg's Tyler Kendall joins us now from Tokyo for more. Tyler, welcome to the show and good evening to you, Tyler. The tone already pretty good coming into Monday.
Yeah, hey, John. Good evening where I am. Good morning to you. And we have seen some encouraging signs from really both sides in what feels like a marked contrast compared to the escalation of recent weeks. Most notably, the U.S. Treasury Secretary Scott Bessent saying that he and his trade counterparts have essentially teed up this framework for President Trump and Chinese President Xi Jinping to finalize when they meet face-to-face later this week. The general understanding here is that this is likely going to result in an extension to the trade truce that is currently in place and set to expire on November 10th, though we are gleaning some additional details on what it could entail. The Treasury Secretary going on to suggest that Beijing is going to delay and review its recently unveiled export curbs related to critical and rare earth minerals that are set to be enforced on December 1st, and also that China is going to resume its purchases of U.S. soybeans, though at this point there are still some big questions here about how much and how quickly American farmers will see relief. Now, according to U.S. officials, the U.S. isn't going to loosen any of its curbs related to advanced semiconductor chips, but I will say that our own analysts at Bloomberg Economics say that they do expect the U.S. to take off the table those threatened but not yet imposed curbs related to the supply chain, including on critical software and cloud computing that we've seen floated in recent weeks. Now, importantly, I'm watching really closely what's going to happen to that 20% tariff tied to fentanyl concerns, as both sides say they've made progress on the issue. And then in terms of what China is looking for, we've heard from Chinese officials that the U.S. is going to no longer impose fees on Chinese ships that are docked at American ports. John, there is a lot to look out for here, but one thing that's emerging is that it appears that the White House is trying to use the stops ahead of Thursday's meeting to gain additional leverage. Just look at the critical mineral deal signed with some Southeast Asian countries over the weekend, all in an attempt to loosen China's grip on the global market.
Tyler with the latest. Tyler Kendall over in Tokyo, Japan. Tyler, thank you very much. The market's treating this as if it's just inevitable now. Equity markets are higher by 0.9%. Equities are up globally. Is there anything inevitable about this coming Thursday?
Well, this is the bar. They have to at least meet this or exceed it on Thursday, or the market is going to come back with a vengeance. But I think this was always going to be the base case. We're pretty much going back to what they agreed upon months ago. All the threats of the prior 2-3 weeks just being taken off the table. The real issue is, can the United States do enough of these mineral deals in time for when China starts to re-examine the rare earth export controls in a year's time.
Joining us now to discuss is Elizabeth Economy of the Hoover Institution and the former White House senior advisor for China under President Biden. Elizabeth, welcome back to the program. I'm going to ask the following question. Forgive the snark, but if we're still talking about soybeans, how much progress are we actually making?
Right. I mean, I think it's a fair question. Look, this is great news, and I think it does amount to a trade reset. But it's absolutely fair to note that, really, with the exception of the TikTok deal, that all of this just brings us back out of the hole that we ourselves have dug over the past 9 to 10 months since the administration came into office. So there's no real trade advance here. There are no new deals being struck, except for the fact that, yes, we're hoping to get soybean purchases back to where they were in 2024, because they've essentially fallen off to zero over the past few months. So I think, let's be happy that we're getting some stability back in this relationship, but let's also just acknowledge that we created a huge problem, and now we're basically just, solving that problem.
Well, Elizabeth, did the United States create the problem, or China with their unfair trade practices and also really ratcheting up the rhetoric when it comes to the rare earth export controls?
Well, the rare earth export control issue, really didn't begin in any way that we've seen right now until we started this whole trade war. Sure, there were some restrictions on critical minerals that were put in place during the Biden administration and then again early in the Trump administration, but that's vastly different from the move that they just made. And I think they have an interest at this point in taking a step back from that as well, because that wasn't just targeted against the United States. That was a global, sort of new licensing and export control regime on rare earths that they were putting in place. And I think they did not expect the backlash that they faced. And I think also just it's a very difficult thing for them to enforce. So they want some more time to figure out, is there more nuance in how they would do it? What would this actually look like? And so I think for them, they're taking this step back is actually a good move.
China's threat on the rare earth export controls saw the Europeans really up in arms, even as far as they said they're willing to use the anti-coercion tool. Did China bring Europe and the United States together in this sense?
Yeah, I think one of the disappointing things for China, frankly speaking, with the advent of the Trump administration, I think China believed that they had a huge opportunity to draw closer to Europe, and that just hasn't materialized. And it hasn't materialized in part because of China's, economic support for Russia in terms of its, war against Ukraine, and because of China's export of its overcapacity. These are two pretty existential issues for Europe, and this just added a third issue. Sort of this big regime on export controls, big export control regime on rare earths. And so I think all of those things really kept the United States and Europe more, close together than probably one would have anticipated given the nature of the Trump administration and its overall relations with Europe.
It seems like there are moving targets, and right now the ultimate one is really the rare earths issue, the soybeans issue, and the big tech issue, the question of technology exports to China. Those seem like the main issues that are resolved in clear priorities for both sides. Do we have a sense of what else is on the table, what else is being discussed, and where there might be some overlap or agreement on some of those issues? I'm thinking of Taiwan. I'm thinking of different national security efforts. I'm talking about source of origin when it comes to evaluation of goods when it's imported to the United States?
Yeah, I mean, I think, President Trump has mentioned his desire to have a larger deal, a peace deal that it's, that we're going to work out with China. I mean, frankly, my hope is that that's going to be focused on Russia, Ukraine. One could also imagine maybe we would tackle an incredibly, important issue around Myanmar. I think on Taiwan, which, has been there's been a lot of discussion about that here in the United States, whether the president is interested in somehow folding Taiwan into some deal, which we know the Chinese would like, right? They would like to see us take a step back, for example, from our export of arms to Taiwan. Secretary of State Marco Rubio just said that Taiwan is off the table, that Taiwan is not going to be part of any larger deal between the United States and China, at least for now. So I think, that's, hopefully we can put that to the side because I don't think we want to be negotiating away Taiwan's, sort of the degree of sovereignty that Taiwan has today. way. I think there are other issues. You mentioned, we still have tariffs on China that are quite significant, 55%. That those don't seem to be overall being rolled back. I think that your reporter mentioned the sort of 20% extra tariff on fentanyl. If there's progress on getting the Chinese to do more there, I think that would be great. We haven't heard anything about the investigations that are underway into a number of American tech companies, NVIDIA, Qualcomm, there's Micron, rumors of an investigation against Intel. These are all things that I think the United States should be pushing China on, because these investigations are also just about basically closing out our semiconductor firms, from exporting to China. So I think there are a lot of other issues, overcapacity from China. We're not dealing with the big structural issues in the Chinese economy, going back to the point that was made about unfair Chinese trade practices. We're not dealing with those. Those have not been on the table yet. Those are complex negotiations, and maybe after we, again, dig ourselves out of this hole, we could begin to move forward on a bigger, real trade deal that would get the Chinese to do some changes to their, fundamental economic model.
Liz, appreciate it as always. One of the best. Elizabeth Economy there of the Hoover Institution. The commitment to overcapacity in China is going to continue to stir up emotions in both the United States and in Europe.
Yeah, how much is China aware of the international relations aspect of this? How much do they really want to not press their luck too much when it comes to both Southeast Asia but also with Europe, right? How much are they trying to keep people close, keep your enemies closer than your friends? There is a feeling that part of why they're coming to the table is because of the outrage about rare earths globally.
Strategic misstep. They made a bit of a mistake in the past few weeks, I think, and you can see them trying to walk that back.
But at the same time, that mistake meant the United States was really ready to make a deal and almost running to the table because of what is going on with rare earths.
Futures this morning positive by 0.9% on the S&P. We still have a government shutdown. Week 4. Terry Haynes of Pangea Policy up next.
crises, 2 essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
In case you missed it on Bloomberg Tech Asia. I'm in a Nissan Aria with the latest ProPilot system developed with Wave's AI technology. Bloomberg NEF says we'll see a robotaxi fleet about 6 million strong on the roads by the next decade. And with many of these projects scheduled to deploy across the world in the coming year, the era of robotaxis may be arriving soon to a city near you. Don't miss Bloomberg Tech Asia every month.
More than $10 trillion of earnings on Wednesday, more than $10 trillion of market cap reporting again on Thursday. All of that still to come, and we rally into it and rally hard, up by 1.3% on the Nasdaq 100, up by 0.9 on the S&P 500, as it looks like we have a very constructive tone heading into this meeting between Trump and Xi this coming Thursday. In the bond market, 2-year, 10-year, 30-year bond yields this morning just a little bit higher. Yields up by 2 basis points. On a 10-year maturity, 4.02%. We have gone 4 weeks without rising yields following a softer inflation print just last week, helping to keep a lid on things this week. Just a bit of a supply test just around the corner.
Given the fact that we've got treasuries being sold 2-year, 5-year, and 7-year denominations, and that $38 billion Oracle sale, a real question whether the appetite continues, given that yields are fairly low relative to expectations coming into this, given the fact that now we don't care about inflation prints, we really just care about the employment picture, which, by the way, we're not getting.
Market's so comfortable with 3. It's kind of crazy how comfortable everyone seems to be with 3% CPI.
You know, I don't understand exactly why. Is it because they see the disinflationary force from artificial intelligence? Is it because of rent? Is it because of something else? Because if you look at a lot of the current issues in terms of goods, prices are going up at a faster pace, not a slower one.
Chairman Powell will have to wrestle with the communication around that story this coming Wednesday afternoon. As we count you down to the opening bell about 3 hours away. With your morning movers, let's cross over to Danny for more. Hey, Danny.
Good morning, John. Starting with some deal news this Monday. Novartis will be buying Avidity. It is an American biotech company. For Novartis, they have a lot of expiring generic competition on their way, so this gives them access to new and novel drugs. The price tag, $72 a share, so we're trading just below that. Shares popping by 44.5%. You also mentioned the constructive talks after 2 days in Malaysia and the hope that that will lead to something big and a bigger agreement on Thursday when President Xi and Trump meet. We're seeing a lot of the tech companies react positively to that. NVIDIA being one of the biggest leaders in the Mag 7, shares are up 2.5%. Also, as part of that, Scott Besson saying that China would delay their rare earth regime for at least some time. And you see the American rare earth companies fall on that. Of course, these are the companies that had gained with the expectations that exports from China would be curbed, so you have to go American. Now we're seeing MP Materials, for example, fall 4.6%. Critical Metals falls 7.2%. John.
Danny, thank you. Appreciate the update. More on that a little bit later this morning. On our radar this morning, big move in Argentina. President Javier Milei's party securing a comeback win in Argentina's midterm elections, giving Milei a strong new foothold in Congress and allowing him to protect his veto and push through his free market reforms. Elsewhere, the US and China trade negotiators coming to terms on a range of points, including export controls, fentanyl, and shipping levies, setting the table for US President Donald Trump and Chinese President Xi Jinping to finalize the sweeping agreement later this week. And finally, the US Transportation Secretary Sean Duffy warning travelers will face more flight delays and cancellations as the government shutdown continues.
What I see coming forward as we get to Monday, tomorrow, Tuesday, and Wednesday, that you're going to see more staffing shortages in towers, which means you're going to see more delays, more cancellations.
Air traffic controllers are set to miss their first full paycheck tomorrow. The pressure starts to build.
This is where a huge pressure point is mounting right now. You have more than 8,000 U.S. flights that have been delayed. Yesterday, LAX ground halt because of absentees, because of what's going on with air traffic controllers are not getting paid. And Sean Duffy was talking about the fact that these individuals are leaving their job, and to make ends meet, they're trying to find jobs at night, driving Ubers, becoming a DoorDash delivery individual. This is really an issue when it comes to the fact that we're just a few weeks away from November, Thanksgiving, when many Americans have to head to the airport and travel. And right now, neither Republicans or Democrats are blinking when it comes to the shutdown.
Elise, you've been talking to the airlines, United, American. What are they saying about what's just around the corner?
They're saying that so far there hasn't been an issue so far, and they're saying the longer this drags on, the more that they expect it to. But frankly, they don't exactly speak how they might feel, in the sense that they might have a lot of fear that people aren't going to show up, but air traffic controllers have already been under pressure with low staffing levels and low employment levels relative to the capacity that's needed. They don't want to deteriorate sort of morale further by saying it's your fault that we're all grounded. So they're trying to sort of toe a pretty delicate line here. When people start not getting paid, though, and we have to think that hundreds of thousands of people already have not gotten paid as a result of the government shutdown. Things start to change, behaviors start to change. People need to take that time off from work so they can go drive an Uber.
The airline guidance into year-end kind of speaks for itself. They're going to be okay.
They're going to be okay, but I can say they do honestly recommend that this get concluded soon, because they are concerned that the longer this drags on, the more it will have a deleterious effect on airline profitability.
Joining us now to discuss, Terry Haynes of Pangaea Policy joins us now for more. Terry, week 4. What's the date circled on your calendar when this gets real?
Oh, I think sometime right before Thanksgiving, I imagine. I've been saying since before the shutdown started that, not only was this politically generated, but that Democrats had the ability to decide when it was finished by merely by agreeing to continue to negotiate on the Obamacare subsidy temporary increase, and so they can do that. And meanwhile, the pain will continue to mount, as you all have talked about, and neither side ultimately is going to want to be the primary blamed for all this. So I think you probably have a truce called sometime before Thanksgiving.
Terry, something interesting happened last week where you had the 2 Democratic senators from Georgia decide to vote with the Republicans, and also a Senator Fetterman from Pennsylvania, in paying essential workers like air traffic controllers. Are we going to see more of that?
Yeah, I think so. There's going to be a lot of kind of one-shot bills with different constituencies that might not be getting paid and all that. But underneath that, what that shows is a kind of growing disquiet on the Democratic side with the shutdown strategy generally. They're willing to give their leadership the benefit of the doubt, but that's also wearing kind of thin.
We also have elections upcoming November 4th, a big one with the New York City mayor race and also governor elections and Prop 50 in California. Is that going to affect how certain senators show up to vote maybe after the elections take place?
Well, I think it affects how the senators make known to their leadership the willingness to continue. I've been telling people for a couple of weeks now that this was not a political opportunity Republicans sought, but it's one that they'll now seize. What they want on next week in November is to be able to say to the public, look, the Democratic Party is now the party of Mamdani, the new New York City mayor, and you have, I'm being Republicans here, you have Hochul and Jeffries and Schumer all kind of bowing to him, and that's the future of the Democratic Party. And then they also want to point out that the balloon likely gets let out of the Democratic centrists in Virginia and New Jersey. It's a little bit too much for them to hope that the Republicans win in either case. But what they will be able to say is, look, these people barely squeaked through in years where they should have done much better, and they haven't. So the balloon, the air's out of that particular balloon, and what you got is kind of the Mamdani party. And I think folks, frankly, in Midtown Manhattan underestimate just how powerful a message that is in the broader public.
How much does the shutdown really play into local elections like that?
Not much at all, really. There is more in Virginia than in New Jersey because you have a contingent in Northern Virginia. I mean, Virginia's turned a purple state, but it's turned into a tale of two states. If you're in Northern Virginia, you're in heavy government employee territory, and outside of Northern Virginia, you're not. But Northern Virginians are already, by and large, heavily Democratic and motivated to vote for the Democrat Spanberger anyway. So I don't know that it makes a huge difference otherwise, although they're trying to pump up. Less so in New Jersey.
Terry, I'm wondering what you think of Congress being shut down. The Congress hasn't come back to the table so far for another vote since, I believe, September 19th. And this has been a strategy for Majority House Speaker Mike Johnson, where he said, look, it's up to the Senate. The Senate needs to take action. Then Congress can get behind what they do. Do you think that that has been a prudent strategy or one that has really diminished the executive branch of the House of Representatives?
Oh, it's a very prudent strategy. You know, I know I'm aware the New York Times thinks it's not, but by and large it is. You know, he's got to herd cats every day. Johnson does, and you know, giving the cats a playpen in Washington, well, with a lot of microphones and cameras around him is an opportunity for mischief. So it's much better that he keep them out. It's also much better, frankly, for him that he defends kind of the institution of the House and what the House did on shutdown. And frankly say it's up to the Senate to figure it out. You know, it makes it easier for him on those two levels. So I think it's probably a good idea.
Terry, what is the future of the Democratic Party? Can we just finish on that? Governor Hochul gets booed everywhere she goes. Establishment leaders down in Washington, D.C. reluctant to endorse the guys leading at the polls here in New York City. What's the future of this party?
They're going to have to have I was going to say a cleansing, and that's obviously a bad thought, but the idea is that they've got to come through both generationally and in terms of ideas. They've got to reconnect with people and not just pretend to. They've got to try to figure out how to move people forward. We've had a generation here, and I'm indicting both parties by saying so, we've had a generation here where people have decided to play politics instead of solving problems. The party that gets back to solving problems first and best wins. There's a high perception that the Democratic Party now is the party of rich people and has completely disconnected from its working roots, and the Republicans have come into that hole. Democrats have got to get back to that and get back to figuring out how things ought to run and what they are actually for, or you know, kind of all the Hollywood this or that or the other isn't going to make a difference.
Terry, appreciate it. Terry Haynes of Pangea Policy. Thank you very much, sir. I don't think you can overstate the importance of this upcoming election, setting the tone for elections still to come in this country for the next few years.
Yeah, especially because the Democratic Party cannot understand exactly what it is. And it hasn't really come up with a comparable message other than we're not Trump. And that doesn't fly. And we have seen that repeatedly. So it's a real question. Do they coalesce around the Mamdani kind of point of view? Or do they coalesce around something that is a more traditional institutionalist type of view? And ultimately, this is the fight on the Republican Party also. It just is being manifested maybe less successfully just by virtue of the polls and some of the results in the Democratic Party.
Well, this is why Zohran Mamdani has actually been successful. He hasn't made every stump speech about I am an anti-Trump person. He's actually made it about the issues New York City residents complain about. Why is everything so expensive? Why is rent so expensive? He has talked about affordability every single time. So has Bernie Sanders, and so has Congressman Alexandria Ocasio-Cortez. All three of them last night at Forest Hill Stadium, taking a huge bow to a sold-out stadium that came to see them. I mean, he is winning this mayoral race, and it's going to have national implications on this party.
Big time. The risk is their policies just make those problems a whole lot worse. Equity futures on the S&P 500 up by 0.9% this morning. Equities advance with an update on stories worldwide. With your Bloomberg brief, here's Yahira Anand. Hey, Yahira.
Hi, John. President Donald Trump oversaw the formal signing of a peace deal between Thailand and Cambodia. Trump attended the ceremonial signing event with the leaders of the two nations in Malaysia, which helped facilitate the talks. The president also announced a trade deal with Cambodia and a framework trade pact and critical minerals agreement with Thailand. And Barclays is heading back to Saudi Arabia. After exiting the region 11 years ago, the British bank has revealed it is in the process of securing a license to conduct investment banking activities in the country, alongside plans to open an office in Riyadh next year. Barclays follows similar moves from JP Morgan and Goldman Sachs. And President Trump is ruling out the idea of running as a vice presidential candidate in the 2028 election. He made the comments aboard Air Force One this morning, responding to calls from some supporters who've urged him to find a way around the Constitution's two-term limit. Trump has declined to rule out seeking another term despite that restriction. That's Bloomberg Brief. John?
Yahara, thank you. Appreciate it. More from Yahara in the next hour. Up next on our program, locking in the next rate cut.
The labor market's weak. Growth seems to be on the stronger side, which is a bit of a puzzle right now. You don't want to make a mistake. So the way to avoid that is to go, cautiously or carefully and do 25, wait and see what happens.
In a few minutes' time, we'll catch up with Veronica Clark of Citi from New York City. You're watching Bloomberg TV.
Right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones, Erica Ayers-Badon, Robin Arzón, Justin Tuck.
Stay tuned. You won't want to miss it.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Record highs on Friday, more in store this Monday morning. Good morning to you all. Equities up by 0.9% on the S&P, on the Nasdaq 100, up by 1.3%. Under surveillance this morning, locking in a rate cut.
We're not getting the public data, but everything we're getting is telling roughly the same story. The labor market's weak. Growth seems to be on the stronger side, which is a bit of a puzzle right now. You don't want to make a mistake. So the way to avoid that is to go, cautiously or carefully and do 25, wait and see what happens.
So here's the latest this morning. The White House naming 5 finalists to replace Fed Chair Jay Powell, including Governor Chris Waller, with the Fed widely expected to cut rates at Wednesday's meeting. Joining us now to discuss is Veronica Clark of Citi. Veronica, good morning.
Good morning.
Rate cut nailed on for Wednesday. Can't seem to find anyone who disagrees with that. How much guidance can they provide beyond Wednesday's meeting?
Yeah, probably not a whole lot. We haven't had any data, of course. I think if anything, the data that we have had, obviously CPI on Friday, should give them a bit more confidence that, yeah, inflation is slowing, labor market is weakening, but they probably can't give us a whole lot of guidance right now. We have no data.
How comfortable should we be with the data we have got, which is inflation at 3%?
Yeah, I mean, it's not where the Fed obviously wants to be, but I do think they'll find some encouraging details in that data that we got on Friday. We had particularly soft shelter inflation. I think that will be an encouraging development. We haven't seen, a ton of the tariff-related inflation. Maybe more of that is still coming, but I think this is slower details than they should be comfortable with. Yeah.
I thought also the owner's equivalent rent was really interesting. The fact that it came down to the lowest going back to 2021. I was looking at this thinking, okay, well, I can buy this story. And then a couple of people messaged me and say, all right, you numbskull, this is backward-looking data that was done over the past year and is completely lagging. And when you look at current indicators, they show something different. What's your response?
Yeah, I don't actually think the current indicators show anything that different. It is a very lagging indicator, of course. But when you look at all the forward-leading measures, Zillow, new rents, home prices have been falling for a lot of this year. It seems like that kind of trend can continue.
At the same time, you are seeing other points spike upward, in particular, some of the good sectors, and you see a lot of companies saying that they're still going to pass along additional price hikes. At what point do you start to look at this and say it's not so clean? Even though we already knew it wasn't so clean, it's even more difficult to really discern what's going on.
Yeah, I mean, relative to how we were forecasting the tariff pass-through maybe 6 months ago, though, I think for most people, we have been surprised that we haven't seen more pass-through at this point. And I think that, unfortunately, does speak to consumers just can't handle these big one-time kind of price increases. It has to be spread out over many months, which could give the appearance that, yeah, inflation is maybe a bit sticky, but it's still that softer demand backdrop that means you can't pass on these big price increases all at once.
Doesn't it also mean that corporate America has been resilient in terms of mitigating some of the price hikes?
Yeah.
So what does it mean for next year? Do they start to maybe have to lay people off?
Yeah, I do worry that the more you can't pass on the price increase to consumers, that is eating at profit margins for longer. We already know that businesses are trying to cut labor costs, and they've been doing that through not hiring anyone. But I would worry that you can only not hire people for so long before the next step is layoffs. We don't see the signs of that yet, but that is, I think, still a risk.
We're in this data desert with the 27th day of a government shutdown. We had the inflation on Friday, but that was one and done, according to the White House. How long could the Fed continuously cut rates if we remain in a government shutdown and don't have data?
Yeah, it's getting tricky, obviously, because there is the division among Fed officials, a group of people who maybe don't want to cut anymore at all, and people who want to cut each meeting this year. It is hard, but I think the shutdown itself, if it really is lasting that long, that is a drag on growth in itself.
Except we won't see the data. That's where the risk management argument loses some oxygen, I think, in the next meeting in December. If you don't have the data to convert the hawks on the committee, how are they going to vote? And how are they going to forecast into next year?
I mean, we'll have to deal with the data that we do have. Obviously, we'll have the surveys. ISMs probably get more important. The Fed will probably put more weight maybe than I would on something like ADP employment. But yeah, it is tricky.
Are you seeing sufficient deterioration in the other indicators?
It doesn't seem like we're getting that break yet. We fortunately, probably one of the best data points to have, we are getting claims. We are getting the weekly jobless claims data. We just have to aggregate it ourselves from the states. We have seen continuing claims starting to tick up again. Initial claims are still low, but that's going to be an important one to watch.
Let's sit on initial claims. Does that give you and the team pause? That maybe the labour market's not as bad as you and some of the dubs on the committee thinks it is?
Yeah, it is tricky. We're getting into the time of year, which this happened last year also, where there is this residual seasonality pattern in the data where we had the weakness in summer 2024 and then things seem to stabilize. I think that seasonal pattern comes from this lack of hiring. This is a time of year when you're not usually hiring a bunch of people, but you're not laying anyone off either. The issue is when we saw that happen last year, it never got better, right? We just repeated it this summer.
How much does the QT plan really matter, the balance sheet? And there was some flirting with that in some of the recent speeches from Fed Chair Jay Powell, that they were planning on stopping some of the shrinking of their balance sheet. Is that important to understand what the directionality is for them in terms of policy?
Yeah, I think maybe my takeaway from it is just a lesson that the Fed is extra cautious, right? When we started to maybe get to the point where maybe reserves are not so abundant, maybe they're just ample, they're maybe talking about ending it earlier. I don't think they'll announce anything this week. It's maybe end of this year into Q1, but they are extra cautious when it comes to everything.
What's the takeaway from you and Andrew, that you've had an ultra dovish Fed for a long time, you've had inflationary shocks, you have an ongoing inflationary shock, and that the knee-jerk response is to risk manage to the downside in the labor market, regardless of what John was talking about, that 3% inflation rate. How do you understand why the market isn't pricing at a greater degree of inflation longer term?
Yeah, I mean, it maybe speaks to some confidence in the Fed, right? We haven't seen long-run inflation expectations going higher. If we did see that, obviously that's a game changer. But I think the market is taking what we see in the labor market data, and that is not a scenario that creates inflation, right? A weaker labor market.
There's been a huge freak out about the erosion of institutional credibility. It's just when you look at market-based indicators, don't quite see the same thing.
At all. I mean, if you take a look at long-term inflation expectations, they've come down in the 10 years, the cleanest read on that. I just thought it was notable. In an interview in the Financial Times over the weekend, Scott Bessent talked about his strategy. What he said is, we want the most America-first policies that are possible without incurring market wrath. And he was saying, unlike most of my predecessors, I have a very healthy skepticism of elite institutions, but I have a healthy regard for the market. And that is very much a focus of as he goes through crafting policy.
Yeah, and he almost felt vindicated in that interview. He was talking about where the hell is the market risk. He's looking at basically all-time highs when it comes to the S&P 500. I also think it's interesting when it comes to the Fed. The president told us we're getting a Christmas gift end of the year. We will have a name by the end of the year of what next year potentially policy path forward will look like.
I think the Treasury Secretary's done a good job of buying time on that issue. Just stretching things out, delaying things into year end. There was a feeling at one point in the summer you'd get that decision maybe around September time. It's been pushed out a number of months.
But remember, that's when they were jawboning Mr. Too Late Jay Powell, and the president had called him. Now that the Fed is cutting, I think it's the Fed that gave the Treasury time to make this process a little bit longer than they were expecting.
Just quickly, Veronica, of the names on the screen, you and the team got a pick yet?
No.
Don't want to go there?
No opinions, yeah.
Too soon. Okay, Veronica Clark of Citi. Rick Reed is still in the mix. We're down to 4 or 5 names. It's a decent, solid group of names.
Yeah, we've been down to this 5 group of names for about, I don't know, 2 months now. I mean, the funny thing to me is that they are prolonging the discussion in the popular narrative, that they want to keep the pulse of there is going to be another Fed chair, but we're not going to undermine Fed Chair Jay Powell just yet, because ultimately it will be a test of the new Fed chair. This is a great, kind of exercise in gamesmanship.
Going to be playing this game into year end. Coming up on the program, Brian Nick of New Edge Wealth, Jeanette Lowe of Strategas, Vito Spaduto of RBC Capital Markets, Greg Peters of PGIM Fixed Income. The second hour of Bloomberg Surveillance up next.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
NYK's sustainability efforts have produced a breakthrough. The tugboat Sakigake is the world's first ammonia-powered vessel in commercial use.
LNG can decrease emission of the carbon dioxide compared with the heavy fuel oil, the 25% more or less. But ammonia, 95% decrease can be achieved.
According to Bloomberg NEF, ships powered by LNG and other alternative fuels make up nearly 40% of the global shipping order book.
This is funded by the NEDO, so-called Japanese agency, and also the NEDO has the kind of the GI funds and the Green Innovation Funds. And also the Japanese government is supporting the usage of the ammonia as the power-generating fuel.
It's more expensive than normal standard fuels.
Yes, it is. And at this moment, and the supply of the ammonia volume is very much limited compared with the LNG and also the heavy fuel oil. But in order to promote ammonia as a marine fuel, together with the other industry players, and we can have the kind of the mass production, then the cost will be decreased. Then the next 10 years, we try to increase the number of the vessels powered by the ammonia.
In case you missed it, on the opening trade. Rates are on hold. I think rates being on hold is appropriate for the current period. If they tighten more, then we have to loosen later. More than a year ago, I talked about that being a policy boogie.
Yep.
And I thought that's not a good thing for monetary policymakers to do. The hold is appropriate at this point.
Avoid dancing.
Of course. Don't miss the opening trade live every weekday.
Didn't really think I had a problem.
I would isolate, self-medicate. Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/finds treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/finds treatment.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily. Every business day at 2 p.m. Eastern, only on Bloomberg.
Have a very resilient and robust economy.
Heck with robust. I will take resilience is what I like.
Inflationary pressures outside of some tariff-related pass-through are pretty benign.
The Fed would be well served to be very cautious in this environment.
The Fed will become increasingly under pressure.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. All-time highs into the weekend. We're looking at record highs on the cards this morning. Equity futures up by 0.9% on the S&P, on the NASDAQ up by 1.3. Equities up, bonds down, yields just a little bit higher throughout most of this morning on 2s, 10s, and 30s. 10s up 2 to 4.02. Going into just a monster week. Earnings, loads of them from tech. A Federal Reserve decision coming on Wednesday. The day after that, a meeting between the leaders of the two largest economies on the planet.
It's truly all of the main themes of this year wrapped into 1 week with a lot of activity. You've got the tech boom and how much you can see the ratification of that with the big tech names reporting, Microsoft, Alphabet, and Meta on Wednesday, and then Apple and Amazon on Thursday. Then there's this question of how does the Fed respond to a data desert? They will respond by cutting interest rates, but can they guide beyond that? And then there's this question about whether you do get a true resolution in some of the trade tensions between China and the U.S., and then whether we've priced out all tensions already based on some of the market moves this morning.
The tone over the weekend just so much better. Secretary Bessent offering us a guide into this meeting on Thursday, and the president almost doubling down on it on Air Force One.
Yeah, the issue I have with this is this really a deal or is this a delay? It feels like it is a trade war postponement when you think about the fact the Treasury Secretary is saying that the rare earth export controls are being deferred on the Chinese side for maybe a year. So this story is going to bleed into 2026. What we have right now is basically coming back to where both these countries were in May when it comes to the tariff levels, except maybe on fentanyl, and when it comes to rare earths.
Mark is comfortable with that. Doesn't want resolutions. Just does not want additional problems going into year end, particularly at a time where a lot of corporate clients have re-engaged. The spending has continued, and there's a real sense there's a ramp, or could be a ramp, into 26.
It's so funny to me that we hear a greater degree of certainty from every company that we talk to, from every investment manager that we talk to, and yet we're still talking about the same trade issues between the U.S. and China and a potential ratcheting up and ratcheting down of the same heated issues over and over again. It just raises a question, are people understanding that both sides are not going to necessarily mutually assure destruction of one another's economies, and they're going to come to some resolution that isn't going to cause cause a fissure in the relationship. And I think that really is what people want to see, that status quo continue this week.
Big bounce this morning, up by 0.9% on the S&P 500. Coming up this hour, Brian Nick of New Edge Wealth with futures climbing ahead of big tech earnings. Jeanette Lowe of Strategas as the US and China close in on a trade deal. And Greg Peters of PGIM with the Fed flying blind into their next interest rate decision. We begin this hour with stocks at record highs with the Mag 7 facing an earnings test. Brian Nick of New Edge Wealth writing, we are following upward earnings revisions, not rising valuations. Brian joins us now for more. Brian, good morning.
Good morning.
How resilient is the bull case into this week?
We think the earnings case is resilient. We wouldn't be betting against good earnings reports, not just this quarter, but in the quarters ahead. And we think that especially the Mag 7 and tech generally, the expectations for 2026 look pretty reasonable. It's the rest of the market that we're a little bit more concerned about with the 30 or 40% expectations for smaller cap companies to grow earnings into 2026. We don't see as much scope for that. So we don't want to be quite as concentrated as the market, but we don't mind being in tech.
Well, let's take last week, cyclical tilt, outperformance in small caps. Another head fake?
The problem with the small cap trade is there's two things going on at the same time. There's the general optimism with interest rates coming down, with the economy looking resilient, and again, in the absence of data. And then there's a speculative trade, which seems to be correlated more with things like precious metals and just tends to be lower quality in nature. We don't want to be in companies that are not profitable, where the valuations, as we said in the quote, are rising without any earnings. We saw some of this in China too. One reason we've taken some China exposure off, the same kind of reason. We've seen this 30% rally in a single quarter. That's where we're taking some risk off the table. We'd rather be in something like the S&P 600, which has some tests around profitability, quality, rather than the Russell 2000, which has really been driving things over the last 4 months.
Why is momentum not a leading indicator? Why is the fact that momentum, the sort of less profitable companies and some of the meme stocks and some of the more inflated trades losing steam, not a warning sign to the rest of the market and sort of an idiosyncratic hole that people are shrugging off?
I think it's because the other indicators on positioning on sentiment don't look quite as frothy as the high momentum trade. If you look at the AAII, individual investors still don't look overly bullish on this rally. If you look at positioning, it doesn't look unusually stretched, maybe slightly. So the other things, if we had all those things flashing red, I think that would be more of a concern. And again, we're not enthusiastic about chasing the momentum stocks here. Typically, momentum's having a really good day. Our strategies are not doing as well. We want to be in the higher quality areas that are waiting for the earnings reports to come in, because that's what's going to tend to drive the results.
What are you looking for with the Magnificent Seven stock results? I mean, the earnings results. We're expecting to see some kind of $360 billion in CapEx spending from the likes of Microsoft, Alphabet, Amazon, and Meta so far this year, $420 billion next year. Is that a good thing? Is that a bad thing? How much are you depending on it going up or going down? What's your sort of tell?
Yeah, it has to be. It's sort of a perpetual motion machine at this point, right? We need to see continued forward guidance looking positive, continued plans for CapEx among the hyperscalers, and then continued profitable sort of outlooks for the NVIDIAs of the world and the chip makers. So all these things are sort of mutually reinforcing. We don't think that's a bubble for now. It's certainly not a bubble in valuations, but we think it ends up being potentially a bubble in earnings down the road. The expectations can't keep ratcheting up, but we think for now, with the economy, with the beneficial sort of Fed cuts happening, and with all signs pointing to generally good risk appetite among investors, that this is going to keep going for a bit.
Brian, you're punting. What does for a bit mean? What's the timeline?
We don't have a recession call certainly for this year or for early 2026. So that means, in the absence of a recession, we think this market continues to move up. The rest of the economy to us doesn't look nearly as good. We're not seeing it in the data because the data's not coming out. But when you look at the ADP numbers from last week, the smaller companies, and I think one thing I'm going to be looking at this week is the Dallas Fed manufacturing survey, not just the survey, but the comment section. Those business owners have been pulling their hair out about tariffs and about interest rates. And those people are not part of the Mag 7, right? They're not going to be reporting earnings, but those companies are hurting because of the underlying economic conditions. So the market and the economy are, again, two very different things for us.
So is your expectation that even if we don't have data, the Fed continues on a rate cutting cycle for this year?
Certainly for this week. I think we will start to have data by the time the December meeting comes along. That's our expectation. So in the absence of any kind of break in the trend, it looks like they do continue to cut interest rates. The market may be overpricing rate cuts for next year. Again, unless the labor market falls apart, in which case we are dramatically underpricing the degree to which they will ease. And this is why we are not rooting for more rate cuts, because more rate cuts from what's priced in means that the economy is tipped into recession, if not something close to it.
Just want to pick up on something you said. The market and the economy are not the same things to us. It's an important distinction to make, an obvious one at times as well. Are there limits to that for you and the team?
Sure. So you look at things like how much of the economy is being driven by capital expenditures on things like software and hardware related to AI. Part of it is that the money that's going there, if in the absence of an AI boom, would be probably going to other areas. There'd be more construction happening on the residential side, more construction happening generally on the commercial side. So we don't think that this economy is over leveraged at the moment to AI, because there's a lot of momentum behind the CapEx there, and it's probably stronger than it would be in the absence of AI. But there's things that are crumbling around the edges, like how many people are getting hired, how easy is it for businesses to find workers. The fact that those two things can happen at the same time tells you there's something not quite right in the underlying economy. It's not being exhibited in the stock market and not in the credit markets either, which have recovered pretty impressively from that one kind of Friday we had.
So what you have to see to really get behind the broadening out trade, right? I mean, we've been talking a lot about when is that going to start? When are we going to start seeing the benefits of all the CapEx spending from AI and the benefits from some of the efficiencies of scale move out to the rest of the economy and become an economic story? What are you looking for to understand that?
We'd like to see hiring picking up. We'd like to see the absence of layoffs in the next quarter or two to let us know we're kind of out of the woods and we've kind of achieved that, whatever we were talking about a soft landing now for 3 years, but we get there. That's really when the broadening trade happens. If you think you're late in the cycle and things are continuing to get worse, that's not when things tend to broaden out, right? That's when you're moving from cyclical to defensive. You're going to move from extremely broad to extremely concentrated. So it's really going to be in the labor market data of the next couple of months that tells us whether we are sort of softly landing here, asymptotically approaching a sustainable rate of growth, or whether we're going through that rate of growth.
Brian, aren't these two things, though, tethered together? An AI boom, doesn't that mean we are likely going to have a weaker labor market? Because isn't that the whole point of what AI is doing?
Typically with these kind of technological breakthroughs, you don't see people losing their jobs en masse. So whether it's mechanized farming, whether it's the internet, industrial age, you tend to see people just start to move differently, work differently. There's different areas that produce jobs. We had never been in a situation where we had job losses because of a technological revolution. This one, you would need to see a lot of productivity growth. If you believe that AI is affecting the economy, you need to see a lot of productivity growth, which would mean maybe absence of hiring, but very strong GDP growth. And that might mean, all else equal, that people's wages should be going up, even if there's not strong hiring, because the types of jobs that people are doing are now higher value, because AI is probably going to be taking care of the people that are doing kind of more rote jobs or jobs that can be easily automated.
I hope you're right. There's just a sense, and Luke Cower's written about this, he's done fantastic work, I think, that it's regressive up front, that it's causing some hesitancy amongst employers and hiring managers to know what to do here, because it might be a wasted hire, and it's also pushing up electricity prices across the country. So I hope you're right, you hope you're right, I think we all hope you're right, but in the near term, we've got a bit of a problem, potentially.
Yeah, and this is the reason why it's important to understand how companies are starting to deploy this. Is it just saying, well, instead of hiring somebody that we have to train and spend time on, we can just chat GPT it and have a good day while energy prices go up? Then it's a problem. If you have a systematic way of trying to deploy it through the workforce to try to understand what efficiencies you can produce, well, that might be more of an issue down the line, but it might have less regressive effort, at least up front.
It's a happy conversation for your Monday morning. Equities here at all-time highs on the S&P 500. Brian Nick there of New Edge Wealth. Brian, thank you.
Thank you.
Good to see you, sir. Thank you very much. Let's give an update on stories worldwide with your Bloomberg Brief. Let's cross over to Yahira for more. Hey, Yahira.
Hi, John. A U.S. military helicopter and a fighter jet crashed in the South China Sea about 30 minutes apart on Sunday. The U.S. Navy said a Seahawk helicopter went down while conducting routine operations just before a Super Hornet crashed. The Navy said all 5 people involved in the incidents were safe and investigations are underway. Meanwhile, Canadian Prime Minister Mark Carney says his government is prepared to resume trade talks with the U.S. at any time. President Trump said last week he was calling off the talks and imposed an additional 10% tariff on Canadian goods. Trump was angered after the province of Ontario aired an anti-tariff ad featuring former U.S. President Ronald Reagan. And 2 men have been arrested in connection to last week's major jewel heist at the Louvre. One suspect was arrested at Paris's Charles de Gaulle airport while trying to board a plane to Algeria. And the second was arrested as he was about to travel to Mali, according to police. The French National Police are still searching for 2 other perpetrators. That's Bloomberg Brief. John?
Yahira, why would you go there? to Charles de Gaulle. It's like the last place I would go.
It sounds like these were sort of amateurs. They left a construction vest somewhere. Did you see that the crane that they
left
used?
the crown,
Yeah,
too.
they left the crown. They dropped the crown and damaged it. But did you see that the crane that they used is this German manufacturer that is now using this as an advertisement? They're saying, you know, look, it can be brought anywhere, and it's effective.
Europe has such porous borders. It's so easy to get in. How do they find it so difficult to get out?
Well, again, amateur hour.
You know?
Work on it.
I can't wait for the movie.
We know how it ends now. At an airport, Charles de Gaulle, apparently. Up next on the program, closing in on a deal.
We're going to have a great talk. I have a lot of respect for President Xi. I like him a lot. He likes me a lot. I think we're going to have a successful transaction.
That conversation up next with Jeanette Lowe of Strategas, live from New York City this morning. Good morning.
For U.S. markets.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Following the biggest one-week gain on the S&P 500 since August, equities add some weight to the rally, up by 0.8 on the S&P 500. On the Nasdaq, up by 1.2. Under surveillance this morning, closing in on a deal.
What we understood yesterday or 2 days ago or even today is not going to be necessarily what it's going to be in 2 days. We're going to have a great talk. I have a lot of respect for President Xi. I like him a lot. He likes me a lot, I believe, and respects me, and I think he respects our country a lot. And we're going to have, I think we're going to have a successful transaction for both countries.
So here's the latest this morning. President Trump and the Chinese leader gearing up to finalize a trade deal this week as top negotiators from both countries agree to a framework. Tyler Kendall joins us now from Tokyo, Japan, for more. So Tyler, we heard from the Treasury Secretary over the weekend as well. It sounds like China's going to buy soybeans. Also sounds like they'll delay restrictions around things like rare earths. What is the U.S. conceding in return, if anything?
Well, John, at this point, it seems like both sides are trying to tee up some diplomatic wins, but we should caution that still some of those main issues of conflict remain unresolved. Now, it appears that the U.S. is going to take off the table that threat of an additional 100% tariff, effectively meaning that we're likely expecting this extension to the tariff truce that is currently in place in exchange for these concessions that you just outlined, including the purchases of soybeans, as well as a review of the recently unveiled export export curbs related to critical and rare earth minerals. China has also said it's expecting the U.S. to no longer impose fees on Chinese ships that are docked at U.S. Ports. And while the U.S. maintains that it's not going to change any of its export controls related to advanced semiconductors, our own analysts at Bloomberg Economics say that the U.S. is likely going to take off the table some of those proposed, those threatened but not yet imposed export controls and restrictions related to critical software and also cloud computing. But you're right, at this point, really those top lines are that we're seeing a pullback of what has been recently threatened in recent weeks, but not really progress when it comes to the broader trade framework. But John, that's why I'm watching really closely what happens to that 20% tariff that's tied closely to fentanyl, because that tariff has been in place really since the beginning of the administration. It was one of the first tariffs imposed back in February, and both sides are saying that they are making progress when it comes to that issue, so potentially we could see some sort of concession there.
Tyler Kendall with the latest. Tyler, thank you. And good evening to you, of course. Good luck with your travels over the next few days. Joining us now to discuss, Jeanette Lowe, Strategas. Jeanette, so we know what the president's priorities are. He's articulated them pretty well. Fentanyl, soybeans, rare earths. What does China want on the table for Xi Jinping this coming Thursday?
Yeah, I mean, obviously, China has been pushing to show that it has a lot of leverage in these talks with the rare earth export restrictions that it proposed. And obviously, one of the things that they have been talking about is whether or not they could get some sort of deal on the U.S. stepping back on its support for Taiwan. That has been something that has been proposed in the past. Obviously, Secretary of State Rubio kind of said that was off the table in these talks. I think, obviously, the bigger picture here is that the U.S. and China are kind of trying to keep maintaining the status quo in their relationship. So we keep talking about having soybean purchases, and we're talking about making sure that there is still access to rare earth mineral exports and things of that nature, but we aren't making a lot of significant progress on other issues. Now, as Tyler mentioned, if we were to actually see that 20% tariff rate for goods for fentanyl that have been placed on Chinese goods, that would actually be significant. That would be a big upside if that actually were to come to pass. But we were focused on the fact that the U.S. is really trying to de-risk from China in critical areas like critical minerals. That has been what this has all been about to some extent, to show where the U.S. has over-reliance on China and where it needs to actually step back and try to develop new relationships. And you've seen that repeatedly over the past week with the U.S. making deals with Australia, doing deals potentially with Malaysia to try to focus on critical minerals. So there is also this focus on trying to de-risk in these critical sectors while we're maintaining the status quo in the U.S.-Chinese relationship.
Well, the Treasury Secretary says China is going to give a year, basically, as a deferment when it comes to the rare earth export controls. How much can the U.S. make a dent into China's stronghold on rare earths in a year's time?
Absolutely, and that's a really good point. I mean, obviously, a year would be much better than 90 days, which is kind of the framework that we've been working under for the past 6 months or so, where we keep having 30-day deadlines, and then the U.S. and China have to talk, and there's always been this risk since back in April that China does withhold these goods, and that's really important. Obviously, a year is probably not enough time to make significant progress, but I think one of the things that is interesting is that the Trump administration is trying to rebalance this relationship, and you cannot remove the entire reliance within a year. But one thing I thought was really interesting in looking at the deals that were announced with Malaysia and Cambodia was that the U.S. is also trying to put other pieces of its agenda into these agreements. So having those countries ban goods that have been made with forced labor, that is a target at China, having them try to adopt similar measures to what the U.S. adopts with regard to unfair trade practices. I thought that was quite significant. So they're trying to get other countries to also focus on China, the fact that it can evade U.S. tariffs by doing transshipment of goods through other countries. They're trying to do this in all of the trade deals that we've seen, focusing on rules of origin, focusing on transshipment of goods, trying to actually increase investment restrictions on China and other countries. So there is still this rebalancing act. Obviously, it is going to take quite a bit of time, and that's also why I'd be a little bit surprised if there were to be a lowering of tariffs on China in this agreement.
Next week, the Supreme Court's also going to be hearing oral arguments when it comes to legality of Trump using IEEPA to enact these tariffs that he has on China. Is that playing into these trade talks that are happening this week?
I mean, I think it probably is to some extent. I think the administration probably wants to have some of these deals in place before any decision comes down. Now, we may not have a decision until January or February of next year, but I think he's trying to get these agreements in place so that even if there was the potential for tariffs to be overturned, maybe he could point to these deals saying, let's keep these in place and not have to rework the tariffs in another way. Obviously, the administration does have a backup plan. So if the Supreme Court were to overrule the tariffs, they have a two-step process to reimpose them, doing a balance of payment tariff for about 150 days while they do Section 301 investigations into countries' unfair trade practices, to then reimpose the tariffs that essentially we have today within 4 to 5 months' time. But I think trying to get these agreements in place now also allows the administration to then say, we can keep these agreements in place rather than going that backup route and having to do a whole new investigation and potentially even see higher tariffs.
What have we learned in terms of the agreements that have already been struck or the frameworks that have come out of the meetings over the past couple of days with Malaysia and Cambodia, the expectation for Vietnam and Thailand? Are we expecting some sort of amelioration of the source of origin issue, the idea that potentially some of the goods from China, materials that go into their output to the U.S. could be tariffed at that 40, 50% level? Do you have a sense of whether the U.S. is forcing some of these countries to choose between the U.S. and China?
The U.S. is trying to do that. The U.S. is trying to push countries. We've seen it when the talks with, if you think about what's been going on with Mexico in particular, the fact that Mexico is now increasing tariffs on goods from China, as well as other countries with which it does not have a free trade agreement, that is kind of speaking to this rules of origin issue. The fact that the Malaysia agreement also had things like making sure that they are abiding by U.S. export controls and trying to prevent goods that would be restricted to China from the U.S. side, also on the Malaysian side. So they're trying to do that. Obviously, it's not going to be easy. These countries have also had good relationships, closer trade relationships with China. So it's going to be hard to unpack over time. But you are definitely starting to see movement. Now, the 40% transshipment tariff that's been threatened over any of those goods, we haven't seen that announced yet. I think it was also interesting that while the Trump administration kept all of these goods tariffed at a 19% rate for Malaysia, Cambodia, Vietnam, and Thailand, currently, there are some restrictions being lifted. So there was exemptions for certain goods that are not produced in the United States that could come down to zero. And maybe over time, we can see some more forward-moving progress. But this is all going to take quite a bit of time to actually get any sort of reordering of U.S. trade. And I think that is ultimately the administration's goal. So it's going to take some time before we actually get there.
Jeanette, appreciate it. Thank you. Jeanette Lowe, a strategist. The tap dancing continues. I think there's two big objectives here. To de-risk without much disruption. That's one. That's ultimately what the US wants to achieve. Get earths ready, the refining capacity ready domestically without the disruption caused by the Chinese in the meantime. But the bigger one for the global economy is to get the Chinese economy to rebalance and move away from this overcapacity to boost consumption. We have been talking about this now for well over a decade. And you can see it in the trade numbers, Bremo. Fact of the matter is, tariffs are super high relative to where they were at the start of the year, and China is still on course to run a record trade surplus for 2025.
And if you take a look at the earnings of European auto manufacturers, you can see it show up. And that is where a lot of these goods are being shipped. You can see this in other countries as well. So right now, there's a shell game going on. Who's going to be allies with who, and who's getting hurt versus being helped in terms of inflation and the disinflationary ramifications from this. This is a huge issue for the global scale, and you could say maybe we're not making progress, but in some ways there is a coalescing of a certain degree of allies saying something's got to shift.
The Europeans are getting absolutely decimated by this. Up next on the program, Vito Spaduto of RBC with M&A deals hitting new highs. Plus, Danny's got some morning movers for you. Shares of Dr. Pepper higher after a boost to their outlook. The stock is up by 5.5%.
case you missed it on Bloomberg Tech.
How do you navigate this time? How are you seeing the ability for NPR to thrive and drive forward?
Well, there's certainly no roadmap for this moment in time. I think this represents a step change for all public broadcasting. It's not just here in the United States. The good news for us is that we have a viable model because we've built audiences over the 50 years we've been in existence. We have 46 million listeners a week.
Don't miss Bloomberg Tech, live every weekday.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersachi Zahran, and this is Bloomberg.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal. With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones, Erica Ayers-Badon, Robin Arzón, Justin Tuck. Stay tuned. You won't want to miss it.
Two days of gains on the S&P 500. Added some weight to it this morning, up by 0.8%, a record high Friday. We're on course for record highs later on this morning when this market opens at 9:30 Eastern Time. On the Nasdaq 100, going into tech earnings later this week, higher by 1.3%. In the bond market, going into a Fed decision on Wednesday, lots of debt supply. Two-year bond yields this morning, 350, up by 2 basis points. 10's up 3 to 4.03 as we start to get more of a constructive tone around US-China trade talks. That's the number 3 issue, not in any necessary order. Got earnings, Fed decision, and that meeting later this week on Thursday between Xi Jinping and President Donald Trump. As we count you down to the opening bell, let's get you some morning movers. Here's Danny with more. Hey, Danny.
Hey, John. Over the weekend, a victory for Milei, the president of Argentina's party. So just tracking what some of the U.S. ADRs and other Argentinian exposed stocks are doing. A great way to do that is the ETF, tracking it here in the U.S. pre-market. It is up 16.5%. Confidence that that victory will allow the economic reforms to continue in Argentina. Behind that, with the support of the United States. So those shares gaining there. Some deal news to work through as well in the past hour. Huntington announcing that they will be buying Cadence Bank in a deal worth over $7 billion. The floodgates are open for regional bank deals. We also had Huntington just last week actually close another acquisition of Vertex, another financial services company. Just last week it had closed that, so now it's going in. Cadence Bank shares up just under 2%. Finally, we got earnings from Keurig Dr. Pepper, and it was a raise to their outlook for net sales for the entirety of the year. The earnings for this quarter were strong too. Interestingly, it was because prices were higher for coffee. Volumes were actually lower. Also off the back of this, they announced that they would be getting a $7 billion investment coming led by KKR and Apollo in the spinoff that they're doing of their coffee unit. They get a minority stake of that, so shares up about 6.25%, John.
Danny, thank you. Did you watch the race over the weekend?
Of course, always watching every single race. It was chaos and it was wonderful.
Who's going to win this, Danny? Who's going to make this happen? Formula One world champion.
I thought it was Piastri, but after last weekend, I think it's Norris. I think Norris has this.
T-Max. That's what they call him, Max Verstappen now. T-Max. Danny, thank you. Thank you very much. Let's give you an update on stories worldwide. On our radar this morning, Argentinian President Javier Milei's party winning a critical midterm vote. The result strengthening Milei's foothold in Congress, allowing him to pursue free market policies with billions of dollars in backing from the Trump administration. Elsewhere, the New York City mayoral election is just over a week away, with the Democratic Socialist Zohran Mamdani leading the polls. He's working to make inroads with the business community and holding meetings with lobbying groups and bank CEOs, including Jamie Dimon. And finally, the Treasury Secretary Scott Bessent announcing the top 5 finalists to replace Fed Chair Jay Powell. Bessent says he's planning on a second round of interviews, and President Trump saying he could announce the nominee before the end of the year.
I think it's interesting it hasn't been done already, and I think that speaks to the idea that keeping this question mark around the Fed is probably beneficial to this administration. I keep going back to that Financial Times article with Scott Bessent, the Secretary of Treasury, where he's talking, Treasury Secretary, where he said, we want the most America First policies that are possible without incurring market wrath. And you look at long-term inflation expectations, questions, and it speaks to Fed credibility and this idea that maybe people are really counting on him to pick a Fed chair that will have credibility with the markets, not just the president.
I also think we need to remember that the Treasury Secretary is not on this list, but at the same time, the longer this goes on, if Trump at the end of the year doesn't like these 5 candidates presented to him, is there more of a potential that the Treasury Secretary ultimately is forced to go do this job?
How familiar is he with all those names?
The Treasury Secretary, very familiar. The president, familiar with, I would say, 3 of them, especially Kevin Hassett. That's his National Economic Council director. Sees him on TV all the time, carrying the flag on what the Trump administration is doing. He obviously knows Governor Waller because he was appointed to the Fed during Trump 1, but others not so much. The person he knows and trusts a lot, and in that Financial Times story, Senator Dave McCormick was talking about this to the Financial Times. Scott Bessent is the person that President Donald Trump really trusts when it comes to the economy in this administration.
That's what I was getting at. That's why that name still kind of lingers in this conversation, even though the Treasury Secretary is not exactly entertaining it. The race goes on. We'll find out year-end potentially over the next few months. Got to talk about this market and the amount of M&A activity we've seen over the summer and into the end of the year. Over $900 billion in deals completed so far this year, with another $1.1 trillion in the works, on pace for a 59% rise from a year ago. Vito Spaduto of RBC Capital Markets US writing, the market tone has shifted from waiting for an optimal window to moving into execution mode. More discussions of large deals, more preparation, more momentum. Vito joins us now for more. Vito, good morning.
Good morning. Good to be here.
Well, we spoke only recently. Are things picking up even more over the past few weeks?
I just think about the past. I was here at the beginning of the month, and just the tone, as was just talked about, has clearly shifted. We've gone from trying to time the right window, and we always talk to clients about the importance of being prepared to execute on your strategic initiatives and being prepared to access the window when it opens. Well, the window feels open, and I think we're into full execution mode with many of our clients.
Could you give us a sense of how much it's accelerating?
Just to give you a sense, in this past couple of weeks, the volume year to date, both from a global perspective and from a U.S. perspective, has exceeded full year last year. So just to kind of, and we've also seen where total volume was up about 28 to 30% globally and U.S.-wise at the end of the third quarter. We're now talking about up 35 to 38%. We've seen some larger deals announced, especially across the technology space, the healthcare space. But more importantly, we've also seen the tone of the dialogue out there has become more active. Clearly, there's some larger companies talking about divestitures, strategic initiatives, publicly announcing that they're considering alternatives. And so those are all, big signs. At the same time, I would still label it as a cautious environment. I'm not seeing clients cut corners. I'm not seeing them rush into something. I think boards are certainly checking, dotting every I, crossing every T. They're making sure they've done their full diligence. They're making sure that the financing they're going to use is buttoned up, especially as we're heading into an environment where maybe there's some concerns about some of the financial structures that have been used historically.
So this to me is fascinating, the idea that you're seeing something, and it speaks to what people talk about with AI. It looks frothy, but it's not a bubble yet. Yeah. M&A, it looks like it's getting really heated, but it's not a bubble yet. It's not really problematic yet. And I just wonder, what's the motivation behind this? Is it because you are seeing the expectation for Fed rate cuts? Is it because there's more policy certainty? Is it just catch up?
Yeah, I think it's a clearer environment in terms of being able to execute on your strategic initiatives. From a government perspective, a regulatory review perspective, we're seeing clients consider transactions that maybe 9, 12 months ago they would not have stepped into because they were concerned about would the government approve this transaction. And so I think there's been a more constructive tone out of the agencies. We've seen them certainly accept remedies, much more so in terms of you go into a transaction, you say, well, this might be an issue, but I'll consider these divestitures to satiate the regulators. And I think that's become an environment environment where you can think about how to constructively do something.
Are there particular industries that you're seeing robust activity? Is this the banking industry? Is this the tech sector in particular? What are the deregulatory areas that are kind of getting juiced by the current landscape?
I mean, as we talked about last time, it's always technology and healthcare. And you look at the Aligned Data Centers deal and Hologic in the past month or a few weeks as two of the largest deals announced year to date. And they highlight those two sectors are always leading the pace. We're seeing some around energy. I think we're seeing a fair bit around financial services. We certainly saw a significant bank deal announced this morning. I think there's more being talked about there. And I think that's an area where, if you look at what the regulators from that perspective are considering, they're allowing more of those to come together.
When it comes to the government shutdown, has it been an impediment yet?
Not yet. I think it's noise that's being monitored. On November 5th, it'll become the longest shutdown in history. I think we talked about it last time. The poly markets now are betting. I think it's 52% is going to be November 16th or beyond. I think the vacuum of data is starting to cause some concerns because I think it's becoming more about expectation and estimates as we're seeing, what's going on there. We're going to hear a Fed decision later this week, likely to be a rate cut again. And so I think part of it, the longer it goes on, as soon as we start seeing, we joked earlier about, how many flights people are on and the fact that you're starting to see some delays, whether it's over the weekend and a lot of the business travel going on. Government employees are starting to miss paychecks. I think more and more of that happening, you're going to see it impact things. And certainly, when you start getting longer, you start impacting GDP going forward. Now, there's always an argument that you recapture it at some point, but that starts to become a concern.
You mentioned the Federal Reserve. How relevant are those rate reductions to the broader story of the acceleration that you've articulated?
Yeah, we talked about it last time. I mean, I think it's helpful. I think it's a good signal. But I also think when you look at the overall environment and what people are thinking about, there was a CEO confidence survey that just came out a couple of weeks ago from the Conference Board, and it was basically flat to the third quarter. It's sort of there's a strong view going forward, but it's certainly cautious, and it's right at the midpoint at about 48, where 50 is kind of the neutral level. But when you looked at what CEOs identified as their number one concerns, it's geopolitical instability at the top of the list. Trade and tariffs was up there, and it dropped to fifth. The other ones that they are concerned about is the uptick in sort of innovations around AI and how they impact their businesses. And so when you look at what CEOs are thinking about, even though they might not be impacted by geopolitical issues somewhere else, they're still thinking about it. It's that noise externally.
The financial conditions just is not the complaint right now. Credit spreads are super tight. Equity markets, we've been talking about it all morning, sky high.
Yeah, right now it seems like there's a window that's open, even though you've got benchmark yields above 4% if you look at the 10-year. I mean, it just sort of goes to this question of what is it that could potentially stymie some of this activity? And does it suggest that maybe this is closer to neutral than anything else because companies are able to adapt to this?
Well, I think the other thing is start noticing what's the commentary is when earnings announcements are being made. You hear mention of the shutdown, but you're not hearing about the significant impact on their businesses. I think you're hearing some caution and saying, well, maybe, quote unquote, are we in a bubble, or should we be careful what we're taking on? But they're still proceeding. So they're thinking about it, and I think everybody has a lot of history here and doesn't want to be caught as the party that's jumping in at the last minute when things are going in a difficult direction.
Have you seen the leverage cycle start yet? Have you started to see that come into some of these deals?
A little bit. I think the larger deals are set up in an appropriate fashion because the largest players in the credit cycle or the credit environment are participating in those transactions. I think when you're hearing some noise in places that have had issues from a financing structure perspective, it's really been some ancillary players that have been in those transactions, and so it's been less of a concern. But Jonathan, I think we're sitting here with corporates probably the healthiest that I've seen them in decades. And again, you go through the financial crisis, you go through COVID. COVID demonstrated there was a resilience in balance sheets and also resilience in business models. Where you learn to pivot quickly. You learn not to just take one path going forward. You thought about multiple paths, and you were able to make decisions and move your business. You think about earlier this year and how quickly a lot of companies shifted and brought business, back on shore, and you don't hear that tone as much anymore.
Vito, it's good to see you.
Great to be here.
Thanks for being here. Vito Spaduto there of RBC Capital Markets US with an update on stories worldwide. With your Bloomberg Brief, back with us, here's Yahara. Hey, Yahara.
Hi, John. President Trump has arrived in Japan for a series of meetings, telling reporters he's excited to meet with new Japanese Prime Minister Sanae Takaichi. The president will meet with Japanese Emperor Naruhito today, ahead of the Prime Minister on Tuesday. He will also hold a dinner with corporate leaders on Tuesday night. Meanwhile, the U.S. government shutdown is now in its 27th day. NBC is reporting the country's largest union representing federal workers is urging Democrats to drop their demand to extend health care subsidies and join Republicans in supporting a stopgap resolution. And in sports, the World Series is tied at 1 game apiece. The Blue Jays dominated Game 1, winning 11-4 with a huge 9-run 6th inning. The Dodgers bounced back in Game 2, winning 5-1 behind a dominant complete game performance from pitcher Yoshinobu Yamamoto. Game 3 is tonight in LA. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks very much. Up next on the program, the Fed under pressure.
I think they're under pressure to cut, and I think they will tend to do that. They have to be pretty careful about how much they signal more cuts going forward.
Greg Peters of PGIM, up next, live from New York City. You're watching Bloomberg TV.
Take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop, I'll still be driving some.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
In case you missed it, on Bloomberg Tech Asia, I'm in a Nissan Ariya with the latest ProPilot system developed with Wave's AI technology. Bloomberg NEF says we'll see a robotaxi fleet about 6 million strong on the roads by the next decade. And with many of these projects scheduled to deploy across the world in the coming year, the era of robotaxis may be arriving soon to a city near you. Don't miss Bloomberg Tech Asia every month.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The message coming from the administration over the weekend pretty clear. I think we have a really good chance of making a very comprehensive deal. The market gets it. It rallies hard, up by 0.8% on the S&P 500. Message received, up by 1.2% on the Nasdaq 100. That meeting between Xi and Trump taking place this coming Thursday. The day before that, this right here, under surveillance this morning, the Fed under pressure.
Our main issues going forward as far as inflation goes is the pressure on the Fed and the ability of Congress to find some kind of compromise around the fiscal challenges that are building. I think they're under pressure to cut, and I think they will tend to do that. They have to be pretty careful about how much they signal more cuts going forward.
So here's the latest this morning. Optimism over a US-China trade deal pushing bond yields higher. The move comes as investors price in another rate cut later this week. Greg Peters of PGIM Fixed Income writing the following. Near-term dynamics remain challenging, policy sensitive and under fiscal stress, which may add pressure on rates. Greg joins us now for more. Greg, welcome back. Do you think supply issues might reassert themselves as a problem in the coming months?
I don't think supply is so much a problem in the coming months, but I think next year is a very different supply story. But I think the bigger issue is, you saw it in the CPI release, is that you are seeing inflation pressures away from rents and OER, right? And I expect that to continue into next year. And what I really worry about is that investors are very much of the mind the Fed's going to continue to cut. Inflation is, a 2021 story, largely contended with, and I think the risk is you're cutting into a higher growth, higher inflation environment, and the question is, what does the bond market think about that ultimately?
So, Greg, your point's interesting because this market took comfort from what was happening with shelter, but you're taking anxiety from what happens everywhere else. Greg, do you think the market's going to come around to your point of view, and why?
Well, so I think the shelter component, what has been an incredible disinflationary driver this year, and that's actually given kind of the broad CPI or disinflation numbers cover, right? But as we go into next year, you'll have continued pressure around those goods, particularly those, affected by tariffs. And, this is a story that's leaking out over time. This is not a one-shot type of idea. And so next year you have shelter either flattening out or even maybe moving higher, and that just changes the game, I think, and I think that is underappreciated.
Right now, I'm looking at break-even rates that are at the lowest levels going back to earlier this year. I'm looking at inflation expectations over the longer term. It's just falling significantly over the past couple of months. Why do you think that is? I mean, why do you think the market so profoundly disagrees with this higher inflation, higher growth view, at least based on market measurements?
I don't know. That is something that really confounds me, honestly. When I think about, next year, that is the most central figure that I look at. So what has a twofold effect. Number one, obviously, it's the market's measure around longer term inflation, but also, there's lots of talk around the Fed, what happens with the Lisa Cook case, what happens with the new Fed chair, what happens to the kind of the path of rates. Are we really moving to this really easy type of environment? And if the market starts to get spooked around that, that's going to manifest itself not only in the US dollar, but in five-year break even. So I look at that and I do scratch my head. And, for my money, that is something that I'm kind of looking the other way. What I think it should be higher, not lower.
How much are you actually betting against some of these longer dated bonds? I mean, right now we're looking at a corporate sector that's in pretty good shape. You can make the argument that you should get tighter spreads. And at the same time, when you look at the government bond market, there's this sort of mystery wrapped in an enigma about inflation and why it's not being priced in more. How actively, aggressively are you betting against where things are now?
Well, what makes it incredibly tricky is just the uncertainty component around not only tariffs, right? We have a Supreme court case that's coming due. What happens, after that? Well, and then there's lots of worries, I guess, around changes in issuance, changes in, buybacks. And so investors are a little leery to, lean too much into the curve steepener and the back end of the curve in particular, just because you can see that change in dynamics that could kind of catch investors by surprise. So I think there's a tentative nature more around it. So I see it more cleanly, from 2s, 10s and that part of the curve. As you go further out, you're more exposed to, these certain vagaries.
Greg, that's the Treasury market, and we've touched on the supply there. We'll get tons this week. Let's talk about the corporate supply that's coming this week as well, and what it's financing. Greg, is this market still wide open for this kind of debt issuance to finance the CapEx stories that we've been talking about in the media every single day?
It is for now. So there's just a tremendous amount. I start to scratch my head, as you go out the curve, particularly on the unsecured side. So there's been some deals in the marketplace that really don't make a lot of sense to me necessarily. But this is a tremendous build out. There's a tremendous amount of circularity around it. So this is, something that I think makes sense today. But as we go through this cycle, I worry about the refinancing aspect, and ultimately the AI, adoption and the return on investment that these companies need in order to make sense. And that's what starts to worry me. But as of right now, Jonathan, the markets are open. Everyone's all in on the AI trade, both sides of the debt and equity aisle. But at some point, there has to be a return on that invested capital. We shall see.
Well, Greg, with that in mind, how closely does someone like you watch the earnings as they come in on Wednesday, on Thursday?
Yeah, so I think earnings are incredibly important here. We have these long-term structural issues that we worry about, but honestly, from an investor standpoint, right, you worry about the cash flows and the earnings in the here and now. So I think it's crucial to kind of keep this market afloat. As long as you see, a pretty reasonably strong corporate environment and backdrop, I don't really see this bull market changing, anytime soon. So it's about the near-term data that's allowing investors to kind of look past maybe some of the longer-term structural issues that we talked about, namely Fed independence and, some other areas.
Greg, appreciate it. Thank you, sir. Greg Peters there of PGIM. Looking ahead to those earnings coming Wednesday, Thursday, more than $10 trillion of market cap on Wednesday. Same again on Thursday. Just tons and tons of tech earnings. We've talked about potential constraints around the AI story. The conversation naturally drifts towards energy. Greg's already talking about whether this market's going to close up at some point and push back.
Yeah, right now it's not. And right now it's wide open and people are buying the $38 billion in Oracle debt. You've seen tech companies issue more debt now that is outstanding than even the financial sector, which is pretty notable. You start to wonder at what point people start to get skittish around what potentially they could get in terms of efficiencies and monetization of some of this. The fact that credit investors are watching earnings and that you could get bad earnings that torpedo the stock market and the credit market at the same time highlight how systemically risky some of these companies have become, albeit very solid in their policies.
Right now, the credit market, Bramo, is saying do more, green light, lever up a little bit. You don't need a credit rating that high. Do some more.
They're saying, we want to be part of the trend too. Can you give us something to work with too? And they're saying, sure, here you go. Here are some bonds. So right now, they're saying this is the way to go. And frankly, there's no sense right now that it's not coming to fruition in the balance sheets of these companies. We shall see. It's the big test this week.
A lot of supply coming this week. Up next on the program, Abby Yoda of JP Morgan Private Bank, Angelo Zeno of CFRA to talk about those tech earnings, Pooja Sriram of Barclays, Noel Dixon of State Street. The third hour of Bloomberg Surveillance is just around the corner.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because The one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with another season of The Deal, with athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones, Erica Ayers-Badon, Robin Arzón, Justin Tuck.
Stay tuned. You won't want to miss it.
In case you missed it on Balance of Power. I'm sure you're having a ball and you don't want this to end anytime soon, but I'm just wondering how long you think this is going to go on.
This is a very frustrating exercise for us. It's political games being played by Democrats in the Senate. They're talking about the Obamacare subsidies, for example. That's a December 31 policy issue. We were always going to negotiate that and debate it and deliberate over it in October, November. They're trying to pretend that's the issue of the day. It's not. It's a red herring. It's a distraction. They're not doing their jobs.
Would you consider a promise to bring that negotiated legislation to a floor vote, up or down? We'll make sure that happens before the end of the year.
There's a lot of conservatives who have real problems with the Obamacare subsidy. Premiums have skyrocketed since it was created in 2010. They're up like 60%. So something's not working. There's real reforms that are needed. But it's a complex issue that takes a lot of time for members on both sides of the aisle and in both chambers to negotiate. They're trying to short circuit all that right now. That's not how this process works.
Don't miss Balance of Power live every weekday.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Earnings season has become front and center, and earnings have been strong.
People are investing more seriously than ever before, at least in the U.S.
This market has continued to rally and probably draws more and more people off the sidelines.
This is a very good economy for equities. The underlying thesis on consumers and business spend is positive.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your scores look like this. All-time highs on Friday. Same again this Monday morning. Up across the board on the S&P 500, higher by 0.8. On the NASDAQ, up by 1.2. With stocks up, bonds are down, yields are higher across the curve. 2s, 10s, 30s. Bond yields up by 2 basis points on 10s, just north of 4%. Going into this, been waiting for this week for quite a while. The busiest week for earnings season so far. This is it. Coming up on Wednesday and Thursday, a Federal Reserve rate decision, and these talks that are really fueling this market this morning between the U.S. and China.
It's sort of like all the uncertainty could potentially be taken off the table this week. You could, not all of it, I mean, not to exaggerate, but you take a look at the idea that you could get some resolution between the U.S. and China. You could get $27 trillion of market capitalization in companies that are reporting earnings that have been the backbone of this rally so far this year. And you could get a Fed that does just sort of seal the deal, 25 basis point rate cut this week, and then again signaling one more at the end of the year. You have your certain backdrop, the system's all a-go, and that's why risk is rallying.
Dangerous talk, but year-end type feelings? going into this week just a little bit?
Yeah, definitely, especially when it comes to the trade talks, because we already know that they're being deferred until next year, at least when it comes to rare earths, which for China is their biggest piece of leverage they have going into these talks. They basically said that the 100% tariff that the president had is being taken off the table, and there's going to be some soybean purchases. So then we just have to start thinking about where is this relationship going in the next iteration of these talks, because right now it's basically going back to status quo, a truce.
2025 is over after Thursday.
Okay, this is what what is
Well,
this? Let's get
the
you
government
to year-end.
shutdown is
That's
not.
what that's what you're going to start the show on. On a Monday, let's get you to year-end, because that's sort of where your mind is at. And honestly, maybe, but there's still a lot
Isn't there? It's
more.
been like the longest
Year
10
ever.
months, 11 months ever.
100%.
We have to wait till NVIDIA on November 19th. Then it's year end.
I feel like it's year over already. Maybe it's not.
Make it happen.
It should be. Equity futures on the S&P up by 0.8%. Coming up this hour, Abby Yoder of JP Morgan Private Bank as stocks trade near all-time highs. Angelo Zeno of CFRA previewing big tech earnings on deck this week. Plus, Pooja Sriram of Barclays with a key Fed rate decision just around the corner. We begin this hour with stocks soaring as investors gear up for a crucial week on Wall Street. Abby Yoder of JP Morgan Private Bank writing, we believe that the valuation of the S&P can remain elevated given technology's growing dominance in the index and strong profitability. Abby joins us now for more. Abby, good morning.
Good morning.
How dependable is the earnings story at the moment?
I mean, it feels pretty dependable. I think expectations have definitely crept higher as we get to this very big week of earnings. And, you know, it hasn't always been like straight up into the right in terms of whether or not we hear from these hyperscalers and they increase their CapEx expectations. Like last quarter, yes, there was positive, you know, price action. But because you're seeing that, you know, their CapEx is creeping up as a percent of their operating cash flow, like there's going to be a lot of focus on, okay, what is the ROI on this? And the interesting and good thing is that you are seeing that trended up into the right as well, right? Like that is moving higher. As I think investors would like that to be a little bit quicker. And I do feel like we're kind of at this inflection point in terms of seeing that move higher.
And that's going to be a big story for Meta later this week to get stock specific, to talk about sectors, what you like, tech, financials, utilities. Is that all the same trade?
I would say financials are a little bit different, right? Because they're going to be more cyclical in nature, the way that we're thinking about them. You've got a lot of things happening that are good for them in terms of you've got the yield curve steepening, which is good for net interest income. Credit was really benign. I know there were pockets of a little bit of concern on the lower end over the past couple of weeks, but when you think about the GSIBs, they tend to be higher quality in nature and don't have as much of that exposure, and we saw that in earnings for the most part. And then you think about like what's happening from a deregulatory standpoint, right? Like there were some rumors last week about about Basel III coming out being in mid-single-digit capital requirements versus the 19% for the large caps that was floated last year. So that's very important in terms of that trade.
Yeah, but to build on what John is talking about, the idea that utilities are being bolstered and aren't exactly the safety trade because they're going to benefit significantly from the tech trade, and the tech trade has fueled everything else, including credit markets increasingly as the issuance of debt related to these companies increases. At what point is this the catalyst, the risk event, frankly, for the second half of the year? The idea that the earnings have to show some proof in not only the capital expenditures, but monetization.
Well, I would also say, like, if you're thinking about utilities, to your point, being more of an AI trade now, like, they're not the ones that are spending all of this CapEx that you're waiting to see that ROI. Like, energy is the bottleneck. They're signing these agreements with these hyperscalers, so they're the beneficiaries of that, right? Like, you're seeing those cash flows already happen for them. Like, obviously, they need to build out these, you know, the capability. But if you're thinking about the risk where if you're looking at the hyperscalers, it's like, okay, where's the ROI on your CapEx that continues to increase at these eye-popping numbers? Utilities are kind of the other side of that trade, right? They're the benefactors of that cash flow. So to your point, like thinking about where you're seeing, you know, the increase in earnings, it's really on the utility side at the moment too.
What do you have to see in the Magnificent Seven earnings that could make you believe in the broadening out trade, that other companies are actually going to get some efficiencies from the use of some of the new technology?
Well, I mean, I don't know if it's necessarily from them as much as it's going to be from the other companies that are talking about it, right? Because you have seen that. I think the most interesting sector to really look at in terms of who's utilizing, how can you think about it broadening out, is going to be industrials, right? They're at the kind of like epicenter of all of these different long-term structural trends in the form of reindustrialization, and we're all thinking about trying to be more efficient in what is like a less efficient supply chain world, right? Like when you think about the past 25 years, it's all all about efficiency. It's just-in-time inventories. But we're moving away from that in the sense that we're trying to be, very strategic from a supply chain standpoint. So how are you using AI to kind of expedite and make those processes that would have been otherwise redundant more efficient going forward? So I think that's a really interesting thing.
Going back to how John started this hour, though, the fact that it does feel like we're almost going into year end. Do you feel like a lot of uncertainty has been evaporated out of Washington, especially this week when it comes to our biggest trading partner?
I was shaking my head the whole time you were talking about that. It does feel like it's already December, notwithstanding that it's very cold. But I mean, I think it's interesting that we are kind of operating in a data vacuum from a government standpoint, and it doesn't really seem to matter. I mean, we've got CPI, which is obviously very important. I think, look, you can look at 2 weeks ago or 3 weeks ago when we got the trade headline around, rare earths and this, re-upping the tariffs around China, and the market was down, right? Like, it was down, NASDAQ was down over 3% that day. Like, there is an element of, okay, well, that's an embargo from an economic standpoint. That's hitting the AI trade. There's a concern there. So, like, it feels like we're getting to the point in the negotiations where it's going to really matter for markets, and particularly on the tech side, because that seems to be where the negotiations are going between these two countries. But so I do think it matters. I don't think it's like completely ignoring it, but I do think at the end of the day, the market was guessing and betting that this outcome that we have was going to happen, right? That it was going to either be delayed or there was going to be progress made, and it wasn't going to actually be that headline number that we got that Friday.
I'm not going to say it's year over, just for the record.
Okay.
Because bad things can happen. There's enough time.
The year is ending, though. The year is almost
I mean, by definition, it's ending.
Good things can also happen. It's been ending since June.
Good things can happen too. Thanks for that, Abby. Thank you very much. Got a few more months left. Let's hope some good things happen as well. What are we taking for granted? I often think about that because it feels like rate cuts are the things we're taking for granted right now. And if I look at all the research at the moment beyond this meeting, I'm not sure how you guide into year end. Things can change in May, and that feels like a separate story to me when we get a change of leadership. But between now and May, are we taking some rate cuts for granted here?
Well, so we actually are expecting less rate cuts than I would say the market is. We have 3 through the end of next year, because it does, to your point, everything we're talking about, it's like not only do you have the economy on really solid footing, earnings on really solid footing, we're heading into 2026 where you have, this growth impulse from the reconciliation bill, both on the consumer and corporate side, where it's like, how do you not see a reacceleration in growth? Now, the way that you avoid, this difficult situation for the Fed is that you see also a commensurate increase in productivity, so therefore inflation isn't as much of an issue. But now that we're in this vacuum in terms of the labor market, I mean, it's a big question as what the Fed guides to, right? Like, it's super, super tricky. We're not envious of them at all. But I think, just thinking about where we're seeing rates going from here, we have far less cuts than the market is pricing.
So just give me an idea of what it looks like, what you're expecting versus what's priced right now.
So we have 3 cuts through the end of next year versus, I think, 5.
Through the end of next year?
Yeah.
From now?
Mm-hmm.
Just 3?
Mm-hmm.
Okay, interesting. Abby, if you're right and this market's wrong, what's mispriced? Fixed income?
Yes.
Yeah?
Mm-hmm.
Okay.
Exactly.
Abby, thank you.
Yeah.
I'd love to think about that. That's like the punchline. All
Okay.
right. Abby Yoder of JP Morgan Private Bank, thank you very much. Can you imagine that? Just 3 from here.
Yeah, well, it really raises the question, how much is this market leveraged to the idea of aggressive rate cuts, even regardless of what the economic data is, even if we do continue to get strength? And that's a real key question. How much is the debt market in particular? Is it the credit or is it the government debt market mispriced to that? And I think that that's what clearly Greg Peters is wrestling with, given the fact that it seems like a conundrum to have such robust growth, sticky inflation, and a Fed that's going to be aggressively cutting.
If that's the case, then someone that the president puts as the new Fed chair will not be delivering on what he wants to see.
At the moment, the market's getting the best of both worlds. Gets the earnings from big tech, which makes up a major chunk of the S&P 500. The Federal Reserve's freaking out about something the market doesn't really care about, downshift in payroll, so they get the rate cuts too. It's like the best of both worlds at the moment, and I wonder how much longer that can persist.
I guess that the real conundrum has been that 10-year yields have been so behaved. So yes, it has been the best of both worlds, but the market's not freaking out about inflation either. And next year, it is going to be difficult for any Fed chair that President Trump appoints to continue with rate cuts if you do have it on more 10-year yield. And that is going to be sort of the fly in the ointment. And it's the reason why people are watching this and saying that Fed chair is going to have to ultimately be constrained by the market.
It's certainly difficult to get the committee to come with them. Anyway, you mentioned the bond market, 10s at the moment. Lisa's right, around 4%. No freak out here. Yields high by just a single basis point. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. President Trump has arrived in Japan for a series of meetings, telling reporters he's excited to meet with new Japanese Prime Minister Sanae Takaichi. The president will meet with Japanese Emperor Naruhito today. Ahead of the Prime Minister on Tuesday, he will also hold a dinner with corporate leaders on Tuesday night. Meanwhile, Hurricane Melissa became the Atlantic season's third Category 5 storm in the Caribbean this year. The storm is expected to make landfall in Jamaica early tomorrow. More than 800 shelters have been opened across the island with warnings of unprecedented damage to facilities and infrastructure. And more than 100,000 New Yorkers turned out this weekend to pick the next mayor of New York City. The frontrunner Democratic Socialist Zohran Mamdani is running on free buses and freezing rent-stabilized apartments. With only 8 days until Election Day, supporters of Andrew Cuomo are pouring money into a ground game, while Republican Curtis Sliwa trails in third place. That's Bloomberg Brief. John?
Yahara, thank you. Up next, the Morning Calls. Plus, we'll catch up with Angelo Zeno of CFRA as we look ahead to a big week for big tech from New York City. Good morning. We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
In case you missed it on the opening trade.
Rates are on hold. I think rates being on hold is appropriate for the current period. If they tighten more, then we have to loosen later. More than a year ago, I talked about that being a policy boogie.
Yep.
And I thought that's not a good thing for monetary policymakers to do. The hold is appropriate at this point.
Avoid dancing,
of course.
Don't miss the opening trade live every weekday.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The number one question from clients is, are we in an AI bubble? I mean, every single meeting. So maybe that convinces me that we're not in an AI bubble, but I think that's going to be the key catalyst this week. I mean, the earnings season so far has been amazing, right? 87% of beats. We're running at 10% growth year on year. I think if the Mag 7 can continue to deliver, that continues to drive a lot of upside.
Big Tech in focus this week. Massive earnings reports coming on Wednesday and on Thursday. That was Alistair Pinder of HSBC into that all-time highs on the equity market, up 0.8% on the S&P, on the Nasdaq 100, up by 1.3. That's the price action. Let's get you some morning calls. First up, UBS raising its price target on ARM to 200, highlighting easing tariff concerns. Your second call from Goldman, upgrading Victoria's Secret to neutral, expecting sustained improvement in brand momentum. And finally, Guggenheim upgrading Microsoft to buy, emphasizing its ability to directly monetize AI offerings. That stock is higher in early trading, up by 1.41%. Let's stick with tech. A slew of mega cap tech earnings reporting this week. Mandeep Singh of Bloomberg Intelligence joins us now for more. Mandeep, of those names, Microsoft, Alphabet, Meta, Apple, Amazon, what's the number one focus for you?
I mean, it has to be the cloud growth for Microsoft, Google, and Amazon. And look, it's no different from the last time around, but what changed with the print last quarter was Microsoft got close to 40% in Azure growth. It'll be interesting to see if they actually surpass that higher bogey. And to my mind, that's the justification for increase in CapEx, because the expectations for 2026 are still somewhat lower than what we saw this year, which was almost, close to 60% growth. Next year, it's more low teens or low to mid-teens. And so to my mind, all these companies will raise their CapEx, and that will be dictated by whether they beat on that cloud number or not.
Mandeep, as you know, all these names get thrown into the same bucket. I'll throw another name out there, Meta. Is the market more comfortable with the spending of some companies at the moment versus others? You mentioned Microsoft. I just wonder who the market is less comfortable with at the moment.
I think I would put Meta in that bucket because they don't have a cloud business. And look, they will see benefit from AI in their ad pricing, the recommendation systems. But in the end, if you're not showing a separate, AI number right now in your print, then the market will question what is AI versus what is non-AI. And in the case of Meta, if they're looking to raise their CapEx close to $100 billion, which is what our number is for all these hyperscalers, Microsoft, Google, Amazon, then you have to ask yourself, what is the ROI? And that ROI question, I think, is extremely relevant for someone like Meta if they're going to raise their CapEx.
Mandeep, you're in Hong Kong. One thing we've highlighted over the last few weeks is just how different the approach seems to be in Asia. Efficiency. In America, it feels like they're rushing to spend because they're confronting an existential crisis. Mandeep, do you pick up the same tone, the same theme whilst you're over there?
I do, and everyone is asking me about, what kind of optimizations the cloud providers plan to do. How will that trickle down in terms of their appetite for NVIDIA GPUs in 2026? And really, when you come to, this part of the region, DeepSeek and the Chinese models, they have an open source approach. So that is a big focus in terms of what the frontier LLMs plan to do in the US and elsewhere, whether they want to embrace open source or not, and that, I think, is an open question at this point of time.
Mandeep Singh of Bloomberg Intelligence. Mandeep, thank you, sir. Let's continue the conversation. Looking ahead to big tech earnings, Angelo Zeno of CFRA is remaining bullish. He writes this: we anticipate a still healthy cloud and digital ad environment as greater AI integration and rising enterprise adoption will continue to support upside. Angelo joins us now for more. Angelo, welcome. You heard Mandeep a little bit more cautious on the likes of, say, Meta. Do you share that caution?
We do. Actually, we would view Meta as probably the biggest risk among the mega cap names that are reporting this week. And really kind of just, I would just echo some of the comments that were just made in the sense that we do think that you look at the CapEx, the capital intensity numbers among these hyperscalers or big tech names, and Meta not having its own cloud business, given the fact that, listen, it is more of a cost center when you think about the AI investments that they are making, despite the fact that, listen, they are monetizing it to an extent in terms of improving the recommendations and content across the platform. That being said, they are not monetizing it to the level that these cloud providers are. So as a result, I mean, there is more risk tied to them as these depreciation costs start to really kind of gain traction here over the next couple of years. And when you actually look at the magnitude of the spend that we already know Meta is going to do, or what they've alluded to for 2026, at about $100 billion next year relative to $70 billion this year, and let's call it $40 billion just a year ago. That is a tremendous increase for any company out there, but especially Meta, given the fact that they can't monetize it to the level that these cloud providers are.
Angelo, I feel like we have this conversation every time before Meta reports earnings. They can't keep it up. Yeah. What are they actually making money on? And then they come out with earnings and their stock shoots up at 10%. I mean, what can we potentially see in terms of going forward with the team that they have amassed with huge bonuses that could potentially buck the trend or make you think that they could have significant upside?
And that's a great question. I mean, when you look at these mega cap names, Meta's actually growing the fastest. So from that perspective, I mean, you have to give them credit. I mean, they're going to grow the top line this quarter north of 20%, which is going to be faster than any of these, than the Microsofts and the Alphabets of the world. So from that perspective, hey, listen, the fact that they can continue to grow the top line and in many respects actually manage the margins in a very healthy manner, at least up until now, they've continued to demonstrate very good success, and the stock prices continues to go higher, which is why we're still recommending the stock and have a buy recommendation on it. But when you kind of look ahead here and you look at the talent that they've really amassed here, the potential to expand the addressable market, whether it be in terms of the devices side, which probably has a longer tail, or whether it be in terms of finding new innovative ways to really monetize their ad-based platforms, whether it be with Meta AI, having more of these kind of in-app these ad interactions. They know more about us than any other company out there when you start thinking about it. So they can definitely monetize that platform in many new and innovative ways that they haven't done so yet. And mind you, they do still have Threads, which they're really not monetizing at this point in time. That installed base continues to grow, pretty fast, and it is going to be, we think, more of a monetizable story in 2026 and 2027. So they do have that going for them.
There's a real question around monetization for the likes of Meta, Microsoft, and Alphabet when it comes to the AI story. There's also a question of the energy constraint and how much they are increasingly tied to that story as a potential hindrance to some of their expansion plans. Are you expecting to hear anything about that in these earnings? We've talked a lot about some of the big deals that they've come out with private equity firms and with a lot of banks in terms of trying to build out their own energy centers as they try to meet this demand.
I mean, I think the questions will be brought up. I don't know if there's anything that they're directly going to address from that perspective. I think they'll just allude to some of the facts that you just mentioned. And at this point in time, listen, this is one of those situations where they continue to, or I'd say is probably the biggest potential bottleneck for the industry. But that said, I mean, listen, they continue to aggressively invest, whether it be in terms of energy needs, whether it be just in the overall data center build-outs, and of course installing these servers. So it's going to come at a hefty cost, but one way or another, if the demand is there, they're going to find a way, we think, to make sure that that demand is realized.
Angelo, on all of these names, whether or not it's Google, Apple, Meta, Microsoft, going into earnings, you have either a buy or a strong buy. Who's most vulnerable on your list?
As far as this earnings season is concerned, most vulnerable, it's we've kind of highlighted Meta, which we would say is probably the biggest risk here over the next couple of quarters, just because of the uncertainties there. And not to mention the digital ad side is typically more at risk to uncertainties on the macro side than any other factors out there. I would say when you go into this earnings season, I think there's been a lot of hype going into Apple. Again, it's a name we like and we think is going to be a great story into 2026. But I think the street at this point in time, essentially, whether or not is right, they're essentially looking for double-digit growth, I think, on the hardware side of things here for the September quarter and December quarter. So it'll be interesting to see whether or not they can meet that high bar. Also, as far as the AI story is concerned, we do think they get that right. It's going to be more of a 2026 story. I don't think it's anything that you really hear too much about this earnings season. So I think there might be a little bit too much hype going into Apple, going into the print. But that said, I mean, any type of pullback we think on the name should be, and we think will be bought back pretty quickly.
Angela, I've got 30 seconds, so keep this brief if you can. Do you think Meta is on the brink of a third quarter 2022 type moment all over again? Or are we beyond that now?
I mean, that's a great question. I think we're beyond that. But, I think it remains to be seen. I think, I really think Meta is this really interesting story. I mean, and the cost that they've been able to absorb in many respects and still grow and keep those margins, I think is really interesting. I think there's also, the potential for them to really cut some other non-AI oriented course, whether it be tied to the metaverse or something else, that could really help them here over the next couple quarters. So we'll see.
Could be a stock to watch. Angelo, appreciate your honesty. Thank you, sir. Angelo Zeno there of CFRA. Up next, Pooja Sriram of Barclays. That rate decision a few days away.
Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily. Every business day at 2 p.m. Eastern, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
The opening about 60 minutes away. 2-day winning streak on the S&P 500. 2 consecutive weeks of gains. Last week, the biggest weekly gain for the benchmark in America, going back to August. A boost to this equity market and another boost this morning, up by 1.3 on the Nasdaq 100. Outperformance on the Russell last week. This morning, up by another 1%. As we count you down to the cash open, let's get you some morning movers with Danny. Hey, Danny.
Hey, John. A scoop from the deals team this morning that Nelson Peltz's Treon is looking at buying the rest of Janus Henderson that it does not already own. It's teaming up with General Catalyst to do this. Treon already owns about 20%. So again, this would just be for the remaining shares. Shares are up just under 13% for Janus Henderson. Elsewhere, it is the big hyperscaler earnings this week. Microsoft will be reporting on Wednesday, and we had an analyst upgrade heading into that from Guggenheim saying that they are well positioned to take advantage of the AI trade. But this is a significant upgrade because now 99% of analysts have have a buy rating on Microsoft. So those shares up 1.4% off the back of that. We also learned from Lululemon this morning that they will now be selling NFL apparel. They're teaming up with Fanatics and NFL to do that. Shares are up 4% off the back of that. Lululemon has been leaning more into athletics, signing on various sports stars like Lewis Hamilton for this advertisement campaign. Apparently Joe Montana is going to be the face of that. So interested to see what Lululemon gear he wears. John.
They've got to turn this story around because they've had a terrible year. That stock has had a terrible year. Danny mentioned Microsoft. Just looking at the analyst recommendations, you're doing the same thing. 72 buys, 1 hold, 0 sales.
Why fight against a train that has been a freight train, that has been such an engine of growth and that is backing the entire equity market? You could argue there have been studies that show that buy-side analysts tend to be overweight and bullish on stocks until the very end. So you could make that argument that it's not exactly a leading indicator. Nonetheless, you know, how much career risk? This is sort of what I hear in my head, your voice saying, how much career risk must there be to say, sell your Microsoft holdings right now?
Yeah. Losing access to management, all of those kind of things.
Losing access to your investors.
Plagues the industry.
Yeah, well, that's true, too.
It's a problem. It's a real problem. Equity futures on the S&P up by 0.8% so far this morning. Looking ahead to the week ahead, lots of tech earnings coming Wednesday and Thursday. Big meeting between the US and Chinese leader coming up on Thursday, too. Sandwiched in between somewhere, a Federal Reserve decision that we're all taking for granted. Mike McKee, just an assumption, they cut interest rates again, and it's easy sailing, except you and I both know it's different. That committee, Mike, how difficult will it be for the Chairman Powell to communicate anything beyond the October decision?
Oh, it's going to be very difficult because the government shutdown has lasted so long now. We're really in danger of losing the data we would have gotten for October, and who knows what's going to happen in November. They don't meet after a Wednesday until the 10th of December. But I do have a surprise for you this morning, something they can hang their hat on a little bit. We have some data. The Chicago Fed puts together a real-time unemployment forecast. They do use some of the government data in it, but since they haven't got it, they're estimating, and they say in October we would have had an unemployment rate of 4.35%. September would have been 4.34%, so no real difference. They'll update this on November 6th, which is the day before we would get the the payroll numbers for October if they were coming out. But their view is we're not seeing a real deterioration in the labor market. You do mention that Wednesday is the Fed meeting. We have a very light data week because all these data points have been canceled. So you can pretty much focus, except for Wednesday, on all the tech earnings. We do get consumer confidence. And jobless claims, we get now the raw data, 4 o'clock on Thursday afternoons. We adjust it for you. By Friday morning, we'll have a pretty good idea of what jobless claims are. And as we saw last week, they're not really changing the picture either. And here's one bit of good news, maybe. You know, Omer Sharif, he's at Inflation Insights. He's looked at the possibility of an October CPI report if the shutdown ends within the first week of November. He says that BLS suggests they need only about 2.5% of their sample to get a reasonable estimate for the CPI. They'll have gasoline, cars, wireless phones data already sent in by the private sector, some for apparel, furnishings, and prescription drugs, and they can go call up landlords, the big landlords, and ask them, what were you charging? Same with insurance. So he thinks there's a possibility, you can keep your fingers crossed, that the Fed will have some sort of price data to use before the next meeting.
Mike, just remind us, when's the survey week for payrolls? When do things get messy if we miss that?
Survey week is the week that the week that includes the payroll that would be on the 12th of the month. So we've well past that, but a lot of that data, almost all of it, comes in now from electronic sources. So we can get the total number of jobs once there's somebody to put that out. It's the unemployment number that's difficult to get because that's a telephone survey, and the longer you go without doing it, the more you get into memory bias and things like that. So there's a possibility we get half of that report.
And Mike, I'd given up on October. I was thinking about November. Mike, thank you. Mike McKee there. Yeah, I think we've all given up on October, haven't we?
I mean, honestly, how difficult the situation is that we are completely blind, and we are going to be completely blind for at least 1 month, if not 2, if not 3. You are right. How likely is it that we're going to get data in any kind of clean sense through the end of the year? So year over, like you said.
Confirmation bias. It's difficult to get people to change their priors when we don't have the data. And that's why the divisions of the Federal Reserve aren't going to resolve themselves anytime soon.
It's equally difficult because people are looking at earnings to try to fill the gap. And we keep saying the market is not the economy. These big companies are not necessarily the Main Street classic struggle that you're seeing in some of the private asset markets, which have seen pockets of weakness, not necessarily systemic, but pockets. I mean, that to me is really the key question. How much are people flying blind and going with just confirmation bias?
I'm joking about year over, just a little bit, of course.
Are you?
But no September jobs report, no October jobs report. It looks like, based on what you're telling us about what's going on down in Washington, D.C., Terry Haynes was on the program earlier this morning, and he said end of November is when the shutdown ends, so maybe no November jobs report either. So we're waiting for how much longer before we get this data?
I mean, weeks, if not months, definitely, when it comes to the data. Weeks, if not months. But Mike McKee's point there, someone talking about the fact that we can maybe get somewhat of a print just based off a 2.5% sample, that maybe speaks to maybe we need to have better data collection.
It's going to raise obvious questions. Omar does fantastic work, by the way, on the inflation story. Let's stick with the Federal Reserve ahead of Wednesday's rate decision. Pooja Sriram of Barclays writing, the FOMC is nearly certain to cut 25 basis points this week. Pending surprises, we retain our baseline for additional cuts in December, March and June, with risk that these cuts are more delayed. Pooja joins us now for more. Pooja, good morning.
Good morning.
Let's pick up on that. So October feels like it's done. I can't find a single person who thinks they won't cut interest rates on Wednesday. We've been sort of pondering the idea that it gets difficult to guide beyond October. How does Chairman Powell navigate that in the news conference?
Yeah, it's going to be difficult. I mean, we are in uncharted territory when it comes to not having data flow. This is indeed the longest the BLS has had to furlough workers, and it's going to create a pretty messy situation in terms of not having decent October data, maybe not having October data at all. And I think at the minimum, he will communicate that, they've not had their traditional estimates from official data, and it's going to be difficult. But this is where it gets problematic, right? Data or no data, you still have to make policy. And that's where it gets tricky for the FOMC.
So they're in the risk management business. Why is the prudent decision to carry on cutting when you don't have the data you need?
Well, I think whatever we're getting in terms of alternative data on labor markets are still pretty decent relative to, I think, the alternative data we get on inflation, for example. And, we've been getting state-wise claims data that seem to suggest that claims have been about where they've been in the past couple of months, and not really moving much higher, but also not at very low levels. We're able to piece together some data on job openings, some data in terms of hiring, and it gives us a situation where the labor market is very similar to how it was in August, which is pretty low level of monthly employment gains at about 30 to 40,000 a month. We have some indication, as Michael pointed out, from the Chicago Fed, which tells you the unemployment rate is at 4.3, perhaps ticking slightly up. So if anything, the data seems to paint a picture that risks to the employment side of their mandate are still to the still very much to the downside. On the other hand, we did get that one exception, which is the September CPI data, and again, pretty benign despite all the tariff noise. So in that world, they could perhaps decide that cutting one more time in December seems to be the prudent policy decision to make.
Which is a de facto tacit admission that 3% inflation is fine. I mean, at a certain point, you have to think they don't seem bothered by 3% inflation, even though they still say that 2% is their target. You expect CPI to end the year at 3.1%, and the following year, 2026, at 2.8%. 3% essentially. I mean, is that really what you're seeing?
I think the story here is, again, you're looking at the employment side of the mandate and getting more concerned about that. The inflation story, I think, for the FOMC is one where it's really a lot of the tariff-induced price shock, but something that could subside potentially, over 2026. And that, I think, feeds into their narrative that inflation is perhaps on track towards their target, and the employment side really needs to be addressed. Risks, admittedly, Lisa, are to the upside for inflation.
There's also a question about whether people are underappreciating strength in the labor market going forward. And maybe not now, but maybe beginning of next year, if people do have more confidence and companies are getting a stronger sense of what the backdrop is, they're getting some of the rebates from tax plans. What's to say that there isn't an upside risk to hiring, given the fact that a lot of companies have been sitting on their hands but doing pretty well?
I think that's a fair statement. And it's, again, you've got to wait and watch to see how this pans out. We are now in a very precarious balance between labor supply and labor demand, right? Something that Chair Powell has told us. We've never in the past seen this really odd dynamic where we're seeing labor demand weaken, but at the same time, you're getting this pretty sharp drawback in labor supply because of the immigration restrictions. And while theoretically it seems to make sense that it's really a labor supply story, you shouldn't see labor market slack pick up, etc. I think from a risk management perspective, that's what the FOMC is doing. We've got to wait and watch to see how the data pan out.
You mentioned tariff-induced inflation. Where are you seeing the pass-through right now?
It's hard to say because it really depends on what the counterfactual would have been had we not had tariffs, right? Now, our estimate is the pass-through has been anywhere between 50 to 60% on average, and there is likely more to come. But again, this is something that's been extremely hard to estimate on a month-to-month basis. The closest historical precedent we've had is a 2018-19 trade scenario, and even then, I wouldn't say it's necessarily an apples-to-apples comparison. But we're seeing signs that there has been tariff-induced price pressures, and our sense is, as we enter Q4, perhaps early Q1, there's more to come.
If there's more to come, how do you get to the 2.8% inflation target of next year that Lisa was mentioning?
Well, I think it's really a concept of base effects. If you think you get really elevated inflation in Q4 of this year, but it really starts to wind down by the end of 2026, you could get that 2.8%. It's not ideal, as Lisa said, but perhaps not as high as 3 or the above 3% that we were once forecasting.
Pooja, it's good to see you. Thanks for being here. Looking ahead to this Fed decision later this week. Pooja Sriram there of Barclays. I'm pleased you brought up the forecast, Bramo. It's just been this rolling 3-year view of getting back to 2%. And we've been rolling with this 3-year view of getting back to 2% for a number of years now. And the tension, I think, is building between the aspirational forecast the Fed puts out every quarter and the reality of the data itself. And if you keep cutting with inflation closer to 3 than it is to 2, overwhelmingly the consensus is going to be that you don't really care about the 2% inflation target anymore. And there's good reason for that opinion.
It's been 5 years with inflation above 3%. According to Pooja Sriram and the folks over at Barclays, you're talking about next year being basically at 3%, 2.8%. So that would be 6 years of essentially 3% inflation. At a certain point, is that okay? Is that kind of what a market is just accepting and not necessarily freaking out about? And is the Fed taking that and running with it?
There was a scathing Wall Street Journal editorial board opinion piece this weekend that talked about also not just the Fed, but Washington in general, even the politicians accepting a de facto 3% inflation target and how they don't think this is what anyone had in mind when they cast their votes last year.
Credit to Alarian. Talked about this years ago. If you were to set today's inflation target, you wouldn't pick 2, you'd pick 3. It's hard to get it down to 2. And this Federal Reserve's not in a position right now to even think about that or comment on it publicly.
And frankly, they don't want to risk the labor market in order to make that compromise. And right now, they're going to keep saying 2%, but right now their actions are saying 3.
Stocks are at record highs. They like it, in the equity market at least. It's weird the bond market's so comfortable with this, but that's a conversation for another time. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara with more. Hey, Yahara.
Hi, John. President Javier Milei's party won Argentina's midterm vote. Milei said he'd have the backing of 101 members of the lower house and 20 senators, protecting his veto power. The result allows him to pursue free market policies with billions of dollars in backing from the Trump administration. Meanwhile, the U.S. and China are closing in on a trade deal. Both sides spent the weekend in Malaysia coming to terms on a range of issues, including export controls, fentanyl, and shipping fees. Treasury Secretary Scott Bessent says President Trump's threat of a 100% tariff on Chinese goods is effectively off the table, and he expects China will make substantial purchases of American soybeans. And the New York Jets finally earned their first win of the season yesterday, pulling off a thrilling comeback to beat the Bengals 39-38. The Giants were not so lucky, falling to the Eagles 38-20, while the Patriots dominated the Browns on their way to a 5th straight win. And in prime time, the Packers, led by Jordan Love, came back from a halftime deficit to defeat Aaron Rodgers and the Steelers 35-25. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for this morning. Up next, we'll set you up for the day ahead. Plus, Noel Dixon of State Street's here with trade optimism pushing bond yields higher and equities a whole lot higher. Equity futures going into the opening bell up this morning by 0.8%.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
In case you missed it on Bloomberg Tech.
How do you navigate this time? How are you seeing the ability for NPR to thrive and drive forward?
Well, there's certainly no roadmap for this moment in time. I think this represents a step change for all public broadcasting. It's not just here in the United States. The good news for us is that we have a viable model because we've built audiences over the 50 years we've been in existence. We have 46 million listeners a week.
Don't miss Bloomberg Tech, live every weekday.
Didn't really think I had a problem.
I would isolate, self-medicate. Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findtreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
What I really worry about is that investors are very much of the mind the Fed's going to continue to cut. Inflation is, a 2021 story, largely contended with, and I think the risk is you're cutting into a higher growth, higher inflation environment, and the question is, what does the bond market think about that ultimately?
In the meantime, who cares? Equity market loves it. Seems to be the takeaway. That's not my view. That's Craig Peters there of PGIM Fixed Income, all-time highs on the S&P 500. Could it disrupt fixed income in the months to come? At the moment, not really. Equity futures up by 0.8% on the S&P, on the Nasdaq 100 higher by 1.2. What a week we've got coming up for you. The week ahead looks like this. At 8:30 p.m. Eastern Time, the President holding a bilat with the Japanese Prime Minister. Then things really start to pick up into Wednesday. The Fed's interest rate decision and Chairman Powell news conference is just around the corner, plus earnings from Microsoft, Alphabet, Meta. Thursday, a sit-down meeting between Trump and Xi, plus numbers from Apple and Amazon, and throw in there too an ECB interest rate decision just for good measure. Equity markets are doing well, up by 0.8% into all of that. Noel Dixon of State Street writing the following: despite the impulse to decouple and the potential for further horse trading between the US and China, the mutual economic interdependence will likely yield a result that markets can live with. Noel joins us now for more. Noel, welcome. Equity market likes it. You've talked about the path of least resistance, higher. When do things start to get tricky?
Yeah, thanks for having me. I think things start to get tricky when we get into the first quarter of next year. I do think that, the Fed right now, they're probably easing into strength into the U.S. When we look at non-residential fixed investment, we see, a pickup year over year, pretty solid on the equipment side, not so much with structures. When we look at the labor market, it's interesting. Before the shutdown, the labor market actually was still at least on track, although moderating, on track to not have a spike in the unemployment rate. So we have, on aggregate, a consumer that I think is still in a pretty decent position. Like I said, CapEx spending is starting to look pretty healthy. So we do have a situation, I think, where the Fed is likely cutting into strength.
At this point, it seems like big tech has been the leadership. We've seen the Magnificent Seven names account for about half of the 15% gain that we've seen in the S&P 500 year to date. How important is it to see really good earnings, better than good, better expectations than anyone could have imagined in order to keep it going?
Yeah, I think the bar is high, and I think that, you know, even if we get, say, a number that's in line and it doesn't really knock the cover off the ball, I do think the bottom line is there is no other alternative. I think you know, the Mag 7 still are appealing. Some of the other broader tech, hardware, software companies are still appealing. I think that's the path of least resistance. You know, relative to the other 493 in the S&P, you know, these tech companies have the solid earnings, and they have the trajectory of, you know, basically this AI revolution.
Meanwhile, earlier this morning, we were talking to Avitas Perduto from RBC, and he was talking about bank mergers and how that's been a huge driver of activity outside of the tech sphere, although you could argue it is also levered somewhat to the tech sphere. This morning, we got another deal, Huntington Bank shares agreeing to buy Cadence Bank, and it just sort of goes to this idea that maybe even in the regional bank space, there's real alpha. Is that an area that you're looking at because of this huge wave of M&A?
Yeah, so the regional bank space, you know, I think there is some opportunity, not necessarily due to you know, alpha generation more so. I just think there has to be a consolidation, as I think some of the, you know, for example, delinquencies with office loans, that's crept up, if you look at the St. Louis Fed's measure, to about 11%. So that's the highest since the GFC. So I think there's a recognition that there has to be some consolidation to sort of remedy some of these dislocations, I think, that exist in the credit space.
No, Jonathan talked about your note coming into you about the mutual economic interdependence between Beijing and Washington that basically results in a deal that the markets can live with. What could the markets not live with? Because doesn't that act as a barometer to this administration?
Yeah, absolutely. I think the markets cannot live with a decoupling 100% additional tariffs on top of what's already implemented with China. They can't live with, you know, a China that basically cuts off rare earth exports. So if there is basically a tension or, you know, not a resolution to this trade sort of spat between the U.S. and China, that will be problematic for risk.
But does the market care that this is basically deferred until next year?
No, it doesn't. I think it's basically, you know, all we need to do is have something surface level that basically alleviates sort of the tail risks, like as I just mentioned previous to this, that eliminates those sort of, you know, rare earth dislocations, anything to do with export controls, any of those surface level issues. If we could get those reconciled, that'll be good enough for markets.
No, thank you, sir. Always appreciate catching up with you. Noel Dixon there of State Street Global Markets on the three big issues we're facing this week. Earnings on the tech side, Federal Reserve's decision on Wednesday, big talks between the Chinese and US leader. Market's comfortable with where things are. It's remarkable the market's comfortable with the status quo regarding trade, but it seems to be. So long as we avoid escalation, I feel like that's good enough. And the news we got over the weekend, I think, went beyond just avoiding escalation.
It really went to coming up with more of a framework, and I don't think people were expecting a real comprehensive framework ahead of that meeting between Xi Jinping and Donald Trump, and I think that really is the key. There was progress made, and how much was it because of the strategic misstep that China made with rare earths and what ire it created around the world?
At the same time, it does feel like a Band-Aid to what's going to be in 2026 when China might decide to pull out the rare earth export controls once again, which is why it feels like we're back to where the relationship was in May at the Geneva talks.
Just takes the bar up just a little bit going into that meeting. Greater scope for disappointment now, given the read-through over the weekend.
Yeah, but right now, keeping the status quo is good because that gives time, and both sides are buying time because they want to rearrange. But you're right. If suddenly someone says something bad and there's an advertisement or there's a Winnie the Pooh image or something like that, everything goes
Why Winnie the Pooh? I'm not making you go there, don't worry. I'm not doing that. I know exactly what you meant.
Right?
I know exactly
really?
what you meant. All right, yeah.
Okay, let's move on.
Coming up tomorrow, Jack Caffrey of JP Morgan, Congressman French Hill, former Dallas Fed President Robert Kaplan, Ed Yardeni of Yardeni Research. From New York City this morning, good morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance. I'm Alex.
Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones, Erica Ayers-Badon, Robin Arzón, Justin Tuck.
Stay tuned. You won't want to miss it.
Let's talk about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They build this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress. I changed during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human beings, for the world.
The key issue right now for us in the diamond space is the declared divestment of Anglo from DBS. And as you know, Anglo holds 85% stake in DBS. Botswana, the government of the Republic of Botswana holds 15. We are resolute now, and we've communicated a firm intention to increase our stake in DBS to a controlling stake. We have lined up a number of potential collaborators with us, if I may put it that way. We have targeted funders, we have parties, we have the Oman Sovereign Wealth Fund, we have others who are willing and ready.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
A rally on a record, 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, trade optimism is in the air. Global stocks rally on news that U.S. and Chinese negotiators have found common ground on a range of issues.
And the bull market faces a make-or-break week with tech powerhouse earnings on deck, plus a Fed decision on Wednesday.
And deals. Huntington scoops up a smaller rival. Nelson Peltz eyes a Janus Henderson buyout, while Keurig Dr. Pepper lands funding for JDE Peets from Apollo and KKR.
Already a really busy week just based on the deals, and it's about to get even more intense for this market. A quarter of earnings coming in the form of the big tech giants. 2 days this week. It's likely to dictate the entire direction of the stock market, maybe for the remainder of the year. 5 of the Mag 7 stocks will be reporting earnings on Wednesday and Thursday, with investors looking for any signs of return on AI spending and plans to hire top AI talent. We'll also hear from Apple and Amazon, but all those shares surging in the pre-market, Matt. Microsoft got an upgrade from Guggenheim today, and now 99% of analysts have a buy rating on the company.
Wow. All right, we'll take a look at that throughout the program. Going the other direction, rare earth stocks on the move after Treasury Secretary Scott Bessent said that he believed China would delay its rare earth restrictions for a year. As a result, all of these stocks that the market's been betting big on lately are down across the board. Danny?
And that's dictating the entire direction of an up market today. Let's get more more into it. Chinese and U.S. trade negotiators have lined up diplomatic wins for Presidents Trump and Xi Jinping to unveil at a summit later this week. Here's how Scott Bessent says it came together.
President Trump gave me a great deal of negotiating leverage with the threat of the 100% tariffs on November 1st, and I believe we've reached a very substantial framework that will avoid that and allow us to discuss many other things with the Chinese.
Joining us live from Tokyo is Bloomberg Washington correspondent Tyler Kendall, where she's traveling with President Trump. Tyler, we have a positive setup. What are we expecting this week?
Yeah, hey, Danny. Well, it really feels like we're seeing a cooling in of the tensions to keep the conversations going about a potential broader trade deal. Now, as you mentioned, it appears that both sides are teeing up some of these diplomatic wins for President Trump and Chinese President Xi Jinping to finalize as they head into their face-to-face meeting on Thursday. Importantly, this week, we're likely going to see an extension to the trade truce that's currently in place and set to expire on November 10th, as the U.S. Treasury Secretary went on to say that that threat of an additional 100% tariff is off the table for now, seemingly in response to Beijing delaying its implementation of proposed export controls related to critical and rare earth minerals. The Treasury Secretary also said that we're expecting China to resume its purchases of U.S. soybeans, though we have yet to get details on how much or how quickly that will happen, as analysts say that China has actually front-loaded its purchases of soybeans through the end of the year, so perhaps relief won't be as immediate as this administration wants. There's a few other concessions that we might hear about, including that China has said that the U.S. will no longer impose fees on Chinese ships that are docked at American ports. And our own analysts at Bloomberg Economics estimate that the U.S. will likely take off the table some of the threatened but not yet imposed restrictions when it comes to the advanced semiconductor supply chain related to software and also cloud computing. Danny, there's a lot on the table and a lot that still needs to be finalized, but it really feels like we are toning down the tensions that we've seen escalated in recent weeks. I'd say I'm keeping my eye on what happens around that 20% tariff related to fentanyl. That is the one area here that is not new. That tariff has been in place since back in February. In fact, it was one of the first tariffs actually implemented, and we've seen both sides say that they're making positive momentum when it comes to the issue.
Of course, none of this will be finalized until Presidents Trump and Xi meet face to face. We've been waiting for this since the election. What do we know about the tick-tock of this meeting? When is it going to happen? Where is it going to happen? And how long will it last?
Well, Matt, it's going to happen on the sidelines of the APEC summit on Thursday, and I would actually point you to what is happening ahead of time and how the U.S. appears to be trying to gain leverage going into these talks, even as we get these positive indications from both sides that they are making progress. Just look at the critical mineral deals that President Trump signed during the ASEAN summit, which he was at over the weekend in Malaysia. Of course, a bid to try to shore up the supply chain with the U.S. and counter China's grip on the global market. And then he's in Japan before he heads over to South Korea. While he's here, he's expected to host a reception with business leaders. We know investment is top of mind, as Japan had pledged that $550 billion investment fund as part of its deal to receive that more preferential rate of a 15% tariff. I have to say, every local Japanese newspaper that I picked up this morning, the main headline was that the U.S. and Japan, according to local media reports, will enter into a shipbuilding cooperation agreement. Again, another critical industry that the White House is trying to shore up ties in with as they try to compete and head into these broader negotiations with China later in the week.
All right, Tyler, thanks very much. Bloomberg's Tyler Kendall reporting there live from Tokyo. Now, let's turn to a number of deals on the corporate front this Monday morning. Regional lender Huntington will buy Cadence Bank in an all-stock deal, valuing Cadence at $7.4 billion. Bloomberg Intelligence senior regional bank analyst Herman Chan joins us now. So, Huntington Bank, out of the great state of Ohio, making moves in Texas.
That's right. It's a deal that really brings the Houston market in particular and also fills in some smaller markets in the Southeast that will really propel Huntington forward. Huntington talked about increasing their return on tangible equity by about 200 basis points. So it's going to be a deal that really improves profitability and expands further into the Texas market after the Veritex deal that was just closed last week.
Yeah, it was, to your point, they literally just did a deal, and we were showing a screen basically of all the regional bank deals that have happened so far this year. Herman, it has a feeling like the floodgates have opened.
It really has. And for a bank like Huntington to be this aggressive, 2 deals in 2 years, whereas they've been much more conservative with tie-ups by the current management team. So it feels like something is really happening with bank M&A. There's been a lot of regulation easing with tie-ups. You're getting deal approvals at a much faster pace, and you've seen deals from a lot of these larger regional lenders like a Fifth Third, like a PNC. So we expect more to come.
Right, Herman, thank you so much for covering them for us. That is Herman Chan of Bloomberg Intelligence. It's been a busy day for deal news. We also learned that Nelson Peltz's Tryon Fund is working with General Catalyst on an offer to buy the rest of Janus Henderson that it doesn't already own. Bloomberg senior deals reporter Michelle Davis joins us now. Michelle, a great scoop from the team. What's the thinking behind the playbook from Nelson Peltz to buy the rest of Janus Henderson?
So this is really an AI play, and it's a continuation of Tryon's investment in Janus Henderson. They've been in the stock for 5 years, helped oust the CEO, and now the view is they want to partner with General Catalyst, which is a well-known, tech VC investor, to basically help the company adopt AI and maybe generate better returns than they have now.
There are a lot of deals, as I said today. Novartis is in for a $12 billion deal as well. I guess there's a lot of corporate confidence out there.
There is. I mean, when the stock market's up, it makes sellers more open to selling, and it also gives buyers confidence and, more currency to do M&A with. The interesting thing about this Novartis deal is it's their biggest deal in 10 years, biggest deal under the current CEO, and it just continues this trend of, big pharma companies needing to buy smaller companies with a lot of innovative drugs to boost their pipelines.
Well, it's one specific sector, and it's a clear catalyst that you're talking about, but we're talking about asset management, regional banks. What is the overall catalyst that's given these companies in corporate America the all clear to go ahead with a lot of these deals?
Well, and to your point about sectors, there was also a massive water utility deal, so it really runs the gamut. And I think it all comes back to confidence, as we were talking about, and just this view that regulators under Trump are going to be more lenient, and investors seem to really be liking M&A. Shares are going up after M&A announcements, so it's like a FOMO thing, Deals beget deals. The more you see it, the more you'll see more of them.
Shares are going up after deal announcements, but not after earnings beats, and I think that tells you something.
Right. Well, I mean, because of revisions, and we're going to talk about that throughout the show. Michelle, thanks so much for joining us. Bloomberg's Michelle Davis covers M&A for us. Quick check on what's going on in terms of futures. You saw they were up across the board, and they remain pretty decent here. S&P futures up about 0.9%. NASDAQ futures up 1.3% because we have a ton of the big tech. I think 5 of the Mag 7 companies reporting this week. We already had Tesla, and we don't get NVIDIA usually until months after earnings season.
November 19th?
Exactly. It is November 19th, yeah, but they're always coming so late in the game.
Yeah, well, we do have some single stocks moving, though, ahead of that. Beyond earnings, Lululemon shares are on the rise. They entered an agreement with the NFL and Fanatics, a sports merchandiser, to develop a line of fan apparel as the yoga wear retail searches for new avenues of growth. They've really been struggling. They need this. They've also signed on a lot of athlete spokespeople as of late, including a very, in my opinion, successful campaign with Lewis Hamilton.
All right, I haven't seen that, but I will take your word for it. Keurig Dr. Pepper raised its sales outlook as the price of coffee climbs, and investors await more detail about its acquisition of JDE Peet's in terms of the financing. We got a little bit on that today.
Yeah, little deal news. Apollo and KK are helping in an investment for that spinoff. Meanwhile, Newmont shares, they are dropping 4.5%. The miner is looking into a deal to take over Barrick Mining's Nevada gold assets.
Coming up, Javier Milei's party won Argentina's midterm vote in a major comeback. We're live from Buenos Aires on a story that's moving assets in a big way today. This is Bloomberg Open Interest.
David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
In case you missed it on Balance of Power.
I'm sure you're having a ball and you don't want this to end anytime soon, but I'm just wondering how long you think this is going to go on.
This is a very frustrating exercise for us. It's political games being played by Democrats in the Senate. They're talking about the Obamacare subsidies, for example. That's a December 31 policy issue. We were always going to negotiate that and debate it and deliberate over it in October, November. They're trying to pretend that's the issue of the day. It's not. It's a red herring. It's a distraction. They're not doing their jobs.
Would you consider a promise to bring that negotiated legislation to a floor vote, up or down? We'll make sure that happens before the end of the year.
There's a lot of conservatives who have real problems with the Obamacare subsidy. Premiums have skyrocketed since it was created in 2010. They're up like 60%. So something's not working. There's real reforms that are needed. But it's a complex issue that takes a lot of time for members on both sides of the aisle and in both chambers to negotiate. They're trying to short circuit all that right now. That's not how this process works.
Don't miss Balance of Power live every weekday.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Let's get to high interest now. We'll look at what's making headlines around the world. Treasury Secretary Scott Bessent confirmed 5 finalists to succeed Federal Reserve Chair Jerome Powell, President Trump, I should say, saying he'll decide on the new Fed chair by the end of the year. The list includes Fed governors Chris Waller and Mickey Bowman, also the 2 Kevins, as well as BlackRock executive Rick Rieder. Powell's term as chair ends next May. Cigna will scrap prescription drug rebates in many commercial plans starting in 2027, shifting to upfront discounts meant to cut pharmacy costs for patients. The move is in response to pressure from the Trump administration to end the so-called rebate kickback system. The change could reshape billions in drug pricing flows between manufacturers, insurers, and employees. And President Javier Milei's party scored a decisive midterm win in Argentina, giving the libertarian leader a solid grip on Congress to press ahead with sweeping free market reforms, cheered by investors and backed by President Trump.
The Argentinians showed that they don't want to return to the failed model. Argentinians told populism to stop. Populism never again.
The victory, a sharp rebound from last month's Buenos Aires loss, sparked optimism in markets. You can see here what happened to Argentina dollar bonds, and President Trump says, we made a lot of money on this election, Danny.
Let's get more on that, on the Argentinian midterm. Joining us now is Patrick Gillespie, Bloomberg's Buenos Aires Bloomberg chief. Patrick, what did change between last month and this that allowed for this not surprise victory, but surprise considering the margin that Milei's party won by?
Danny, this was a surprising, and for the optimists, I think even a surprising outcome. Milei's party won 41% of the votes nationwide, and this really gives him a strong grip. As Matt mentioned, he's going to have 1/3 of the seats going into Congress. That protects his veto power and really gives him a lot of negotiating power to advance on structural economic reforms, on labor, tax, pension. These are issues that investors and I think a lot of people in Argentina have wanted to see for decades. So now there's a really special window of time to get some special changes through in Argentina. And what changed? I think the vote in Buenos Aires province about a month ago spooked people that there could be a return of the leftist policies that that Milei inherited when he took office 2 years ago, that obviously created inflation over 100% and left the economy in a crisis. And it's important to note that Milei won the province of Buenos Aires today, so clearly voters there had a big change of heart, and that is the most populous province in Argentina, with over a third of the country living there. So really, Buenos Aires made a big shift in just a period of 50 days, and you also saw that Milei won in most of the provinces across the country, I believe 14 of the 24. So really a big historic win for Javier Milei, and now investors are going to want to see if there's going to be some policy changes on the horizon.
I mean, it's so exciting on so many different levels, Patrick, right? Because this means Argentina may be able to finally break the decades-long cycle of failed reforms and defaults. It also is a huge win for the U.S. because President Trump and Scott Bessent went big behind Argentina, and that bet is going to pay off not only financially, but also in terms of, I would guess, appreciation from the people of Argentina. And then finally, a lot of sharks were circling in terms of the shorts, and they're going to get hurt badly today.
Absolutely, man. You're going to see, I think, Javier Milei and President Trump continue to build that relationship. Whether the $40 billion rescue package will be needed at this point is a question, because we're seeing the bonds rally, the peso is rallying today. Treasury Secretary Scott Bessent signaled on Air Force One earlier today that he thinks markets will take care of itself at this point. And that the U.S. support was supposed to be always a bridge to these elections. So I think people are going to want to see if Milei can continue to strike a conciliatory tone with the centrist blocs in Argentina, especially the governors, to get some of those economic reforms passed. It's important to note he does not have a simple majority in Congress. That's what he needs to get these reforms over the finish line. So he's got a much better negotiating bloc to work with. He's got his veto power protected, but he still needs to work with the centrist blocs in Argentina to get these major reforms across the finish line.
Patrick, great to get some coverage with you. Bloomberg's Buenos Aires Bureau Chief Patrick Gillespie talking to us about really this incredible story unfolding in Argentina. Let's get a look at some of the other movers on our radar this morning. As we heard from Michelle Davis earlier, American Water Works will buy Essential Utilities in an all-stock deal valued at about $12 billion, expanding both companies' reach across 17 states.
And deals abound everywhere. Grindr's extending gains that it saw on Friday after it confirmed a take-private bid from two of its largest shareholders. Those shows up nearly 2%.
And Wall Street analysts are now almost universally bullish on Microsoft, with Guggenheim upgrading the software company to a buy from a hold. As a result, now 99% of analysts that look at this stock have a buy rating. It's actually 72 of 73.
So it's like 98 point something.
6, yeah.
One hold, zero sells on the thing.
Exactly.
Literally zero sells. I think the one hold is from Hedgeye. So the one like not bear, but like kind of meh on it. Speaking of which, coming up, we're going to talk more about earnings. RBC's Lori Calvasina says backward-looking earnings are strong, but forward revisions aren't so hot. She's going to be joining the show next. Stay with us. You're watching Bloomberg.
Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones, Erica Ayers-Badon, Robin Arzón, Justin Tuck.
Stay tuned. You won't want to miss it.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
In case you missed it, on the opening trade. Rates are on hold. I think rates being on hold is appropriate for the current period. If they tighten more, then we have to loosen later. More than a year ago, I talked about that being a policy boogie.
Yep.
And I thought that's not a good thing for monetary policymakers to do. The hold is appropriate at this point.
Avoid dancing,
Avoid dancing.
Don't miss the opening trade live every weekday. What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
RBC says third quarter earnings are unlikely to bring a major lift to market sentiment. Strategist Lori Calvasina says backward-looking earnings results are strong, but the ratio of companies reporting upward revisions is declining from recent highs for both the S&P 500 and Russell 2000. Joining us is the woman herself. It's RBC's head of U.S. equity strategy, Lori Calvasina. Lori, great to see you this morning. Feels a little bit tricky, especially ahead of the big tech earnings, which everyone has been saying this is the thing that's going to keep the equity market afloat. You're a little bit more skeptical that the earnings are as big of a driver as others.
Yeah, and it's not that we don't think earnings are bad, right? Like, earnings are a very solid foundation here. And in fact, if you look at the bottom-up consensus, it's nudged up for next year from 305 to 306 because of a little bit of rounding. So, you know, they're technically headed in the right direction. But we like to look at earnings sentiment. This is something I've been looking at for 25 years, my entire career as a strategist. And it's a good way to normalize earnings data between indexes, sectors, industries. Are you taking numbers up or not? Like, that's really all it's asking. And what we were seeing is that we had hit typical, you know, kind of highs outside of the recovery on a major crisis in August, right? And that was kind of in the mid-60s for the S&P 500. So like 2/3 of your revisions were still to the upside. That has fallen down to about 52% in our latest update. If you look underneath the surface, the tech sector is sitting up at typical highs on that indicator. Every other sector has decelerated. Things like industrials and materials have actually fallen into negative revision territory. The Russell 2000 has actually fallen into negative revision territory. So it's just a way of saying, look, we had a tremendous amount of earnings enthusiasm and optimism in that last reporting season. It got about as good as it tends to get, and now it's coming back down to earth. It's going to be, I think, make or break in terms of what the tech companies do this week. The tech sector has been doing an enormous amount of heavy lifting.
We have, by the way, an amazing function on the Bloomberg terminal, EEG. I know you look at a 12-month rolling average of earnings revisions, right? The next 12 months. But if you look at EEG, you can see the past few quarters. Joe, can you pull it up? And here you see, you know, Q2, we jumped up, obviously, right before earnings. Q3, we also are coming up right in the last few trading sessions. But Q4 doesn't look that great so far. And it's clearly slowing down. I'm curious about the rest of the S&P versus the tech, right? Because I heard you telling Nathan Hager this morning on Bloomberg Radio that the rest, like the 490, right, is valued at 18 plus times forward earnings, which is pretty heady stuff.
Yeah, look, everybody's trying to say we're in this AI bubble. I think we have a valuation problem in the NASDAQ 100. I think we have it in the S&P cap weighted. I think we have it in the S&P top 10 names, which is, you know, Mag 7 plus a couple extras. You're trading at the ceilings that have marked kind of the last 10 years, not necessarily at tech bubble highs. But when we look at the rest of the market, so S&P x the top 10 names,
you're trading basically at levels that have marked the peak every single time except for 2021. So I don't think that this is necessarily that we've got this AI bubble and the market has to correct. I think we've got an overvaluation problem everywhere, including these AI-related names that are also sitting at peak earnings revisions. Peak valuation, peak earnings revisions makes me very nervous.
All right, we're going to come back and talk a little about that because we touched on the 18-plus times valuations for the rest of the market, but I don't know that the Mag 7 looks that crazy for growth stocks. And we'll get to it. We'll get to it. We have to take a break here. Laura Calvasina is staying with us. A check on futures ahead of the opening bell. Not moving in the last few hours. They've been at these levels all morning long because we're rising on optimism for trade, because we're rising on optimism for these tech earnings, and there's a Fed meeting this week. We're back in 2 minutes with the opening bell. This is Bloomberg.
For Trump to win, you're never too young to learn AI. That's why he's urging the government for school kids as young as 6 to be taught how to use it.
Within this system, from first grade, they all start with the AI education. They play 4 years, just playing. And then from 5th grade, they start to develop AI by themselves. And STEM and robotics, I see very clearly how Vietnam should be in future. Vietnam just about 100 million people, young people, good education, and latest technology. That's the only way to go. Education not contribute much profit for equity, but from the country point of view, that's most useful contribution, what equity should do. And today we're thinking about every kids, not in cities like Hanoi or Ho Chi Minh City, but kids in the countryside should got the good education. That's what we're going to do now.
So you're leapfrogging?
Yes, exactly.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Aqua in Sintra, Portugal, and this is Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. We're looking at a rally on top of a record. We closed at a record high on so many indexes, including the S&P, including the NASDAQ, including the Dow Jones Industrial Average on Friday. And now we're up another 0.8%, 0.9% on the S&P, and at least in terms of futures, NASDAQ futures up 1.2%. We'll get to the small caps in a second because Lori takes a closer look at the small caps than a lot of strategists do. In terms of the bell ringers, you've got Moishe Gubin leading Optimum Bank there, celebrating their 25th anniversary. The stock has not done well this year. Over the past 5 years, it's up about 44%, so it's better than a stick in the eye, as they say. You could have made a lot more money if you were in Fortinet, even with the huge drop. They had like a 23% drop at the beginning of August after earnings, and still the stock is beating out the S&P over the past 5 years, just absolutely crushing it over at Fortinet. Danny, what stocks are you watching?
I'm watching the big tech. As Lori Calvasino was saying, it is a make or break moment for earnings because you have Microsoft, Alphabet, Meta, all of them will be reporting. It's 2 days to dictate the entire direction of the equity market. It's 5 of the Mag 7 that are going to be reporting earnings Wednesday, and then Thursday, alongside of it, investors are looking for any sign of a return of spending on the AI spending, rather. Apple and Amazon, they will also be reporting along with the ones you see on your screen, Matt.
All right, going the other direction, rare earth stocks after Treasury Secretary Scott Bessent said he believes China will delay its rare earth restrictions for a year. I don't know how this caught anyone by surprise, to be honest. And they are down, that looks like large numbers, 6, 7%, 15%, but they have been up so much recently, a lot of them exponentially. So I don't think this is a huge dent, really. We're back with RBC's head of U.S. equity strategy, Lori Calvasina, and I just want to start off where we left off. The valuations of these big cap tech companies are like 25 to 42, depending on whether you're looking at Meta or NVIDIA, but they're not huge.
Yeah, look, I think that when we look at the basket, right, of just the top 10 names in the median, we're trading in line with where they've topped out in the past, right? This is a self-imposed ceiling to some extent, and we actually haven't been getting any expansion in that median multiple since August. So that's something that's told me this market is very, very earnings dependent. But, you know, one thing, Matt, that comes up a lot in the discussions about AI froth, are they overvalued? We look at their PEs relative to their long-term earnings growth rates, and then we do the same thing for the S&P x the top 10. And what we find is that it's basically the relative PE and the relative long-term earnings growth are the same lines, right? So they're getting bigger multiples based on the earnings growth that's projected to be there. And there's a little bit of a gap in those lines. Maybe, you know, that relative PE multiple is a little bit higher than it should be based on the relative earnings, but it's not a ton.
So if they're not overly inflated, and you're also talking about this idea that earnings going forward aren't as bright and sunny, does any of it matter? Does any of it matter if we're inking deals with China that I realize are more of a standstill than a move forward? Does it matter with global central banks set to cut and to continue cutting with the Fed this week? Can we just keep moving higher regardless of what earnings are telling us?
Well, look, I'll tell you that on the issue of rate cuts in particular, I've been hearing about that issue since the summer, and people who told me they were bullish on the market because of rate cuts back in late June are now telling me that they think a lot of the rate cut price action has been pulled forward. So I think, you know, there are things, right, that are obvious tailwinds, but the question is just how much has that been anticipated? And I think that's what these kind of peakish valuations may be telling you, is that a lot of this good stuff is expected. I do think there have been maybe, you know, some more openings on the trade side than we realized. I mean, we saw the market take a pretty big hit when it looked like the China stuff was going south. Now that it looks like it's a bit firmer, you're seeing the markets react to that positively. But I will tell you in general, Danny, I did not hear a lot of concerns about, you know, sort of the China-U.S. trade negotiations on the long list of things that people were worried about. So my guess is that has sort of limited upside.
Yeah, it's been said that the economies are so intertwined, it's in both countries' economic interest to make a good deal. I promise when we talk about the small caps, you in the past have focused on small caps, a lot of your research, and you mentioned that the Russell 2000 earnings revisions have gone negative. I also noticed in your research that small caps, that the Russell is top heavy. There's concentration risk there, just like we see in the S&P 500, which I didn't realize.
Yeah, it's something, honestly, Matt, we've been hearing a lot from our small cap PM clients over the last like 4 to 6 weeks. And I think the third quarter was very brutal, frankly, for a lot of active managers in the small cap space. And that concentration issue has made it very difficult for them to beat their benchmarks, in particular because the PMs have felt like a lot of the names that are up there are very low quality. And are
but what is it, like 40 companies make up 25% of the index?
It's you know, I'd have to go back and check the exact stats, but we do know that that number has moved up while the revenue share has moved down. So it doesn't, you know, kind of look like some of those other gaps. It does look like there's a major gap there, even in terms of revenue generation. The percentage of negative earners among those top 40 names is also, I think, around like 38% or something. Like it's, I'd have to go back and check that stat, but it's also kind of crept up as well. And so I think it's creating these pressures. I mean, you're seeing areas like the quantum names are in there, some aerospace and defense, biotech. Not all of them are low quality, but there are enough of them that are, that a lot of managers look and saying, I can't own this stuff. It's running, it's just swelling in terms of my benchmark, and it's low quality to boot. So how do we even measure valuation? So it's really creating a big pressure point. One thing I'll tell you, Matt, is we put out a new chart in the weekly today where we looked at small caps versus large caps and mid caps, and we looked at the PEs in the context of ROEs. We have so many people who want to buy the small caps because they're cheap, but they actually have much, much lower ROEs than the big caps that are getting bigger multiples. And you know, you sort of see people are paying up for quality, right? Like that's what this market has decided to do. And so small caps really are disadvantaged from that regard, including their biggest weights.
One thing we haven't talked about of what we've heard from companies are their margins. And margins have looked pretty strong. For the S&P 500, we're running just below 13%. It's matching, if not slightly exceeding, what we saw in 2021. There was Keurig Dr. Pepper today who said, we beat not on volume, but on price, because consumers are paying more, despite the fact coffee prices are so much higher because of tariffs and weather-related issues in Brazil.
Brewers have the same story, right? Beer.
Exactly.
Beer is the same story. They're not selling more beer, but it's more expensive.
It's everywhere you look, it feels like, in these consumer-facing companies. Can that last? Can margins last where they are? Will people keep paying up?
Well, we haven't run the stats through this reporting season yet. There's just too much going on. We've got 162 companies coming out this week alone. But we did look at how margin expectations changed between the end of June and Labor Day, basically. And you saw the S&P was flat and tech went way up. And then you saw the expectations around all the tariff-related stuff came down, especially in things like industrials and materials. And I have noticed as I've read through some of the industrial reports that we have seen people talking about margin pressures. So I think companies, you know, they're making a heroic effort here to work around the tariffs to mitigate as much as they can. I mean, the snarky part of me says, why weren't they doing some of this, you know, cost-saving stuff in the past where we just sort of leaving all this earnings and margin on the table? And
they had it too good.
Yeah, now we're magically finding it because their backs are against a wall. But I do think they're doing a very, very good job. And again, we think that this foundation is solid, but can you match that same excitement we saw earlier this year? It seems unlikely.
All right, Lori, great having you here with us. Thanks so much for joining us. Look forward to our next time together on air. And it's always so special for me because she does Bloomberg Radio in the morning with Nathan Hager on the same day, so I get extra prep
It's like
time.
the best day you could ever want if you like to listen to Smart Voices on U.S. Equities. Listen to Radio with Lori Calvasina all morning and then tune into Bloomberg Open Interest where we have Lori Calvasina.
Absolutely. Great programming note there. All right, let's get a check on the stock market right now, looking at some gains in the cash trade, just like we saw in futures, about the same amount here. And Danny, we're looking at 68.50 on the S&P.
Yeah, above 6,800, a new record after last week, which is the best week for U.S. stocks since August. We have 340 stocks up, 160 down. It is led by NVIDIA. It's the deal optimism over China, where the leaders will meet. Xi and Trump will be meeting on Thursday after those 2 days of talks in Malaysia. Microsoft, Apple, both are going to have earnings this week, as will Alphabet and Amazon. Tesla already had earnings, but it's the Mag 7 crushing it today. On the downside, Eli Lilly down only 0.7%. Procter & Gamble down 1.4%. Newmont, that's a continuation of a decline that we saw on Friday over one of their bids for some Barrick mining assets in gold. Those are the individual companies. If you look again at the overall market so far this morning, Matt, we are up 0.9%, headed for yet another record.
Yeah, and we do have, I mean, gold is coming down to 4,000 even, right? If I look at the VIX is coming down to a 15 handle. And so it looks like these safe haven assets, right? Bonds are getting sold across the curve. There's just no bid for them. optimism abounds.
Well, if you have rate cuts, you have a deal with China, and presumably tech goes okay today, maybe it's safe to jump back in. And those are always famous last words, I realize.
Yeah, exactly. Coming up, it's a crucial week for tech investors. As Danny points out, the biggest stocks in the world are reporting. $27 trillion of market cap reporting this week. 5 of the Mag 7 stocks on Wednesday and Thursday alone. We'll talk about that when we come back with Caroline Hyde from Bloomberg Tech. This is Open Interest.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's $1, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Is Bloomberg.
Let's look at some of the top calls this morning. The analyst action that we are focusing in on. First up, Harley-Davidson. That gets cut to a sell at Morgan Stanley. Morgan Stanley cites limited pricing power, weaker long-term demand trends for the iconic motorcycle maker. Shares down 2.5%. Next up, Truist. They upgrade Booking Holdings. That's the parent company of Priceline, OpenTable. The firm points to Asia's long-term travel recovery, steady GDP growth, and a more compelling valuation. The analysts also say that investors are overestimating AI-related downside risk, those shares up 1.5%. Finally, Guggenheim, they upgrade Microsoft to buy, citing clear AI advantages. Guggenheim says that the company stands out as an AI beneficiary, supported by dominant cloud business and its near monopoly in the productivity suite markets. With that upgrade, Wall Street analysts are now almost universally bullish on Microsoft. Matt, 98.6%, I think is the exact sum of analysts who have a buy rating on Microsoft. That's 72 buys and 1 hold.
Yeah, Only 5 buys on Harley Davidson out of 16 analysts.
That hurts.
They got to get those analysts on the bikes. They need to get Artie Starr out there, the CEO, giving interviews.
Are you saying they're wrong?
Here on Bloomberg. No, I'm not. I don't know, but we need to talk to the company in order to find out. They put out earnings on November 4th. All right. Obviously, Microsoft is a much bigger and more important company to these markets. We're going to get results from Microsoft as well as Alphabet and Meta on Wednesday. Apple and Amazon give us earnings on Thursday. Bloomberg Tech co-host Caroline Hyde is out here with us to help us navigate these massive, massive earnings reports. We're getting $27 trillion of earnings this week, and I guess it's like a Super Bowl for you and Ed on Wednesday and Thursday.
It's going to be a little thick and fast. And talking of the analysts out there at the moment, look, you say 0 sell ratings over at Microsoft. There's 0 sell ratings on Alphabet. There's 0 sell ratings on Amazon. There's just one meager one on Meta. And actually, Apple is the only one that's got any sort of cluster of people thinking to sell this particular stock. And what's so interesting is, yes, they're gargantuan in terms of their market capitalization, but actually none of them trade at too eye-watering evaluations because all their earnings have been rising so fast as well. I mean, actually, if you look at the NASDAQ more broadly, it trades at about 27 times future earnings. Well, the only one that's really above that more broadly have been like the likes of Apple and maybe some of the others. But largely, you've seen Amazon, Alphabet, and Meta all trading well below that in terms of their future earnings. I don't think many people feel that the spending that we're seeing and the fury around an AI bubble is actually something to be fighting against right now. Instead, you're seeing advertising wins for Meta. You're seeing advertising strength for Alphabet and the use of Gemini. You're seeing the likes of Microsoft just being able to capitalize on its Azure growth, and many expecting that's going to be in excess of 36% overall. So that growth story when it comes to cloud is going to be bearing weight for Amazon too. This is still signs that the companies are able to outperform right now.
I was going to ask, how much do we care about the traditional businesses? How much do we care about advertising for Alphabet and Meta, for Amazon, for their marketplace? Or is it, what is the return on investment that you're getting in AI, and what big dollar signs are you spending going forward?
And whether we'll congratulate them again for that CapEx, because in the previous earnings, everyone was really cheering the fact that Alphabet was raising their capital expenditure guidance. Many think that Microsoft might raise it to up to $130 billion for 2026 full year alone. That would be a 45% increase in capital expenditure. That's what Bloomberg Intelligence sees. But they say that they've got the demand there. In fact, what's going to hold Microsoft back is a lack of supply, not a lack of demand. But I do think you're right that actually what's interesting for a lot of these companies is their old business models do still work. Meta has actually really shown that using generative AI within their business, spending and becoming a hyperscaler in and of themselves works for the advertising business model, the flywheel effect, the fact that people are getting more bang for their buck. It also has helped that TikTok's been a little bit under duress of late. But you do see that Meta's probably going to be firing on all cylinders, that Alphabet's still managing to get ad strength there, and indeed that Amazon does still see people wanting to buy their merchants. So we do see strength underlying, but everyone's just going to want to know about capital expenditure going forward.
I do, when we came in this block, I was looking at the YouTube video from Silicon Valley where the investor says, like, don't show revenue, don't show revenue. Obviously, these companies do show massive, massive amounts of revenue and profits as well. So they're already making money. It's not anything like it would have been in 1999 or 2000, but are they getting their kind of return on their investment that analysts, that investors want to see for the AI stuff alone, for the cloud stuff alone?
Well, I think that's when we're going to need to see that Amazon, for example, is still seeing growth in AWS despite that outage that we had last week. Are we still seeing that they're not eroding their market share to some of the newer players? Oracle's come in as a complete powerhouse when it comes to cloud. So how are they going to defend their territory? But a lot of them are still bringing in the types of revenue that you want to see for the investment. And I think capital expenditure, if you're looking at it, is coming out of their cash piles. Yes, we've talked about that $29 billion deal done between Blue Owl. I know you've been doing a lot of interviews on that, Danny, and Meta. And yes, you have seen some of these companies starting to raise debt. But more broadly, they sit on such a ton of money. In fact, we're seeing a lot of the pushback on any of these ideas of an AI bubble coming from Bloomberg Intelligence themselves, Brian Doherty writing that actually, for now, they financed it with their own money. You're not seeing suddenly huge debt piles as yet.
It is interesting, though, to start to see some of that off-balance sheet financing. Yeah. Caroline, Bloomberg Tech is going to be must-watch this week. Thank you for giving us a preview of it. That's Bloomberg Tech's Caroline Hyde, where she joins Ed Ludlow at 11 a.m. Coming up, record coffee prices boost Keurig, Dr. Pepper earnings ahead of its JDE Peet's acquisition. We're going to have more on that next. This is Bloomberg.
up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
In case you missed it on Bloomberg Tech Asia, I'm in a Nissan Ariya with the latest ProPilot system developed with Wave's AI technology. Bloomberg NEF says we'll see a robotaxi fleet about 6 million strong on the roads by the next decade. And with many of these projects scheduled to deploy across the world in the coming year, the era of robotaxis may be arriving soon to a city near you. Don't miss Bloomberg Tech Asia every month.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on what's going on with stocks. 22 minutes into the trade, we're looking at new record highs, both intraday and if we close at this level there as well. 68.49 essentially on the S&P, 68.50. The NASDAQ 100 trading up 1.3% to 25,680, and you're going to see record highs pretty much regardless of which index you look at. In terms of the stocks that are pushing us up there, NVIDIA, although it's not due to come out with earnings until, as Danny pointed out, November 19th, up 2.3%. That goes a long way to pushing the S&P and the NASDAQ higher. Apple as well, up 1.3%. HBAN is down 2.25%. The Columbus, Ohio-based bank making a purchase for $7.5 billion roughly of a Texas bank, Cadence. As a result, Cadence is up 4.8%. It's an all-share deal. JDE Peet's is little changed. So why, you may ask, do we put it there? Because Keurig Dr. Pepper, it looks like, is securing financing to pick up that coffee maker right now. Keurig Dr. Pepper up 4.8%. Danny?
They also had earnings. Keurig Dr. Pepper in that raised its full-year outlook. It was higher coffee prices that boosted its earnings growth. Let's bring in Bloomberg Managing Editor for Global Business, Shelley Banjo, on this. Shelley, heading into this year, or at least after April 2nd when we had all the tariffs, the narrative was consumers hate high prices and they're not going to pay more. But here is Keurig Dr. Pepper charging more for coffee and people paying for it.
Yeah, and we've seen this already with Pepsi and other companies. So far, a lot of these companies, they've been raising prices surgically, but really absorbing a lot of those price increases. They're taking it themselves and they're looking to offset those costs in other parts of their business.
So what's the story with the underlying commodities? I mean, coffee prices continue to creep higher, and this is something we've seen with other drinks makers as well. I'm thinking about the brewers. They also had lower volume in terms of sales, but higher prices. Is that the story across the industry?
Yeah, and I think these companies have to account for this. I think you are going to continue to see prices go up to be able to account for this. Now, what is that ultimate, spot that consumers can bear? I don't know. We haven't gotten there yet, but I think these companies are seeing this as more of a longer-term trend than a short-term issue.
Also within this announcement of Dr. Pepper Keurig, in their acquisition of JDE Peet's and the spinoff, they announced that KKR and Apollo would be helping them with a $7 billion investment into it. What does that investment get them and do for them as they look at this deal making and spinoff?
Yeah, so in August they said that they were going to do this $18 billion purchase and then split the coffee business on one hand and the soda business on the other hand, which if you remember a few years back, they were the ones that brought Keurig and Dr. Pepper together in the first place. So as Wall Street does, they put things together, then they break things apart. Yeah. After they announced the deal, stock went down 20%. And I think a lot of people were wondering, where is this money going to come from? Are you taking on more debt? What is happening here? And so I think what KKR and Apollo do, and the reason why the stock's going up, is because it sort of gives them a little bit more cash cushion to deal with.
That cycle, because when I started here in 2000 and companies were building up these huge conglomerates and then they were breaking them up, then they build them back up, and now, I mean, we're going to talk about one carve-out from Polaris in just a second, but it looks like carve-outs are sort of the theme of the day right now.
Yeah, I mean, Kraft Heinz, it just over and over and over again, now these companies are splitting back apart, and
is it a sign of stress that they're doing this, that this is the trend right now, or is it just cyclical?
I mean, I think it's sort of like the next iteration
acceleration of things. Like it's just sort of, cyclical, I guess, is sort of what I guess I'm saying. So it's like the next logical step.
It's the Wall Street money machine.
I was going to say, whether they're getting put together, taken apart, bankers get fees.
Exactly, they get paid. And lawyers, don't forget the lawyers.
And of course, can't forget the lawyers.
Not always, right? OpenAI.
Oh yeah, that's true. Really interesting FT story that OpenAI is doing everything in-house, their own advisors, their own lawyers. So yeah, that's not great for Wall Street.
Shelley, great having you on the program. Shelley runs all of our corporate coverage for us here at Bloomberg, so she sees the trends across the industry before anyone else does. Coming up in the next hour, State Street's head of macro strategy says inflation is not a huge fear going into the end of the year. No one cares about 3% CPI. Plus, Genco's chairman and CEO talk shipping challenges amid the global trade war. This is Bloomberg Open Interest.
Estava sitiada.
Isso, ao começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho tanya ki kon ahmale suara pangok ahmale pa manjang lenya ay kun mamanya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Jamaicans are bracing for a powerful Category 5 hurricane to slam the island tomorrow. Melissa is storming through the Caribbean with winds of up to 160 miles an hour. Meteorologist Craig Allen.
Melissa will likely be the most devastating and catastrophic storm Jamaica has ever seen in its recorded history.
Correspondent Jason Allen is in the capital of Kingston.
Food and water. People have gathered what they can, but a lot of people don't even have the means to go get food for 3 days. They may have enough money to get the piece of breadfruit and an avocado, and that may be a meal. And stocking up really isn't something that they have the means to do.
Day 27 of the shutdown, and people who receive government food subsidies will be out of luck at the end of the week. SNAP benefits will not go out on November 1st.
42 million people will lose benefits nationwide, including more than 440,000 in Minnesota. Sophie Lenars-Coy leads the Food Group, a nonprofit that administers grants to food banks statewide.
This is really an unprecedented situation. We have food shelves who've already been at capacity with high grocery prices, seeing over 9 million visits last year.
The average SNAP benefit per person in Minnesota is $157 a month, or just over $5 a day. Christopher Cruz, CBS News.
An American warship has docked in Trinidad and Tobago as tensions escalate with Venezuela and its president Nicolas Maduro. Republican Senator Rick Scott tells CBS 60 Minutes' Sharon Alfonsi.
If I was Maduro, I'd head to Russia or China right now.
Because
his days are numbered. Something's going to happen. Whether it's internal or external, I think something's going to happen.
French officials aren't saying whether two suspects arrested in last week's crown jewel heist at the Louvre are the ones who used a freight lift to gain access to an upper floor of the museum. Meantime, Holly Williams poses the biggest question to French criminologist Alain Bauer.
The fact that they've now arrested two suspects, does that make it more likely that the police will be able to recover the jewels?
I'm pessimistic about the jewels. I'm optimistic about catching all the thieves.
New hope for women who carry fans everywhere they go to cool down from menopausal hot flashes. The FDA has approved a pill called Veoza that does not include hormones. Medical contributor Dr. Celine Gounder.
We're being told available next month, November, and the cash price is $625 for a 30-day supply, but for many women with insurance, the monthly cost may be as low as $25 a month.
The Dow is up 274 points, S&P ahead 63. This is CBS News. A new chapter in college football's season of the fired head coach.
After LSU's home loss to number 3 Texas A&M, head coach Brian Kelly said his team was grasping for answers.
You know, obviously they're searching for answers. I've got to be able to provide them for them.
And with 3 losses in the last 4 games, he's now been fired, following on the heels of a string of firings during the season at Penn State, UCLA, Florida, and a handful of other schools. It's costly for LSU. The school's expected to have to pay Kelly some $53 million not to coach through 2031. Penn State paid James Franklin about $50 million to walk away a few weeks ago. Steve Kathan, CBS News.
Hormel is recalling almost 5 million pounds of frozen chicken because it might contain pieces of metal. The issue could affect frozen chicken breast and thigh products distributed nationwide between February and September. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they perform.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well, so head over to youtube.com, search Bloomberg Live Podcast, and that's where you'll find us. Scarlett Fu and Paul Sweeney with you today on the Bloomberg Intelligence program. Coming up, we're going to check in with Brendan Murray. He covers all the trade negotiations on a global scale for Bloomberg News. He's going to give us the latest on the U.S.-China trade discussions. Again, Presidents Trump and Xi scheduled to meet in Korea on Thursday with trade top of the agenda. Manuela Tobias, Argentine economics and government reporter, will recap the Argentina elections over the weekend. Some big moves there and big moves in the Argentine financial assets as well. Matthew Palazzolo, a Bloomberg Intelligence senior property and casualty insurance. We only talk to this guy when there's some pending disaster out there. In this case, a hurricane looks like it's bearing right down on Jamaica.
Yeah, the third Category 5 storm to hit that region.
Yeah, it's tough. So we'll get the latest there just from an insurance perspective. Sam Fazeli joins us. We'll talk all things healthcare. Had another deal in the healthcare space today, another M&A trade yet again. So we'll break that down as well. But let's kick everything off as we do here with Mr. John Tucker in the Bloomberg Business Flash.
All right, guys. Happy Monday. This Bloomberg Business Flash brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. Records for the stock averages. Optimism over the trade deal between the U.S. and China. And I think you mentioned this earlier. Companies in the S&P 500 poll on course to deliver the highest sales beat ratio since 2021. Bull market, of course, facing something of a make or break week. We're going to have the big tech earnings. Also, the Fed rate decision that comes on Wednesday. Lori Calvasina at RBC Capital Markets was asked if she thinks stocks are in a bubble.
I think we have kind of a plain old-fashioned valuation problem where things have gotten a bit over their skis, but I don't think that this compares, frankly, to that peak in 2000. I don't think that this is bubble territory.
Qualcomm is entering the AI data center market. New chips and computers. They're aiming to challenge NVIDIA in the fastest growing part of this industry. And Qualcomm shares right now 8% higher. This is from the Journal. This Halloween season brings with it pumpkin entrepreneurs and porch stylists. Customers are paying hundreds, sometimes thousands of dollars to festoon their homes with all sorts of gourds of every shape and size.
It's like Halloween's becoming like Christmas.
It's they're in very high demand. Pumpkin stylists, they call themselves.
Yeah, but you only have that one holiday a year where you're doing this, or expand your business.
But you start decorating like a month before Halloween.
Oh yeah, no, I was a month ago had my gourds out on the front porch, and then the squirrels ate them. S&P 500 up 66, the Dow up 310, the Nasdaq 100 up 364, and we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
All right, JT, thank you so much. We appreciate that. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu. We're joined today by Bloomberg's Christina Kino. Christine, what are you looking at?
Let's take a look at Keurig Dr. Pepper, Paul. So those shares, ticker KDP, shares are up now more than 6%. And that is because we did get a more optimistic outlook for the full year from the company. They boosted their net sales growth now to a high single-digit range. I think initially that was a lower mid-single-digit range. And they also said that they have secured a $7 billion financing package from Apollo and KKR to support its acquisition of JD Peet and also its plan to split into two companies. So remember, they were planning to spin off their coffee entity and into a separate business. So Bloomberg Intelligence weighing in on that deal and on that outlook, saying that their total sales and profit holding up nicely thanks to the diversity of its beverages. Though, you know, coffee makers at the moment very much contending with soaring coffee prices. So potentially informing their decision to spin off that entity.
I mean, as a former investment banker, I love a component of this transaction, a $3 billion convertible preferred stock. I loved convertible preferred stocks in the day because we made a big fee on those things. And for a lot of companies, it's the right deal. You know, you don't want to issue stock right here, I'll do a convert for you.
Yeah. Well, just call Paul Sweeney right up.
Yeah, we crushing it many years.
He can point you in the right direction.
Yep.
All right.
I know a guy.
He knows a couple of guys. Christine, tell us about Lululemon.
Yeah, Lululemon, ticker LULU. So their shares also doing well this morning, up more than 3% now. And that is because the company has said that they have made an arrangement with the NFL and Fanatics to develop a line of fan apparel. And apparently that line will include clothes for all 32 NFL teams. Will start selling from October 20th, both through the NFL and Fanatics shops. Would you buy Giants branded leggings?
I'm envisioning a big, fat offensive lineman. Now, he's not going to be wearing Lululemon tights, right? I mean, that's not going to happen.
He may very well.
Be.
Oh,
yeah.
That's a bad image.
Their leggings technology is renowned.
Technology? Okay.
Yeah.
All right. Very good.
So maybe we can have.
They're pants. You know, come on.
John Tucker, when you try on a pair of leggings, I ask you to come back and tell us
I'll never
about
go back.
Yes. All right. What else we got here? Huntington Bancorp. Now, again, full disclosure, Huntington Bank, it is the bank of the Matthew Miller family. Just laying it out there. It's a whole Columbus, Ohio thing.
Well, the bank of the Matthew Miller family not doing well this morning. So ticker HBAN, those shares down 2.6%. So, okay, so investors are reacting to a deal that they announced. So they're saying that they're going to buy Cadence Bank, which is another regional bank, for a $7.4 billion deal. That is their second major acquisition this year. And really just expanding on their plans to have more footprint in the southern and southeastern states. So they're going to be paying $39.77 per share, which is more than 9% more than Friday's closing price. And, you know, Baird analysts saying that the deal seems to be checking both the strategic and financial boxes. But interestingly, shares are down today. Perhaps, you know, investors still just wanting to take some time to digest this deal because, again, this is their second major acquisition this year. And also it follows a string of regional bank M&As just in general, right? Fifth Third, Comerica, PNC First Bank. So this is just another addition to that string.
Yeah, and it's going to be a super regional as a result of this transaction. So keeping an eye on those shares. Christine, thank you so much. Christina Aquino of Bloomberg News. She covers equities and markets overall. And for more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Do we have a trade deal with China, Paul?
We have some positive talk.
There you
and
go.
We have our president's meeting, so maybe get going in the right direction.
They're setting things up for the two presidents to announce something big later on this week. So that means we need to bring in Brendan Murray. He is Bloomberg News' trade czar, joining us from London to give us a little more context here. So, Brendan, it sounds like the two sides, China and the U.S., have agreed to some smaller issues, not the most thorny issues, but enough to kind of be able to claim victory here.
Yeah, exactly. I mean, it looks like we're heading away from a heated, full-on trade war with high tariffs and export controls that both countries are putting on each other to something that's more kind of backing away from all this escalation that they've talked about in the past week or two to something that just sort of simmers along over the medium term. So however long that could be, 3-6 months, we don't know. But President Trump sounds pretty positive that the outline of a deal that his advisors have gotten so far on this trip through Asia is something that he could go along with. And if President Xi can too, then we'll have some sort of extended truce, something that pushes any sort of escalation out for another year or so. Presumably past next year's midterm election, perhaps.
So, Paul, sounds like concepts of a plan.
Yes, concepts of a plan. That's got to start somewhere, I guess. You announce the worst, and you try to negotiate back, and the market likes that. The market's figured that out. So I guess the one of the most important things from the U.S. perspective is access to rare earths. How do we think that's going to play out?
So this has been a sticking point in each of the past 5 rounds that Treasury Secretary Bessent has negotiated. The U.S. wants these magnets, in particular, to keep flowing out of China to auto companies and defense contractors and the companies that need this. The U.S. thought they had a deal, but then China a couple weeks ago ratcheted that up and said, no, we're actually going to put even tighter controls on rare earths. And the U.S. obviously said, no, that's not something that'll disrupt the global economy too much. So it sounds like, from what we hear from Bessent, that China's going to push any of that escalation of their export controls back a year. So that should keep the flow of rare earths going out of China for the foreseeable future, and not cause any problems domestically for the U.S. economy, or for Europe's economy for that matter, because they would have hit a global rare earth supply chain, not just the U.S.'s.
So, Brendan, prior to the announcement of concepts of a plan with China, the U.S. also agreed to some trade deals with Thailand and Malaysia, which covers rare earths, doesn't it?
Yeah, exactly. They're carving out these separate rare earth deals bilaterally with each of these countries. We got, in fact, 4 preliminary agreements over the weekend: Thailand, Vietnam, Cambodia, and, like you said, Malaysia. But each of these still have deals to work out, some fine print to smooth out. I'll give you an example. The Malaysia deal, a lot of these call for the country to invest in the U.S. Well, here's the line for Malaysia. Malaysia shall facilitate, to the extent practicable, approximately $70 billion in job-creating investment, including greenfield investment in the United States over the next 10 years. So the key phrase in there is to the extent practicable. So in other words, if it's possible, if it's feasible. So, it doesn't sound like an ironclad guarantee to anybody who's used to reading trade deals that Malaysia's $70 billion is a guarantee that's going to come to the U.S. in the next 10 years. So a lot of this is still mushy, needs to be worked out. But you got to give credit to the federal government employees who are showing up to work during this shutdown to at least get something over the line for the president in Asia.
All right, Brendan, thank you so much. We appreciate that. Brendan Murray, Global Trade Editor for Bloomberg News. He's located in London. A couple red headlines crossing the tape that got my attention here just in the last minute or two. Qualcomm shares jumped 14% after unveiling a chip to rival NVIDIA. How about that? And that's big news for them. And the second one was gold. Gold falls below $4,000 per ounce. We're now at $3,990 an ounce, off of about 3% today. So after rising to about $4,300, pulling back.
And we're also seeing silver decline as well, following gold lower, now at $46.57 an ounce.
All right, we'll keep an eye on all of this. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, and we are being brought to you by Oracle. Attention, growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. And see if your company qualifies at oracle.com/Bloomberg. Let me start off with the shares of Qualcomm. Right now, 19% higher. That's quite a pop. Qualcomm unveiling a chip, they say, to rival NVIDIA. New offering includes the AI200 and the AI250 chips. These are going to be available as standalone components, cards, or part of a full rack of servers from the company. The new chips are going to offer what they say is an unprecedented amount of memory, with as many as 768 gigabytes of low-power dynamic random access memory. There you go. Right now, stocks at record levels. The S&P 500 of 56 points. That's a rise of 0.8%. 68.47 on the index. The Dow Jones Industrial Average up 247 points. That's up 0.5%. The Nasdaq 100 again at a record up 324 points. That is a rise of 1.3% right now. Zenus Biopharma shares, one of the other standouts right now, those shares up 13%. This is a drug developer. They said the mid-stage trial of its investigative therapy for multiple sclerosis has met its primary endpoint. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
John, just looking at that Qualcomm you're calling out today, that's $35 billion of market cap created today.
Just in the past 15 minutes.
That's real money for real investors. With these big cap tech names, the amount of money that just the dollars that gets made or lost is just extraordinary.
And it's being re-rated completely by investors, by analysts. If it's going to be in the AI game and competing with NVIDIA, as it says, then you have to look at it in a completely different way.
Absolutely, absolutely. All right, Scarlett Fu and Paul Sweeney with you here. We're live in a Bloomberg Interactive Broker studio, streaming live on YouTube as well. Speaking of these markets moving higher yet again, let's check in with somebody that does this stuff for a living. Sylvia Jablonski, Chief Executive Officer and Chief Investment Officer of Defiance ETF. Sylvia, what do you make of these markets hitting all-time highs seemingly every day here? I guess a lower interest rate environment and decent earnings, that's kind of all you need. What do you make of it?
Yeah, good morning, Paul and Scarlett. I mean, investors are surely liking it, right? I think we've had, there's been a good narrative here. Earnings are coming in pretty good. You've got, 70% on top line beats, 85% on bottom line beats. It looks like the inflation of the last couple of years, hasn't really stopped corporate growth. It hasn't stopped CapEx. And on top of that, you have a Fed that's potentially leaning towards, dovish. We're expecting 2 more rate cuts this year. So it's a little bit of that perfect, soft landing that we were talking about, right? We have inflation coming down. Jobs are holding up. We're seeing some slowing, some hiccups along the road, but overall decent job market, decent wage growth, great corporate earnings. And then on top of that, you have this big overlay of AI and the AI build out and how that's going to filter down to every single sector in the market.
Absolutely. I'm so glad you mentioned that because we're keeping a close eye, Sylvia, on Qualcomm, currently up 17%. Of course, it makes mobile phone processors, but it is now entering the AI data center market with new chips and looking to challenge NVIDIA. I know that Defiance has an ETF focused on AI growth, power, and infrastructure. AIPO is the ticker. And in addition to companies that generate power, such as utilities, you also have chip makers in there, those that are at the center of the AI revolution. I know that this is not an actively managed ETF, but talk a little bit here about what it would take to get a name like Qualcomm into that ETF.
Yeah, and so what the ETF does is, we were thinking about like AI and the organic growth of AI, and AI initially was just arguably NVIDIA, right? And maybe AMD and NVIDIA, those two companies were kind of AI. And, now AI is starting to mature and grow, and we're starting to realize that there are a lot of investment opportunities outside of just the chip makers, whether it's, Broadcom, Qualcomm, TSM, things like this. There's that part of it, which helps build, the data centers. It helps build infrastructure. It helps build build, training computers, supercomputing, all of these things. You also have the energy part of it combined with that. And so, what does it take to get in there? Essentially, it's part of the mix, right? So the chips and everything that's needed to build out the infrastructure, as well as the energy types of plays out there that will power the infrastructure and allow it to run, are what we think is kind of that next leg of AI. And that's what APO is doing.
Sylvia, so where are you guys seeing flows in your ETF complex here? Are people just kind of going into the, just the market in indices, or are they trying to get a little cute?
I mean, to put it in perspective, right? Like we had some thematic ETFs out there. We had a 5G fund, and we had a quantum ETF, and they took, quantum is above 3 billion now, and most of that growth has happened in the last year. So that's number one, kind of the hottest ETF that we've seen flows into. And AIPO has only been around since July, and it's just gathering, tens and millions of dollars almost every other week. And so that's really been another fast growth story. And it's very much the trend in the market, right? Everybody's interested in what's the next leg of AI? How can we participate? How can we kind of diversify from just the chip play? And, we've really been seeing it there. And then, kind of the third angle, we've seen a lot of interest in, just some of the single stock plays out there, right? So kind of the classic ones that everybody knows, whether it's like the MicroStrategies. Rigetti's been a big flow name this year for us. So very much AI infrastructure, quantum computing remains where we see the flows.
Sylvia, we have 5 of the Mag 7 companies reporting earnings this week: Apple, Meta, Microsoft, Alphabet, and Amazon. How are you thinking about what we're going to get? Because the results so far have shown that, as always, companies are beating revenue estimates, and it's fueling the rally, continuing to fuel this record-breaking rally here. How high is the bar for these names?
Yeah, Scarlett, I think it's always high, and I think it's increasingly higher as the better that these companies do, and the more that the market kind of melts up like this, the higher the expectations that we have that momentum keeps going. And so any signs of slowing growth or reduction in CapEx, specifically around AI, which we've been talking about here now, but I think any deviation from that could pull the market back, right? These are the little things that are have a lot of eyes on them. And then, of course, NVIDIA, which is kind of the barometer for the market. But yeah, it totally matters. And I think investors want to see strong results out of these companies and strong rhetoric around AI is growing. It's not slowing, keep going with it.
Sylvia, a lot of folks are voicing increasing concern about this market and valuation of this market. How do you guys think about that?
Well, look, if earnings deliver, then we worry less about valuations. And if we hear, to Scarlett's last question, if we hear, these big tech names coming out and saying that they need to continue to spend and that they're starting to see, profits, future profit potential, efficiency in AI, then I think that justifies a lot of the multiples kind of, getting higher and being at these peaks, right? But the risk is the market, and it's interesting because the last few times I've talked with you both, that we've kind of said the same thing, right? It's like the market continues to be priced perfection, and since we last spoke, it's now gone higher, right? So we just really can't have any slip ups on earnings or bad news, tariffs, things like this. So that's always a risk. And then obviously external factors, geopolitics has played a huge role in the markets in the last 2 years, and inflation, politics, elections, things like this matter.
I like what you said. We can't have any bad news. There have been some hiccups in the credit market. We've seen some high-profile bankruptcies. We've seen some regional banks talk about fraudulent loans. That has so far not hurt the stock market or even really forced anyone to blink. If we continue to get news like this, and in the absence of economic data that tell us whether the economy is holding up okay or not, how quickly could things, I guess, go south if there is a spate of official bad news?
I think if you get this continued stream of bad news about some of these defaults, perhaps that raises an eyebrow in the markets. But as you said, we don't have data, right? And so I think that's it's kind of uncomfortable, but it seems to be keeping investors in this market and appreciating these gains. It's a great point. I think if we get actual bad data, but more, I think, along the lines of the consumer actually suffering, the consumer spending less, or the consumer defaulting on credit cards and things like this, I think that's when we start to worry a little bit more about the state of the economy and the markets.
Sylvia, thank you so much. Appreciate that. Sylvia Jablonski, Chief Executive Officer and Chief Investment Officer at Defiance ETFs. Well, President Javier Milei's party won Argentina's midterm vote Sunday, a result that will give the libertarian leader a strong foothold in Congress to continue pursuing aggressive free market policies. For more reporting on this, we go to Manuela Tobias. She is Argentina economics and government reporter for Bloomberg News. She's down there in Buenos Aires. Manuela, tell us how this election played out.
So heading into the vote Sunday night, markets were bracing for the worst. Milei fared very poorly in a local vote just a month ago, getting trounced by nearly 14 points by the opposition. And so everyone was expecting something sort of similar yesterday. And Milei surprised, winning 41% of the vote and beating the opposition by 9 points. That's better than even the most bullish pollsters were predicting. And so yesterday was just a victory lap in the Libertarian headquarters. And this morning, it's exactly what we're seeing in markets.
What accounts for the complete turnaround? Because in September, the Buenos Aires province saw Milei's party do terribly, and this is what caused the peso to plunge in value and the U.S. to come in and declare all kinds of support measures.
It's the question everyone is asking themselves this morning. There are a lot of factors at play here. I think the most impressive feat Milei accomplished yesterday was turning around the election in the province of Buenos Aires, which is where he lost that vote last month. He got 1 point above the opposition after losing by 14 points. One factor that could play in there is that a lot of the local mayors were campaigning aggressively last time around, and they didn't have any seats up for re-election this time around. And Milei really stepped up his own campaign and urged Argentines about the dangers of what was on the other side. There's always a big fear factor in Argentina, and the leftist Peronist coalition has ruled the country for the greater part of the last 70 years. And it spelt really bad news for a lot of Argentines, series of defaults. And so what many predict may have happened in the last month and a half is Argentines peeked into the abyss and decided that that's not what they wanted. That's exactly what Milei's read was.
All right, Manuela, thank you so much for your reporting. Really appreciate that. Manuela Tobias, she is Argentina economics and government reporter for Bloomberg News.
And we see the S&P Merval Index, which tracks Argentinian stocks, up 27% today. Wow. Yeah, the dollar's gaining 8%, or I should say losing 8% versus the Argentinian peso. There you go, the financial markets reporting, or I guess reacting in real time as they do. Gold here, $39.95, below that $4,000 kind of threshold that a lot of traders were calling out.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. And this on a day when the major averages are all at record highs. Pardon me. Qualcomm, let's start there. Those shares up close to 19%. Best performing stock now in the S&P 500 after announcing the introduction of chips to compete with NVIDIA. It's all adding fuel to their risk-on rally. And this week, this is the week you didn't want to take off. We have the Fed meeting coming up on Wednesday, setting interest rate policy, as well as big tech earnings. And Winnie Caesar at CreditSight says, you know what, the Fed flying blind to some extent at this point.
We don't have kind of a clear picture of the labor market right now, given the lack of official economic data from the government shutdown. And so that, I think, increases the risk that at some point the Fed is going to have to be a little bit more reactive, cut more than what the market is expecting.
Right now, the S&P 500, 63 points higher. That's up 0.9%, 68.54 in the index. The Dow Jones Industrial Average up 239 points. That's another record. NASDAQ 100 up 382 points, up 1.5%. That's another record. Real quick look at IBM, pretty much unchanged, but they're adding a digital assets platform to allow institutions to launch blockchain-based services. And then you have Huntington Bank shares agreeing to buy Cadence Bank. The price tag there, $7.4 billion. Cadence up over 5%. And Nelson Peltz's Trian Fund Management and General Catalyst offering $46 per share to buy the rest of Janus Henderson. The Trian doesn't already own Janus shares. That's quite a pop. They're up 17.5%. Have you purchased lunch meats lately at the supermarket?
Yeah, expensive.
Up 4.2% in September. That's on a month-over-month basis. That's actually the biggest jump on record. And numbers stoked by record-high beef prices, a decline in domestic cattle and pig herds, and a worker shortage that is driving up wages. So there you go. No baloney here. We check the markets for you right here on Bloomberg
He's very proud
Radio.
of himself for that one.
I didn't even plan that one. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
That's how talented he is. Came up with it on the
I know.
fly.
Yeah.
I went to Hoagie Haven in Princeton. They actually raised the prices there for the first time,
I was
like
just going to
forever.
say, your sandwich is going to be a lot more expensive when you go out to the corner deli.
Yep, Hoagie Haven in Princeton, they raised prices. They never raise prices.
Well, there you go. I mean, the sign of the times in 2025. All right, let's talk about what's happening in the Caribbean. Hurricane Melissa plowing towards Jamaica. It's a powerful Category 5 storm, the third Category 5 storm this Atlantic season, and Melissa threatens to bring widespread destruction to the island. Matthew Palazzola has been monitoring this development. He is the senior analyst of PNC Insurance for Bloomberg Intelligence, and he joins us now with more. Matt, good to speak with you. When you try to figure out what kind of economic damage this storm could wreak, what historical analogs are you using?
Yeah, so it's a lot easier for the U.S. We have a lot more data, a lot more storms. For this one, the method we use is the same. We look at older storms, older hurricanes, and we try to see what they did. We adjust for property values, inflation, and try to come up with something. The issue has been there haven't been a lot of major hurricanes that have made landfall on Jamaica. There's really only 2 since 1980 actually hit the island. A bunch have passed. The one that we're looking at is 1988 Hurricane Gilbert. And that one, there's not great insurance data. There's not great damage data. The best we can find was 100,000 homes, wiped out power and communication, killed 45 people. The economic damage, inflation adjusted, maybe in the mid-single-digit billions. The way Melissa is shaping up could be a lot worse than that, actually.
So in your note, you're saying that Jamaica has a low insurance penetration, but what coverage is written there is heavily ceded. What does that mean?
So that means that it's your favorite business, Paul. It's heavily ceded to reinsurance companies.
That's where those guys make money.
So I was talking about the 100,000 homes destroyed in Gilbert. That's where the low insurance penetration comes in. So people's homes there, they don't have insurance on them. So there'll be a wide gap between the economic losses and the insured losses. So that's kind of a real unfortunate aspect of this. Like the resorts and things like that will have insurance on them. That'll be the majority of the insured losses. But so that's what we're saying with the low penetration, and even any of the business there is heavily ceded to the reinsurance market.
So which reinsurers then are exposed, do you think?
So I don't have specific names to be a little remiss. You hear about Lloyd's of London kind of does, one-off or special risks like this. So you might have a big resort that might, have a policy with them. So a lot of the business might not be written by the domestic companies. We cover the Bermuda reinsurance companies. I wouldn't be surprised if they had some. The big European companies like Swiss Re and Munich Re. So those are kind of the usual suspects, but I wouldn't ascribe losses to any of them just yet.
When I owned a home in California, it got to the point where the only place we could get home insurance was Lloyd's of London.
Really?
I mean, the same people who insure, tankers going through the Strait of Hormuz, that's who I had to go to.
Well, no one's even doing that now. You only have the state insurer as the lender of the insurer of last resort at this point.
I think mine is like Joe's Insurance of South Jersey. The only one.
Exactly. Talk to us about the hurricane season from your perspective. It doesn't seem like it's been that bad.
No, it's been quite good for people who suffer from hurricane losses and for insurance companies. So very mild, I think minimal U.S. activity. We look at catastrophe loss estimates for our companies. We started off the year with the wildfires, and I said, oh no, like this is going to be bad. We're going to have, another major hurricane. It was going to be pretty significant. Third quarter was very mild. We've only seen a couple of companies report earnings so far. Those have been good. The catastrophe loss have been very low. So hurricane season mild. This is pretty rare to have a major hurricane this late. We did have Hurricane Sandy, was around this time when it hit, but the hurricane season technically runs through November, but it's pretty rare for major storms to hit that late.
Yeah, hurricane season officially ends November 30th, so we just have to get through the next month or so. Matt, if you have a mild hurricane season, does that mean people's insurance premiums won't go up, that stays static?
Probably not.
Let's be honest.
Asking for a friend.
I could answer that.
Yeah, no baloney on that one either. But and the issues behind home insurance haven't necessarily been the large losses. It's been inflation in building materials. It has been kind of poor regulation in certain markets like Florida and California, kind of causing reinsurance rates to go up. So the things that are driving that, it hasn't necessarily been these large losses.
When is the next wildfire season? Or is there even a wildfire season, or is it kind of year-round now?
Yeah, so in California, there are times where the Santa Ana winds are stronger. I don't have the exact dates off the top of my head. There kind of are seasons to it, but they could break out kind of at any time.
How are the property and casualty stocks doing this year?
Yeah, not great. So despite the mild hurricane season, good jumps in book value, good ROEs. The fundamentals are, I think, apparently past the peak. So the valuations of these stocks on a price-to-book basis usually peak before their ROEs. The ROEs have probably peaked. It's tough to see. I keep saying it, and they keep kind of incrementally being a little bit better, but it's tough to see their underwriting get better next year. Interest rates clearly are, at least going slightly down by step. So the fundamentals are not great. Valuations were high. So going into the year, it was not great for performance.
Does that mean there's going to be M&A in this sector?
Probably not. So the issue there is these companies have reserves, right? So we write liability business for things that happen, and it could impact me many years in the future. What has been happening is those losses from the past have been higher than companies expected. So you'd be remiss to want to buy another company and have this book of business that could be worse than you expected. It's usually the biggest obstacle to M&A for P&C insurance.
All right. I tell you, I know nothing about healthcare economics, and I know nothing about insurance economics. I just write the check when they tell me to write the check every month or every year.
And you gawk at it because the number gets bigger every year.
Exactly. And, I don't know. Matthew Palazzola, he gets paid to know all that stuff. Senior analyst, property and casualty insurance. I mean, he chose that as a career. I want to be an insurance analyst. Can you believe that?
I want to learn about the decision making behind that.
What's kind of whatever first job you get, it's what sector you're assigned.
I got a job at Merrill Lynch. It was in insurance, and that was the choice.
And he's built a career around it. That's how it works.
The choice was made for him.
Exactly right. He does it very well. Matthew Palazzola, Bloomberg Intelligence, bringing us up to date on Hurricane Melissa. This is good.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, we got Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. I've said it once, I'll say it again. In the next life, I'm coming back as a healthcare M&A banker. Every Monday, we come into work, we look at the tape, and boom, there's pharmaceutical company A buying biotech company B. Bankers get paid, shareholders get paid, lawyers get paid. It's just a beautiful business. Today, no surprise, Novartis agrees to buy Avidity in a $12 billion biotech deal. Sam Fazeli, you became an analyst. You should have become a banker. I don't know what you were thinking back in the day. Sam Fazeli, Director of Research for Global Industries and a senior pharma analyst. Folks, he's one of the best out there on the street or in the city of London, as they say, for Bloomberg Intelligence. Is this just another deal kind of right out of central casting, Sam, pharma buying biotech?
Yeah, well, so Paul, before we do that, can I just make sure that when we come back in our next life, can I work with you?
There
so
we
we
go.
can both do this together and just, go and... No, but look, pharma companies, the story is similar here. We have a company here, Novartis, that's doing okay. They have a patent expiry that they're dealing with now. Remember that phrase? It's always the one that rears its ugly head eventually, which is good for consumers and drug budgets, but obviously in the end, bad for the top and bottom line of pharma companies. They have another drug that's really big, expected to hit about $7.4 billion of sales by 2029, 2030, called Cosentyx. That's going to go off patent. So what do they need? They need assets and products to feed it. They do their own R&D, but here they also have an opportunity to go and get really exciting stuff from biotech companies, which is exactly what Novartis is doing. $12 billion for Avidity Biosciences, and then what they're getting here is 3 products that are at different stages of development, but very soon to get to hit the market, all rare diseases. So it's one that's harder for people to argue against in terms of price, etc. And it will help them with that post-2029, 2030 revenue growth and earnings growth. So pretty much fits perfectly in this sweet spot of what they need and what this company and for their growth and also their technology platforms.
Sam, you lay it out beautifully strategically why Novartis is buying Avidity. The CEO of Novartis, Vas Narasimhan, has been making some deals, but mostly they've been focused on deals under $5 billion. Regulus Therapeutics he bought for $1.7 billion. Anthos Therapeutics also in that neighborhood. Is this purchase, this $12 billion purchase, a shift in strategy?
Yeah, I mean, it's so hard. People, us analysts, we love asking pharma companies, so what kind of deals are you going to be doing? And you go back and look at the Q2 results. Oh, we like tuck-ins, etc., right? And here we go. I mean, you know, in my world, a tuck-in is $3 to $5 billion, $2 to $4 billion, that sort of size. So, but they all give you this caveat: we will be opportunistic. And I think here there was an opportunity that came up to access some very novel technology. I have to say, it's really interesting what these guys are doing, and it's late stage enough for it to make a difference to the bottom line of the company. And it's not often you get that mix. So I think Novartis decided this ticks so many boxes that it was worth doing. Particularly, it fits also with their internal assets and their approach to some of the other diseases. So it's really pretty good fit.
Sam, is the patent runoff or expiration for this industry, is it abnormally high these days, or is this just kind of normal course of business? Because it seems like we hear about it more and more over the last several years.
Well, the companies have got bigger. There's broader pipelines. And, you know, I mean, there was a period where it was, you know, we had the patent cliff in the 2010, 11, 12 time period. I don't remember exactly. It was a while ago now. And now we have another, it's not quite a cliff. It's a hill that is, but this is how it should be. These companies get rewarded with reasonable pricing for the 10 to 12 years, and then it becomes generic so that it creates more space in the drug budgets for the governments to pay for the next good drug. So I don't think there's anything new here. It varies by company by company.
Sam, we know that Novartis is going to be reporting earnings tomorrow, I believe, and it's already raised its profit outlook, I believe, 2 times. What are you anticipating? How much is it going to tell us in terms of whether this deal, this Avidity deal, will add to earnings in the near term?
Yeah, but they already told us that they think that it's going to be clearly dilutive next year. And of course, as soon as you do these deals, a large amount of the value goes into what's called IPR&D, which you have to charge to your P&L. You can't just put it onto goodwill anymore and just live with that as an intangible. So here, there will be dilution next year, but I think they could start seeing some, at least, positive contribution maybe from 27, 28 onwards, definitely 29, 30 as these drugs hit the market. Of course, they have to still get to the market and they have to be successful. But the drugs are looking really interesting and the data is looking very powerful.
All right, Sam, thanks so much for joining us. Always appreciate that. Sam Fazeli, he's the Director of Research for Global Industries, and he's the Senior Pharmaceuticals Analyst for Bloomberg Intelligence. He's based in London. Now, I'm looking at Sam's out, which, folks, for listeners and viewers, that means I can see everybody's calendar.
This is inside baseball here.
Everybody can see everybody's calendar in this company. It's called Transparency. Sam's going to be in Vienna in a couple of weeks. Now, if I'm going to Vienna on a business trip, I'm going to eat well. I'm going to drink well. I might even see some of the sites.
Is there some kind of pharmaceutical conference going on
There's a pharmaceutical conference, and those guys, what they do in these pharmaceutical conferences, they literally are locked in a conference room for all day, all night, weekdays, weekends.
So
just
he's
listening
not
to science,
enjoying
just
Vienna.
listening to science presentations on new drugs and therapeutics. You have to literally have to be a PhD or an MD to make sense of it, which Sam is. So anyway, that's what he's doing. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Monday morning. We're live from the Bloomberg Interactive Broker Studio in Midtown Manhattan. Coming up on this second hour of Bloomberg Intelligence with Paul Sweeney and Scarlett Fu, we've got Tyler Kendall, Bloomberg's Washington correspondent, who is on the road right now in Japan with the president on his Asia trip. Of course, the president landed in Tokyo promising to announce a great friendship, and they announced the outlines of a deal with China as well. Michael McKee, Bloomberg's international economics and policy correspondent, will be joining us to talk about the Fed chair finalists that the Treasury Secretary Scott Bessent has identified. We will give you those names. And then RJ Gallo, Deputy CIO of Global Fixed Income at Federated Hermes, will join us to talk about the markets on this Fed week. And Herman Chan, Bloomberg Intelligence Senior Analyst for U.S. Regional Bank, on yet another purchase in the regional banking space. Huntington Bank shares with this latest purchase of Cadence Bank now becomes a super regional, Paul.
Nice. I mean, and more M&A in regional bank space.
Plenty of M&A, and this is an administration that is very, very open to more consolidation. All right, in the meantime, let's get a check on where things stand with our own John Tucker with the Bloomberg Business Flash.
All right, Scarlett, this Bloomberg Business Flash being brought to you by Van Eck. Founded in 1955, Van Eck has been guided by conviction, not convention, spotting change early and turning it into opportunity from the very start. Major stock averages passing above their record closing levels. Big degree of optimism around a possible trade deal with China. And then just crossing the Bloomberg, more talk of trade deals. This is from Mexico. The Mexican premier president, Claudia Sheinbaum, says the U.S. is extending the trade deadline for several weeks. So that just adds to the fuel right now. Best performing stock in the S&P 500, that belongs to Qualcomm. Shares of Qualcomm right now up 14% after delivering positive. This is after saying it is introducing chips to compete with NVIDIA. And then you have Zenas Biopharma. That's another standout today. That is up 25% right now after delivering a positive trial data for a treatment for multiple sclerosis. Meantime, Brian Nick at New Edge Wealth, he remains focused on tech as 5 members of the so-called Mag 7 report earnings this week.
We think the earnings case is resilient. We wouldn't be betting against good earnings reports, not just this quarter, but in the quarters ahead. And we think that especially the Mag 7 and tech generally, the expectations for 2026 look pretty reasonable. It's the rest of the market that we're a little bit more concerned about.
Right now, the S&P 500, 58 points higher, 6850 on the index. Again, a record. Dow at a record of 201 points. The NASDAQ 100, 377 points higher. That's up 1.5%. The record there. Delta Airlines planning to start direct flights from Atlanta to Riyadh. They're trying to secure a foothold in the Middle East and capitalize on what look like deepening ties between the United States and Saudi Arabia. One of the new features in Apple's iPhone 17 Pro and the Pro Max is, I've never heard of this, but it's been around, a vapor chamber.
Sure.
This is a liquid cooling system, helps tame the heat, governed by the powerful chips.
So your phone doesn't get like ridiculously
and
hot.
they have gotten ridiculously hot.
Well, mine just shuts down. Basically, it goes dark. So I'm sitting on the beach doing my New York Times crossword. the Jersey Shore. It'll just 10 minutes. Boom.
Which iPhone do you have?
16.
Ooh, that's not a good sign.
I know.
Right?
I know.
I don't have that problem with the BlackBerry. We check the markets for you right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
BlackBerry, flip phone, all the same.
They don't work. They don't
work.
You put a rotary phone in front of a millennial.
All right, John Tucker, thank you so much with our Bloomberg Business Flash. All right, let's take a look at some stocks on the move today. I'm Scarlett Fu here with Paul Sweeney, and we are joined by Bloomberg's Nora Melinda. Nora, get us started with Carter's.
Yes, taking a look at ticker CRI, we're seeing shares of Carter's up as much as 8%, now pairing their gain a bit, up about 2% in trading. And this is after the company did report a net sales miss during the third quarter, but the company is saying that this fourth quarter comparable sales are quote unquote off to a good start. The company is also planning to reduce office space roles by about 15% by the end of this year. And it did boost the amount of stores that it plans to close as well. We were just talking about this earlier on surveillance.
Yep.
And it's just interesting how they're really just coming in, closing these stores here. So we are seeing shares of Carter's down about 39% so far this year.
All right. I mean, I guess people, like anything else, don't you buy the stuff online? I would guess. I don't know. All right. What else? How about GameStop? This thing just won't go away.
It will never go away at this point. Ticker GME here. We're seeing shares rising as much as about 5.3%. And this is after the White House's Rapid Response 47 account reposted a statement from the company on X, declared that so-called console wars are over. And it's the White House account also posted a reply to this statement with a stylized image of President Trump. Wish I could show you all what it looks like, but it's really interesting here. And we are seeing shares rallying on the news. Shares of GameStop down still 25% so far this year.
All right, and you're also looking at Lululemon.
Lululemon, ticker LULU. We're seeing shares also in the green like the other two stocks we've been talking about, up as much as 4.9%. And this is after a deal between Lululemon and the NFL, a first-time apparel deal here. We are seeing Lululemon really just trying to branch out into the sports space. I know Lululemon for leggings, but apparently they're doing a collab here with NFL, and that'll be kind of a competitive sports push, especially kind of pulling away or diversifying from its yoga roots.
And they're hitting all 32 NFL teams. How much demand do you think there is for green Jets leggings?
Oh, I don't know. Amongst the faithful, maybe. I don't know. Die hard. I don't know. We'll see about that. All right. Very good, Norma Linda. We appreciate that. Norma Linda giving us that update there. She's from Bloomberg News. Actually, I take that back. Markets correspondent for Bloomberg Television. I got to get this right.
She got promoted.
She did. Absolutely, folks. So check her out on Bloomberg Television. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. President Trump, he is in Asia, winding his way through that part of the world. Also winding her way through that part of the world is Tyler Kendall, Bloomberg Television Washington correspondent. She's in Tokyo, Japan today, as is President Trump. Tyler, thanks so much for joining us here. A lot of us are focused really on China and the meeting between President Xi and Trump Thursday. But talk to us about Japan. What's the agenda for Japan?
Yeah. Hey, Paul. So on his first night here in Tokyo, President Trump has already met with the Emperor of Japan. It's now midnight here overnight, so he is resting at the moment. But tomorrow morning, he's going to hold an extended bilat with the new Prime Minister of Japan, who really has only had a few days in office to prepare for this visit from President Trump. I would pay close attention to whether or not we get any sort of announcement around Japan's commitment to boost its defense spending as part of its GDP. We saw the Prime Minister announce an expedited timeline for getting that number to 2% of GDP, something that's broadly been applauded by the Trump administration, but perhaps we'll see some sort of movement when it comes to commitments to purchase U.S. defense supplies. President Trump tomorrow night will then hold a reception with business leaders. We're still waiting on confirmation on who exactly will be in that room. President Trump himself declined to answer when asked directly on Air Force One, but we might be getting some sort of investment pledges or announcements surrounding this because, as you'll recall, recall, Japan had pledged this $550 billion investment fund as part of its bid to get that more preferential 15% tariff rate. So maybe we'll get something there. And I have to say, Paul, every local newspaper here in Japan led yesterday's morning's front cover ahead of President Trump's visit, touting this expected deal cooperation agreement between the U.S. and Japan when it comes to shipbuilding. The understanding here is that this is going to be part of that investment component from that pledged investment fund. And of course, it's one of those key areas that the Trump administration is trying to shore up its own standing in when it comes to the supply chain in a bid to compete with China, which really dominates shipbuilding on the global market.
All right, thank you for that summary. So quite a bit to do in Japan for the president. And of course, we look ahead to Thursday, where he will be meeting with Chinese President Xi Jinping, where we have outlines of a deal, ready. And it sounds like the two sides have made progress on a lot of issues, but they're not the big issues, the ones that the president is really focused on, like rebalancing trade or national security or tech competition.
Right, exactly. Really, the contours that we're starting to see emerge have to do with scaling back the escalations that have recently happened. It seems that both sides are trying to tee up some key diplomatic wins for President Trump and Chinese President Xi Jinping to finalize when they come face to face on Thursday. But broadly, the feeling is that this is really just a simmering of tensions to keep those negotiations open down the line. We are likely expecting that we're going to see that tariff truce that's currently in place extended. It is set to expire on November 10th. And then we glean some additional details, including that threat of an additional 100% tariff from the U.S. is now effectively off the table, according to the Treasury Secretary, seemingly in response to Beijing delaying and reviewing its recently unveiled export curbs related to critical and rare earth minerals. The Treasury Secretary also says that China will resume its purchases of U.S. soybeans, that we have yet to get details clarifying just by how much and how quickly that's going to happen. I'll point out that some analysts have cautioned that that relief for farmers could be delayed because China really front-loaded its purchases of soybeans this harvest season, and they're expected to be good with supplies through at least the end of the year. So a lot of different threads we're watching for here, but Scarlett, you're exactly right. It really hasn't yet tackled some of those broader issues that will come with a potential trade deal down the line.
All right, Tyler, thank you so much. Really appreciate it. Tyler Kendall, she is Bloomberg Television's Washington correspondent. She is in Tokyo, Japan today, accompanying the president on his visit throughout Asia this week. And again, probably the culminating event will be later this week, Thursday, when Presidents Trump and Xi are scheduled to meet on the sideline of a summit there, a conference there. So we'll have to see what comes of that on the economic front. Let's turn our attention to Michael McKee, international economics and policy correspondent for Bloomberg News. He joins us here in our Bloomberg Interactive Broker studio. Mike, it looks like Secretary Bessent has, I guess, come up with a list of finalists for, I guess, the Fed. Talk to us about kind of where we are with Mr. Bessent and naming additional members.
Well, he has confirmed a list that's been circulating for some time, so it doesn't really move us forward a whole lot. The Kevins, Hassett and Warsh, and Chris Waller from the Fed, Rick Reeder from BlackRock, and Mickey Bowman from the Fed. Where are we? Well, he says he's going to conduct another round of interviews. Most of those people he would probably know fairly well anyway, so I don't know how deep the interviews are going to go or what they're particularly looking for. And he did say prior to this trip that it would not happen until November because of the travel that he and the president are taking. And then he'll give his top, he says several, so his top maybe two candidates to the president after Thanksgiving. The president said on his flight over that he should be able to make a decision in December.
So when you look at this lineup of potential Fed chairs, would the market have an issue with any of them?
Not a real issue, no. I think that they would get different receptions. Kevin Hassett would be seen as very pliant, very willing to do the president's bidding. And so there might be a somewhat negative reaction to him. Kevin Warsh has some extreme ideas about how he would run the Fed, which I don't know how the market would take it, but it would be very interesting. They're not ridiculous, but they would be changes in the way the Fed operates. And the others are all pretty much conventional candidates. So I don't think that there's a huge amount of space between them or the markets.
Is it, if I'm going to put on my cynical investment banker hat, isn't this a scenario where the president is just going to say, I want the person who's going to lower rates the most and the most quickly?
You would think that from what the president has said, and it may be what he will decide on. We just don't know, because you never know with Donald Trump. But the interesting thing is, when he chose Jay Powell to be a Fed chair and dumped Janet Yellen, it was because Powell looked like a Fed chair and Yellen was too short, according to the president.
Oh boy!
So it's really hard to come up with the criteria that he's.
That's why I like mine. I think mine's going to rule the day.
Which is yours?
Just give me whatever person's going to lower rates the most and the quickest.
Oh, okay. Your criteria.
Yeah,
I see.
that's what I think the criteria will be.
So here's the other question. When it comes to Fed chair, Jay Powell sits on the board of the Fed. So if he is replaced as Fed chair, he's not going anywhere. He's still on the board, right?
If he wants to stay, he can stay until 2028. His term is up in 2028.
Do we know if that's what he's leaning towards?
We don't know. We do know that he has refused to say. Most Fed chairs, when they're leaving, unless you're like Alan Greenspan, who ran out of runway, his term was over. But the rest of them have said that they are going to leave when their term is up, even if they have time remaining as a governor. And Powell has not, and it's widely believed that it's because it feels it gives him some leverage with the administration. They want him gone, but if he left, they could appoint somebody who, again, might be more congenial to the president's views on interest rates. But he's holding that out there for now, and he doesn't have to decide until 2028. I mean, he could stay on for a month and then decide to leave or something like that. So this is all to play out.
So the Fed is meeting on Tuesday and Wednesday, correct?
Correct.
And we'll have the 2 o'clock policy statement, 2:30
Yep.
press conference. You will be there on Wednesday.
I will be there.
Now, I'm going to revisit this issue. It's worth revisiting. Last time down, you had a challenging travel via the airlines, right?
Aha, yes.
Okay. Lisa Mateo and I, we are huge proponents of the Acela train. We just went down to Washington. Would you consider taking the Acela as opposed to flying this time?
You know, it's funny because I'm in here instead of doing what I was going to do at this time otherwise, and I'll do when I get out. I was going to call the travel department and have them book me a train, especially coming back. And I can see on Wednesday what the air traffic control is like and what the weather is like and stuff like that, because
now, I know you've taken the Acela in the past.
I have
you're
taken
in Washington
I took
like
the
once
new
a week.
One. I even got the new one.
Yeah.
Yeah.
I'm
And,
telling you. All right. I'm just saying.
It's about like the new one. But
Paul's going to get his way one of these days.
One of these days. No, it's just that it takes longer to take the train. So,
But I think
if
door to
have a
door,
chance-
it's no longer, and it's much less risk, much less anxiety.
True. The FAA is doing its best to try to scare me. They're coming out and saying, we're going to have all these delays out there.
Yep.
So.
And you have uninterrupted Wi-Fi, right?
Yeah, the Wi-Fi is terrible.
That
the
depends.
Wi-Fi is
Oh, the
terrible.
Wi-Fi is terrible?
Yeah,
Well,
and it's
actually,
been terrible since the beginning
It was pretty good
of
on the new one.
Okay.
On the new Acela. But,
All right, that's a knock against Paul's.
Oh, yeah. Amtrak has always
preference.
had terrible Wi-Fi.
Oh.
Yeah.
But then the Delta and the American shuttles don't have great Wi-Fi.
All right, so I think we're making some progress here.
The gods have spoken. They don't want you to work during your trip to Washington.
Yeah, exactly. Get a cocktail.
I thought you were saying I could retire.
All right, Michael McKee, thank you so much. We appreciate that. We're going to have more coming up. This is Bloomberg Intelligence.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, and we're being brought to you by Oracle. Attention, growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Risk on day for investors as they push the major stock averages to records. There's new trade optimism between the United States and China. And also, we brought you the news earlier that Mexico says its trade deadline with the U.S. was just extended. Wednesday and Thursday, 5 firms that account for a quarter of the S&P 500, they report their earnings. Microsoft, Alphabet, Meta Platforms, Amazon.com, and Apple all open their books to investors. And of course, Wednesday, widely expected that the Federal Reserve is going to cut its benchmark interest rate by another quarter of a point. S&P 500 is 60 points higher. That's a record, up about 0.9%, 68.51 on the index. The Dow Jones Industrial Average up 204 points. The NASDAQ 100 right now up 375 points. That is up 0.5%. I'll leave off where I'll pick up where Scarlett left off. What was it, the 10-year yield?
That's the one.
Up 2 basis points, 4.02%. Cut off there, sorry about that. 2-year yield up just about 3 basis points. That is at 350. Brent crude, the international benchmark, 0.4% higher, 66.20. Gold under 4,000 an ounce, down 3.3%, 3,997.50 an ounce. And then let me wrap up with Qualcomm. Those shares now just about 13%. The biggest stock rally since 2019. They've unveiled chips and computers for the AI data center market. So they're trying to challenge NVIDIA in that space. And we check the markets for you all day long right here in Bloomberg Radio. That's your Bloomberg Business Flash. Scarlett and Paul.
Thank you, JT, and thank you for the 10-year yield. We were missing that one.
Are you going to eat those or what?
I am. I need to get a fork, though. The spoon doesn't work. No. Or chopsticks. I need chopsticks. We're talking about pork fried dumplings that are sitting here waiting for us to eat them.
Big day at Bloomberg.
That's the big highlight of the day here.
Yes.
The food.
The day is young. There could be more highlights to come. All right, let's talk about the bond market, especially in light of the fact that we have a government shutdown. We haven't gotten data really for all of October, with the exception of last week's CPI report for the month of September. And now we have an FOMC meeting just ahead of us on Wednesday. It begins Tuesday, but the decision comes out on Wednesday. So let's bring in RJ Gallo. He's Senior Portfolio Manager of Fixed Income at Federated Hermes. RJ, has the lack of government data and the shutdown had an impact on yields, do you think?
Yeah, I think it has. If you look on a month-to-date basis across the curve and you look at the weighted average yield on the Bloomberg U.S. Treasury Index, it's down 14 basis points in October. I can tell you, in my role here as the Deputy Chief Investment Officer of Fixed Income and a portfolio manager as well, there's been plenty of talk across our different groups, across investment-grade corporates, treasuries, high yield, munis, you name it, about how much the government shutdown affects the goings-on in our market. From a day-to-day standpoint, trading, settlement, it doesn't. Things are working, Fedwire is working, securities are settling. But I think in the background, we know that it does affect the economy. Interruptions in payments, slow walking payments, halting payments altogether in terms of government contractors not being paid, in terms of government employees not being paid, or at least some of them. Eventually, that hits consumption. It should hit consumer behavior and households that are affected by those changes. And we believe that that is a headwind to economic growth. History suggests yields go down in a prolonged government shutdown. That is what we have seen. Going forward, we're a little bit more of the mind that the risk to Treasury yields now is probably a little bit more symmetric after the mild yield decline we've seen, but the government shutdown remains a factor to consider, of course.
So we are going to get the Fed, they're working, I guess. So we're going to get to hear from the Fed on Wednesday. What do you think? What do you think they're going to do? What do you think the commentary and maybe the direction they're going to give? What do you think we're going to hear there?
I mean, the market is universally expecting a 25 basis point easing. I think the easiest way to explain it is it may seem troubling that a data-dependent Fed is willing to ease monetary policy, lower target rates in what has been almost a desert for data. You know, the government-related economic data has just not been forthcoming. Of course, the Federal Reserve has some data, and the Fed is separately funded from interest on its massive portfolio, so they're not relying upon government appropriations. But the BLS, the Bureau of Economic Analysis, other sources of economic data at the government have largely gone quiet and gone silent, except for the CPI data that had to go through because it was mandated as it affects Social Security cost of living adjustments. So you could argue that the Fed, in their data dependency, might actually just go quiet. Say, look, we're not getting a sufficient data flow to have the confidence to alter our policy stance. That's not what they're going to say. I think they're going to say that it's eroded some of their confidence, but I do think that they remain of the mindset that they want to drift their policy rates downward to somewhere into the range of neutral, which is going to easily be somewhere in the mid to low 3% based upon the dots that are out there. And the reason I think they feel comfortable doing that is they think that the economy has downshifted a little bit in its recent growth path, and it's impacted labor markets to the extent that they can tell. So rather than sit on their hands in the data desert, they're going to stay on the course that they most recently set to try to get closer to neutral to support what appears to be a downshifting in the labor market, so that the data desert doesn't end up sending them in the wrong direction. I think the Fed is eager to address inflation over time. They still remain optimistic that the 3% rate of inflation we face is probably headed down, and so they're focusing on the labor market, which they think is still a little weak.
RJ, let me ask you about the credit market. We've seen a higher than normal default rate in private and public markets. I was talking with Greg Peters, the co-CIO of PGIM Fixed Income, and he points out, of course, that this is against a pretty strong macro economy. So that raises a question, what happens when the economy rolls over? Where are the potential cracks in the economy right now?
Well, I think Jamie Dimon used the term cockroaches to address potential problems. The ones we've seen so far tend to be in consumer finance, in the sense of securitized credit related to consumer receivables of some sort or another. That is a concern. We've been talking about it internally. The question is that idiosyncratic? When you start getting a handful of idiosyncratic problems related to a specific sector, you start to wonder if, in fact, that isn't idiosyncratic, and hence Jamie Dimon's comment about cockroaches. When you see one, there's probably others. That doesn't mean it's the beginnings of a crisis, but I do think we've been in a pretty resilient economic expansion. The pricing of credit in terms of spreads has gotten very tight. There's plenty of optimism. A number of folks in our investment grade corporate group think that a lot of it has been yield buyers, people who are buying what look like attractive absolute yields, which has driven those spreads down to very narrow levels. We remain underweight both high yield and investment grade corporates, of the mind that the compensation we're receiving now isn't adequate for what could be a bit of a sort of a late cycle deterioration in credit quality, both in corporate credit as well as in securitized credit. So we're a little cautious, especially in the corporate credit side. Securitized credit, there's a lot of strong reserves in a lot of these structures. We feel better there, but we're very focused in portfolios, say, for example, our shorter duration portfolios that do get involved in securitized credit to a good degree, focusing on which programs we're transacting with and which ones we're not. And we've done a nice job of not being involved in some of the names that have been coming up lately in the news.
All right, RJ, thank you so much. We always appreciate getting a few minutes of your time. RJ Gallo, Deputy CIO, Global Fixed Income Group at Federated Hermes. We had an M&A trade. We had a few M&A trades hit the tape here this morning, one including the regional bank business, maybe a super regional bank to be. Herman Chen, Bloomberg Intelligence Senior Analyst for U.S. regional banks. Huntington Bank shares buying Cadence. Herman, talk to us about this deal. What's going on here?
So Huntington's fresh off of a deal in Texas. They just closed the Veritex deal, which added to basically entered Texas through the Veritex merger, and they're doubling down in Texas, adding Cadence, which is in the Houston market primarily, and also some slower growth Southeast markets like Birmingham, Tupelo. They have some exposure to Arkansas and Missouri, but Texas is really the prize.
Texas is really the prize, and Cadence, I believe, has 2 headquarters, one in Houston and one in Tupelo. So Huntington now has presence in 21 states, and it becomes a super regional.
That's
I love
right.
that term, super regional. What does that mean in terms of regulation and what kind of capital it needs to hold on its balance sheet?
Yeah, so that's a good question. It will clear the 250 billion asset mark, which is a step up in regulation. Really, all that means is there's more regulatory reporting. There's a tougher regulation in regards to liquidity, but overall, it shouldn't mean too much for Huntington, and we are expecting some deregulatory efforts from the Fed later over the next few months. So that should actually work out in Huntington's favor. And I think what we're seeing is that just the regulatory efforts of increasing M&A transactions as a result of the Trump administration being very more open to deal making, and you're seeing that play out not only in this deal but also with Fifth Third buying Comerica and also PNC buying a bank in Denver, First Bank. So more transactions to come.
Wow. What's the upside for Huntington Bank shares here in getting bigger?
Yeah. So they are doubling down in higher growth markets, right? So Huntington is based mostly in the Midwest, upper Midwest, slower growth demographics. They've focused on not only hiring folks in national businesses, but also expanding in areas like the Carolinas. They were doing an organic push in Texas before the Veritex deal. So the management team is being much more aggressive, and they talked about improving their return profile, increasing their return on tangible equity by 200 basis points over the medium term. So the greater scale, the better growth demographics really will fall to the bottom line.
So what I found interesting in this, Herman, is that earlier this year, Cadence bought another bank, Industry Bank Shares.
Right.
Who's a buyer? Who's a seller in this great regional bank M&A thing that we're seeing?
Yeah, I think what you're seeing today is, and I'm just looking at the KRE index and all these Texas-based institutions that are part of that are getting bid up, like banks like Prosperity, First Financial, Origin. We've seen a number of bank deals in Texas, both larger and smaller. Remember, Comerica is a Texas-based bank as well. So these are that seems to be the area of choice for these regionals, and we're seeing that activity really pick up.
Herman Chan, thank you so much. Appreciate it as always. Herman Chan, senior analyst. He covers the U.S. regional banks for Bloomberg Intelligence. Again, busy sector there for M&A.
And it's good to be a Texas bank, apparently.
Yeah.
You are in favor, and people are looking to buy you.
You're in demand because presumably continued higher growth out of the state of Texas. And boy, we've certainly seen company after company after company relocating from all parts of the country to Texas.
Yeah, lower cost of living there in that region, and it's just growing so quickly.
Yep.
You can get brand new housing, jobs galore.
No state tax.
No state income tax.
Yeah, exactly. I appreciate the whatever I pay in the great state of New Jersey. I'm sure about that. We'll have more coming up. This is Bloomberg Good Morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. You can chalk this up to trade optimism, helping push the major stock averages to records at the start of a week. But of course, we get the magnificent 7 cohort of stocks reporting earnings. The risk on move, pushing bond prices down, yields up. Gold right now, that's down over 3%. And back to Qualcomm, that is the best performing stock on the S&P 500 right now. Unveiling chips and computers for the AI data center market. They're trying to challenge NVIDIA. Their new AI 200 lineup is going to start shipping next year. Got those announcements today. Qualcomm shares right now up 12.3%. As the Fed decides interest rate policy this week, David Rosenberg at Rosenberg Research says the inflation picture has cooled pretty significantly.
So I would still say the trend is down when I hear about sticky. The overall trend is still towards disinflation. I think we've got to be amazed that we're still roughly around 3%, even with the tariff impact.
And right now, the S&P 500 again up 66 points, up 1%, 68.57 on the index. The Dow up 264 points, NASDAQ 100 up just about 400 points. That is a 1.6% pop. Again, all the major averages are in record territory right now. Lululemon Athletica, those shares right now 3% higher after entering an arrangement with the NFL and Fanatics to develop a line of fan apparel. I'm still waiting to hear from the Giants game yesterday with the Philadelphia about Cam Scatterbo. The AP says it was a dislocated right ankle. It looked like his foot just completely twisted around.
Yeah.
That was nasty.
Yeah,
but anyway, we check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker. That's your Bloomberg Business Flash. I'm not going to say if I'm a Philadelphia or Giants fan, but I am a Giants fan.
Really? I thought for sure you were an Eagles fan.
No, I really was hoping these 2 rookies would really turn things around. Now one of them's gone.
You got yourself a quarterback, though.
Yeah.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Here's the thing that I don't have a handle on. I'm not sure many people do, but our next guest, he's got an opinion. But AI, my opinion, it's a net job taker.
Yeah.
I think so, but people are trying to spin it that, it's...
All those entry-level positions where you learn how to do the basics in order to be able to move up, AI can take all of that.
My first 3 years as an investment banker it seemingly can be done by AI. That's what it seems like to me. But we'll check in with Peter Werner. He's co-chair of Cooley's. It's a law firm. Cooley's a global emerging companies and venture capital practice group, and vice chairman of Cooley's business development. So he's got a lot of hats he wears at the law firm of Cooley. Peter, thanks so much for joining us. What's your when you talk to your companies, your clients, what are they telling you about AI and its workforce going forward? What are the assumptions here?
Yeah, so I mean, first, and if we want to get back to Cam Scatterbo, I'm happy to weigh in on that as well. But it's such an interesting conundrum. I think about it in 2 ways. One, for us, for our large law firm, for professional services organizations generally, and then for our clients, largely technology-focused clients, small ones disrupting industries and large ones. There's a real combination, and you alluded to it with the investment bankers and the OpenAI's statement recently about trying to train the LLM to simulate the jobs that currently entry-level investment bankers do for hundreds and hundreds of hours a month per banker. Lots of short-term, medium-term optimism, right? Reduction of drudgery. People getting to go home earlier and get more sleep because they don't have to format 100-page presentations or create tables comparing the last version of a 100-page merger agreement with the next version and things like that. That all seem amazing. But then you start to think longer term, what does that mean? What does that mean for, I think Phyllis referenced the junior bankers getting training by virtue of those reps? How are we replacing those reps so that 10 years from now, we know who the senior bankers are going to be. How do we get from here to there? Really interesting and really complicated as it relates to big tech. We got earnings coming up this week for a lot of them. And you've got a ton of companies that we work with that sell into big enterprises that are ready to get acquired by big tech.
Yeah.
Like they are selling into enterprises that don't really know what the futures of their platforms are going to be in terms of how they're going to use labor. So lots of uncertainty there.
Lots of uncertainty. You raised some really good points here. Do you see companies, management starting to address how to answer some of those questions? Like, you know, where are we going to get that senior talent from if they're not going to be in the trenches in the early parts of their career, because the early part of your career just doesn't exist anymore?
Yeah, I can speak most passionately about that from the standpoint of my law firm, which is really a proxy for professional services organizations all over. We are in the middle of trying to figure out, okay, we have we have 100 first-year associates coming to join us on Thursday across the firm. And maybe they'll be fine, but what about the ones that we're courting right now, the first-year lawyers who are coming here in 3 years? If they're not going to get to do 100 venture capital financings a year, form 100 companies a year because robots are doing it, like what we need is, do we just need to have a virtual reality simulation of that, and we don't build them out to clients, but we put them through their paces virtually so that they gain experientially still? Or is there a whole new way of training those people? Of course, there are also, because they're, you know, we as an ecosystem here in California, like people understand that, and so of course there are now startups that are saying, okay, we are going to be your simulation platform to simulate the reps that professional services organizations and other knowledge workers wouldn't otherwise get. So hire us to train your junior people so that in 10 years you can make partners or you can make managing directors.
Are your clients, to what extent are they receptive to integrating AI into their business, to maybe a little bit reticent here? They're just not quite sure.
Well, you've got, I mean, tale of two kinds of companies. You've got these amazing AI native companies disrupting older industries where they are all about it. And they're talking in their board meetings about, you know, the ratio of headcount to revenue and trying to be really focused on efficiency and optimizing technologies, building everything in a labor light way. And then you've got incumbents who are trying to like lift up this big heavy organization and insert a like AI technology layer underneath it, change the way they've all been doing things forever, and start, you know, laying off people, but laying off the right people, retraining other people. That's it. I mean, that's a complicated task across all industries.
So, Peter, what jobs are AI proof? Meaning AI can help you, but it's not going to take your job. Are there any industries? Are there any specific roles?
I mean, I'd love to know the answer to that. My instinct is that the most senior, most experienced people with the highest EQ and the ability to read rooms, think laterally, be strategic and creative, like in the white collar world, those are the last ones to go.
But that's not everyone.
And maybe they never go. Who knows, right? But and then beyond that, I would say there is a correlation between like more manual work, et cetera, and like it's going to take longer to replace those jobs. But you still think about the onshoring of like American manufacturing now, where we have dark factories that we're building in the US that have no humans working in them. So this is not about all blue collar labor or like physical labor is insulated permanently. You guys talked about it just before I got on the air. Like, I'm not sure. I don't know.
Yeah, interesting. All right, this is obviously a long-term play here, and everybody's trying to get smart about it as quickly as they can, and they depend upon folks like Peter Werner to help them out there. Peter Werner, he's a co-chair of Cooley's Global Emerging Companies and Venture Capital Practice Group, and he's a vice chairman of Cooley's business department based out there in San Francisco, right there in the Valley, talking about AI. Goldman tells staff it will cut more jobs as AI saves costs.
And that's the kind of headline that keeps getting generated tied to AI, and it's no wonder everyone thinks that we know where this is all going.
Yep. So I don't know, but that's for some smart people to figure out as they manage their businesses, because technology never stops innovating. S&P 500 up 65 points. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney, we are live here in our Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube. That's the intranet. Head over to youtube.com and search Bloomberg Live Podcast, and that's where you'll find us here. So we do have President Trump. He is in Asia this week, meeting with leaders in that part of the world. Today he's in Tokyo, and later this week he'll be in South Korea at a conference of leaders from that region where he will be meeting with President Xi Jinping of China and trade front and center, including rare earths, including some technologies that are needed for the transition to newer, cleaner energy, and that's where we want to go today. Derek Flackel joins us, lead U.S. policy analyst for BNEF. He's down there in our Washington, D.C. bureau. Hey, Derek, what do you think is going to be on the agenda between President Trump and President Xi as it relates to kind of some of these new energy alternatives that are out there that both countries are racing to develop?
Thanks, Paul. I mean, there's a few different sectors to look at that we've seen from the early readout that came out yesterday. Obviously, there's plenty to be talked about with the rare earth segment, which is critical to permanent magnets. Those are key for both electric vehicle motors and offshore wind. There were also some recent restrictions that the Chinese Ministry of Commerce, or MOFCOM, put on battery technology. That's a key export from China, one where the U.S. is especially dependent, and one that has a lot of implications for, AI data centers that need 5 nines of reliability. I would also point out that the soybean story that we've been hearing farmers talk about is very tied into this. A huge amount of soybean capacity in the U.S. goes into biofuels, and so to the degree that China buys more of that, that has a bit of a different outcome for the U.S. Renewable diesel and related markets.
Talk to us about where maybe the U.S. and China share some goals here, and maybe where we differ.
Great. That's an excellent point. I think the U.S. and China are both looking to sort of maximize their advantage